single digits. We think it's going to be low single digits. It might even be flat this year. So that is still coming, but it's all relative. So what earnings are going to hold up the best this year? That's the work you got to do within the equity market. And to us, tech, even though it has sold off, we think is going to hold up better because, again, the margins, the moats, all that good stuff. And then those defensive sectors of what people need versus what they want. And then, you know who doesn't care about earnings? The bond market. Well, the corporate bond market does. But the high quality stuff, they don't mind if it's weaker growth. And we actually are calling for disinflation this year. We think the biggest miss with basically analyzing these tariffs and everything else going on is the thought that inflation is going to accelerate. We actually think it's going to decelerate over the course of the year. That's going to be beneficial to bonds. Maybe the Fed cuts a little more than expected.
I was just going to say, to underline your expectations, or maybe better put, your hope for the Fed this year, how many cuts do you see, and where does the 10-year end 2025?
So our fair value estimate on the 10-year is about 390, so it's still 30 basis points lower, but that's without a recession. If we're in a recession by the end of the year, we think actually the 10-year could have a 2 handle, and that the Fed's going to be cutting more than the 4 times that it's priced in. We think the 4 times is basically just, hey, inflation is slowing, we're going to kind of do this more methodically, but the bond market has not priced in a recession by any means, even though the equity market kind of is. So there's still a lot of bond returns left. The Fed hasn't given you the green light yet on the bond market. They're saying red light, hey, we're not done here yet. We're still concerned with inflation, but that could leave them behind the curve if the wealth effect does diminish here, if the economy does slow more than expected. And that's good. Bonds and stocks are not acting the same. The correlations are dropping, which is great for multi-asset investors like ourselves.
Let's finish on that point, because if we do end up in a scenario where 10-year yields are trading with a 2 handle, what is the equity market doing? Because that sounds like a recession to me.
Yeah, it's still likely lower from here. So we're in, if you basically look at drawdowns, if it's a non-recession drawdown, expect kind of mid 20% type drawdown. We're already at, what, 17? We're most of the way there for non-recession. In recession, it's more like 37%. So we've got more. So for us right now, you're getting a lot of price discounts in a non-recession environment, but it isn't pricing in a recession. We are still leaning into bonds relative to stocks, getting some nice income while we wait, mitigating the volatility, and looking for some equity opportunities here as they sell off.
All right, Matt, it's always great to speak with you. Nice to get a good chunk of time with you this morning. That is Manulife, John Hancock's Matt Miskin. Let's look under the hood because we have plenty of movers on our radar. I want to start with Levi Strauss, up 5%. Shares were up as much as 16% at the open. That would have been its most intraday in a year. That's after they reported earnings and seemingly shrugged off the impact from tariffs. Specifically, they said that tariffs will have a minimal impact on their margins in the current quarter. The CEO also said that the company would raise prices surgically, but you can see, Shonali, some of those gains coming back right now.
I've got another tariff story for you. I'm watching Micron because it's rising after a report that it is imposing a surcharge on some products sold in the U.S. to compensate for Trump's tariffs. You're seeing the stock up almost 5%, not the biggest gainer in the Philadelphia Semiconductor Index, but close to it. And you are seeing others, like Bloomberg Intelligence, react that this could dent demand, but clearly this tariff reaction, the early tariff reaction, is not hurting the rebound, at least on the onset. Now we're going to get a look at some other stocks on the move this morning. We are going to bring in Bloomberg's Sunita Sekova for that.
Yeah, we've been talking about deep buying. We've been talking about deals. Goldman Sachs just upgraded Eli Lilly. They saw a compelling entry point. The stock is up about 4% at the open. Of course, it had a very rough day on Monday. The stock fell after the Trump administration spiked a plan to pay for obesity drugs for Medicare patients. We're seeing a lot of optimism for the stock more broadly. We have 29 buy ratings according to Bloomberg. The stock dropped 13% over the big sell-off in the last 3 days, but clearly the buyers are stepping in. There is some good news and upgrades from Goldman Sachs. One interesting stat is they see the value tripling from 28 to 95 billion by 2030. So a lot of optimism for Eli Lilly from Goldman for sure.
All right, thanks very much for joining us, Denitsa Sekova there. Coming up, Stellantis offers to help its suppliers shoulder tariff costs. We'll look at autos next because there's a lot more than that going on. This is Open Interest.
what is the issue between the type of information that's being collected by investors and the marking issue that you're describing?
But what mark-to-market assets do is it forces honesty into the situation. We're talking right after the DeepSeek model surprised everybody in its efficiency. It took hundreds of billions off of market caps because it legitimately raised concerns that maybe the future of AI was different. I guarantee you that if you look at other portfolios that aren't marked, they didn't move. If private assets are going to eat the world, as they say, with the equity market halving in the number of names, you come to a world that is increasingly an echo chamber. Imagine you have a firm that has some public assets and some private assets. If you see your public assets in AI going down by 20%, you're going to be thinking very, very deeply about what your private assets are worth differently than someone who just has the latter.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
Welcome back to Open Interest. A quick check on stocks. You have green across the board. Not quite session highs, but pretty close. NVIDIA shares up nearly 6% right now. That's why you see the NASDAQ 100 out in charge. We'll keep an eye on that, but it's time now for our top calls. Some of the analyst action in focus this morning. And first up, Morgan Stanley is upgrading Charles Schwab in its hunt for more defensive exposures. The firm is also upgrading CME and cutting Robinhood. Next up, education technology company Chegg getting downgraded to a sell over at JP Morgan. The firm says that economic weakness will drive students to prioritize making money at secondary jobs ahead of education, which is pretty grim. And finally, GM getting downgraded to a sell over at Bernstein because of the tariff impact. The analyst says that the outlook for GM is, quote, clearly unfavorable. Matt Miller.
Well, let's stay on cars. The maker of Jeeps, Stellantis, is offering to help suppliers shoulder the cost of tariffs. The automaker has outlined a program which its suppliers can apply for as the initial shock of levies on autos and the coming duties on parts rock the industry. For more, we're joined by Bloomberg's Detroit bureau chief, David Welch. And David, so much going on with Stellantis. Their production in Italy has absolutely tanked to levels we haven't seen since the 1950s. And it looks like they're shopping Maserati and Alfa Romeo. At least they've tapped a consultant to look at those units. So what do we know?
Well, look, the company's had a lot of problems. Its cash cow is really the U.S. business, and that business has stumbled. The European business, for any company, but especially Stellantis, is pretty tough. The margins have always been pretty poor. And they've got some of they're strongest in some of the weaker markets with their mainstream brands. So it's not a surprise that they want to shop these luxury brands in the same way that Ferrari was IPO'd a long time with. You know, they're not going to get that kind of money like they did with Ferrari, but if they shop some of these brands, they'll get some cash flow, and it'll also help the company focus. I mean, if you look at Stellantis, it has a bigger family of brands right now than pre-bankruptcy General Motors did when GM was trying to manage stuff like Saab and the old Hummer brand and Pontiac and all this other stuff. It's just a huge burden to do design, product development, marketing for this big house that they've got. So if they can get a little bit of cash and narrow their focus, probably a good thing for them if they can make it happen.
David, did they keep Chrysler and Dodge? Because yes, those are two brands that they own, but they don't really make any products anymore.
Yeah, you do have minivans, which is still a decent business for them. Maybe the sports sedans, but do you need two whole brands to do that? That's really tough to see. I mean, what they could do with some of these vehicles that they need is just kind of like they did with Ram. It used to be the Dodge Ram, now it's just a Ram. They could still sell it at the same dealerships that sell Jeeps and everything else. And by the way, most of their brands in the U.S. are all under one dealer roof if you go to shop them. So they could have a minivan, and if they wanted to keep one of those rear drive sedans for fleet business and for sports cars, they could just brand it without an overarching brand and then have them sold at the same dealerships where you're buying the rest of their line.
David, I've looked at some of the things that have happened since, for example, Porsche spun off. Didn't go that well. I mean, Matt makes a point that it worked for Volkswagen. So you have mixed success in spinning off brands. But in my mind, I guess I'm skeptical because the reason they all came together in the first place was to share the benefits of scale. So are those benefits deeply lost if you see some sort of separating, siphoning, and pushing things away from each other in terms of supply chain?
One of the issues, though, with these sports car brands and some luxury brands is that they don't share enough with the mainstream companies' brands. General Motors makes it work with Cadillac because it's they have two sedans, but it's largely SUVs, and so they're sharing a lot of SUV parts. When you're talking about sports cars, in luxury sedans, it's a different animal than most of the volume that mainstream brands are getting, which is all in small, medium-sized crossover SUVs. So, are they sharing enough to make that work? I don't know if they're getting enough out of the parts bin for them, and maybe a company like Volkswagen actually would be better because they've got a bunch of luxury brands that have a lot of hardware that could be usable by these brands. I'm not saying Volkswagen's interested in this. I'm just saying they're the kind of company that just made sense because they've already got luxury in their line.
All right, David, great to speak with you as always. That is Bloomberg's David Welch. And we also want to take a look at coal stocks right now, moving higher after our press secretary Carolyn Levitt tweeted or posted that today at 3 p.m., President Trump will sign an executive order to reinvigorate, quote, affordable, reliable, and clean coal. Peabody leading the charge right here, up about 10%, was higher by as much as 18% in the minutes after those headlines dropped. Core Natural Resources and Warrior Met Coal also moving higher on the day. Now, coming up, investors are bracing for sour corporate earnings as the impact of tariffs looms over Wall Street. We'll take a look next. This is Open Interest.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what's going on in stocks. We're looking at a big rebound. You're going to hear the phrase turnaround Tuesday a lot, like you do every time there's green on the screen Tuesday and Monday was red. But here it's really serious. 3% on the S&P 500, and we were only down, what, 0.3% yesterday? The NASDAQ 100 up 3% as well, as tech stocks really lead the way. Even small caps are getting some love today, so some people really willing to place some bets. In terms of the individual stocks, Nvidia is huge, a gain of almost 7%, and a $2 trillion stock. That means a lot. Tesla up 3.7%. This is a fascinating story that we're going to dig into because Elon Musk has said he thinks tariffs should be zero, at least between the U.S. and Europe, and that seems to go against really the morals of his best friend in the White House. Apple up almost 3% after a 19% decline in 2 days. We gave you the coal story just a moment ago, and then Walgreens Boots Alliance up only 1%, but after earnings kicking off that season.
Speaking of earnings, Wall Street is bracing as more corporate earnings roll out starting later this week. Now, investors are worried about the impact of tariffs on operating margins and earnings outlooks. Here with more, Bill Donahadrick of Bloomberg News. And you're looking at, for example, BI Analysis saying that the EPS growth in this first quarter is looking pretty low. It's looking at rising at the slowest pace since the third quarter of 2023. How are investors reacting to these new expectations?
I think the key here is the word uncertainty, obviously, because a lot of companies that are trying to look ahead over the next year, how do they make decisions in this environment? And hence you have analysts cutting down first quarter estimates for what they're expecting for S&P 500 earnings. But we also have a model from Bloomberg Intelligence saying that even with the ratcheting down that we've seen thus far, the estimates suggest that maybe they're a little bit too optimistic at this point and that we could see further downgrades as companies start coming out with.
And we just heard that from Matt Miskin, actually, that analysts are still too optimistic when it comes to what this earnings season holds. And it feels similar to the jobs report in that it's not necessarily about the numbers we get because they're kind of stale in the context of, okay, the world has changed and theoretically will change when we implement tariffs tomorrow. How do companies even model what's going to happen? Are we expecting to see companies just pull guidance altogether?
That's a really good question, and it's a big possibility. And it really makes me think back to the early COVID months when a lot of companies, they were so uncertain about what the future was going to be holding. They weren't sure about supply chains and consumer confidence and all of these different things that they have to input in terms of looking ahead into the future. And so we have Dan Ives, for example, arguably the best known tech analyst, saying in a note earlier this week that with the current situation, he does not expect tech companies, most tech companies, to be giving any guidance on their first quarter calls. So obviously we'll wait and see what happens. We're going to hear from companies pretty soon, but that's a stark reminder of the environment that everybody's dealing with.
Doesn't help to leave people in dark. Lori Calvasina yesterday was furious that these companies aren't doing more to guide investors. And what we didn't get yesterday, guys, from Jamie Dimon was his weather forecast. We don't actually know how bad he sees things coming.
Yeah, although we have heard, even in the last quarter's calls, we heard some CEOs speaking out against tariffs. You're starting to see a little bit more of that in corporate America. The Restoration Hardware call was hilarious, right?
It's instant classic.
Yes. So do you expect some of these CEOs to really come out hard against tariffs?
Like you said, more are coming out. I think it's notable that somebody like Bill Ackman came out over the weekend saying something like, this could be like a nuclear winter when it comes to the outlook, when it comes to the economy.
That's a weather forecast.
That's a really dire weather forecast. But those are really stark words, and that's somebody who had backed the administration, backed the president all along on a number of different policies. And so just to hear more people coming out and talking about what they're feeling and what they're seeing, what they're expecting, it's possible we start to see more and more as this drags on.
Well, just in the last minute we have with you, take us into how investors are positioning amid all this uncertainty. When you take a look at ETF flows, for example, I know that there's been a lot of two-way traffic.
So much two-way traffic, yes. It's a little bit difficult to actually look at the overall picture at this point because there is quite substantial dip buying happening with certain products. So for instance, a levered NASDAQ 100 ETF saw a huge inflow yesterday, which obviously it can look great in the short term when you get a bounce, but overall, I think there is still a bit of a sense of we have to wait and see what further information we get. Obviously, we're getting headlines about different phone calls that the administration is holding with different countries around the world, investors reacting to those types of things, but it's still a bit too early to form an overall picture.
Right, you mentioned that big flow. TQQQ, which is 3 times levered, the NASDAQ 100 took in $1.5 billion yesterday, currently up about 11%, Matt Miller.
All right, we're looking at stocks really jumping up here now, 3.5%, the gains on the S&P 500 as we get just about a half hour into the session. Coming up the next hour, Karen Pay of Franklin Templeton joins us. Plus, we get to hear from Snap-on's Nick Pinchuk, as well as Leland Miller of the China Beige Book. This is Open Interest.
Is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure, it's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
CBS News on the Hour, sponsored by Progressive Insurance.
I'm Deborah Rodriguez, and markets are rebounding. The Dow, NASDAQ, and S&P are all up about 3% or better in early trading as China vows to fight President Trump's new tariff threats to the end. Mr. Trump says he'll impose additional 50% tariffs if Beijing doesn't drop retaliatory taxes. Kristen Myers at the financial website ETF.com.
The reality is that we do have a trade deficit with China, which means that we essentially import more from China than we do export. So China's tariffs on us are not going to harm us as much as our tariffs on them, at least when it comes to the American consumer.
Small business owners in the U.S. say they may lose their livelihoods if the president doesn't change course on tariffs. CBS's Jolene Kent spoke to the owner of a candle store in L.A.
Kristen Pumphrey started her business in the aftermath of the 2008 financial crisis. It survived the pandemic, persistent inflation, and high interest rates. But a trade war feels different.
How will President Trump's tariffs impact your business? We're calculating essentially what change that's going to have on some of our raw materials. Our costs are definitely going to go up. It's a challenge for sure.
The Supreme Court says the Trump administration can resume deporting alleged Venezuelan gang members if they're given hearings first. Chief Justice John Roberts has paused a midnight deadline for returning a Maryland man to the U.S. who was sent to prison in El Salvador by mistake. Attorney General Pam Bondi.
First of all, it was an administrative error as to why he was deported. And he is a known gang member. ICE testified he was a gang member. And we believe he should stay where he is.
Officials in the Dominican Republic say at least 18 people died when the roof collapsed at a nightclub in Santo Domingo. A local governor is among the victims. Merengue singer Ruby Perez, who was performing, is among the more than 120 injured. Crews are searching the rubble for possible survivors. 24 deaths, including 5 in Kentucky, now blamed on violent weather in the South and Midwest that's triggered devastating flooding. James Cornish helped his father get out of his home in Frankfort, Kentucky, when the water rose half a foot in half an hour.
I came down here and told him, I was like, we got to go. Can't wait anymore.
There are brand new protections for kids on social media. Here's CBS's Michael Wallace.
Beginning today, the default Instagram settings for children under 16 block them from live streaming or looking at nudity in direct messages. Only their parents can turn off those restrictions. Meta is also adding its existing Instagram restrictions to teen accounts on Facebook and Messenger.
The Dow's up 1,282, S&P ahead 172. This is CBS News. One of the stars is talking about Florida's men's college basketball title.
1 second, and it's over! Will Richard led the Gators with 18 points and 8 rebounds on CBS and was a key part of the furious second-half comeback.
I think it just goes back to the trust we have in each other. I feel like we're a connected group, and I feel like as long as there's time left on the clock, we can give ourselves a good chance to win. So just trusting in each other and trying to make those plays to win the game.
Richard tells CBS Mornings the championship win over Houston will now point him toward the NBA draft.
For sure, having a good career in the NBA, I feel like that's the next step for me. But this is definitely one that I'll celebrate for a few weeks leading up to working for the draft.
Steve Kathan, CBS News.
Word in from Paris.
Smart people on every side are close to panicking.
The latest and last installment of Mission Impossible with Tom Cruise will premiere at the Cannes Film Festival next month. Deborah Rodriguez, CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Good Tuesday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are also streaming on YouTube, so head over to youtube.com and search Bloomberg Podcast Live. That's where you'll find us. Green day on the market here today. The S&P is up about almost 3.9%. We'll get the breakdown coming up with John Tucker and Bailey Lipschultz. Sean Donnan, Bloomberg News senior economics writer. He's got the big take story today talking about the U.S. and China and trade. We'll break that down. Ira Jersey, Bloomberg Intelligence chief U.S. interest rate strategist. What is this Federal Reserve going to do for the remainder of 2025? Chris Watling, CEO and chief market strategist at Longview Economics, will give us his view of the market. And then we're going to check in, like we like to do, with Henrietta Trez, managing partner at Veda Partners, to get her thoughts on what's coming out of Washington, D.C. these days. So we've got a lot to chew on this hour. Let's kick it all off with John Tucker and a Bloomberg Business Flash.
And it is a risk-on session. S&P 500, 193 points higher right now. That is up 3.8%, 52 on the index. The Dow Jones Industrial Average up 1,377 points. NASDAQ 100 up 721 points. That is a pop of 4.1%. And, of course, the S&P 500 pushing away from the bear market territory this morning. Treasury Secretary Scott Bessent said there's potential for advantageous deals with major trading partners, so that is giving the risk assets one of the reasons to rally today. As you look at the S&P 500, 476 stocks are higher, 23 are lower, and all 30 stocks in the Dow Jones Industrial Average, they are up right now. The leaders in terms of index points in the S&P 500, you have NVIDIA Corporation up 7.6%, Apple up 4.2%, Microsoft, that is up right now 4%. And after the wildest day for bond traders since the height of the pandemic in March 2020, some more selling today. Again, the Treasury market could be more of a reflection of the risk-on sentiment, but you have the two-year yield. As the two-year pushes higher in price, that's pushing the yield down 7 basis points right now to 382. The 10-year yield is down 5 basis points to 423. Oil getting a bid today. NYMEX crude, American crude, up about 1%. Still just 61.32 a barrel. This feels like a People article. President Trump's trade advisor, Peter Navarro, facing a verbal barrage from President Trump's Doge advisor, Elon Musk. On social media this morning, the Tesla CEO calls Navarro, quote, truly a moron, end quote. Navarro went on Fox News and said Musk is a car assembler who wants to keep his manufacturing costs down. Of course, Musk has been appealing to the president, going over Navarro's head to reverse the tariffs. So there you go. We check the markets and the gossip all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Hi, Alex and Paul.
Hey, guys. Nice to see you, even though you've both been on radio for the last 12,000 hours. But yeah, that Navarro Musk story is amazing. We'll see what now comes next. I feel like it's on Navarro now. All right, let's take a look at some stocks that are also on the move. We're joined now by Bloomberg's Bailey Lipschultz, Bloomberg News senior equities reporter. All right, what are you watching today?
Yeah. All eyes are on the market, but the biggest driver in the S&P 500, NVIDIA, up almost 8% right now, on pace for its best two-day gain since May. Keeping in mind, it's still down 22% year to date. So investors going back into Mag 7 stocks. Colleague Bernard Goiter had a really interesting story out about how the lack of liquidity can drive some of these big rallies for large cap stocks as well as indexes. So while the S&P 500 is up 3.8%, NVIDIA is up about 8%. Keeping an eye on the validity and how long these stocks can stay higher, just given we are still in Donald Trump's world for all intents and purposes.
And you have to argue, too, that it was just so oversold, right? Like, valuations come down so much.
Yep. And we've seen people point to the fact that, as you mentioned, we're on a brutal 3-day stretch. And it's kind of, we saw yesterday with the head fake, the fake headline, if you will, about potentially walking back. So I talked to some people this morning saying, if that's what we get from a potential pause, only imagine what this means if Trump did fully pivot on it, but still obviously remains to be seen.
Palantir, PLTR, also another name that I associate with kind of AI and that momentum trade.
Yeah, momentum trade. And again, keeping an eye on that, stock's up more than 9%. Again, this is a company that when you look at it on the last 12 months, guys, still up 270%.
Yeah.
So pulling back from its peak back in mid-February, but the company is still very much part of that risk-on trade. Obviously, when you are really a part of not only some of those retail trader chats favorites of individual investors, but you also get the bid from being a component of the NASDAQ 100, S&P 500. So we do see investors plowing and continuing to plow into those benchmark tracking ETFs.
Right. It's going to be a time, though, I think, until we actually get some fundamentals moving. All right, last up, what are you looking at?
Keeping an eye on insurers, looking at Humana, the best performer in the S&P 500. Stock is up more than 12%. Really? Also rallying our other managed care names. This comes after the Centers for Medicare and Medicaid Services published a 5.06% advantage capitation rate increase, which is better than the expectations for 2.23%. So analysts really applauding that will actually impact the companies on a fundamental basis. So fundamental news, Alex, and that some of that regulatory pressure that we've been seeing from the administration pushing back on insurers, maybe easing, if not getting a little bit better, though investors still keep an eye on how the Republicans' budget reconciliation process plays out and what actually ends up happening with Medicare and Medicaid cuts, potentially that can offset some of those tax increases.
But interesting to see sort of when you get the flip side and something positive out of the administration, how quickly stocks can react to the upside. So like it doesn't take a lot to move that positive needle.
Yeah. We'll take it.
All right, Bailey, thanks a lot. Really appreciate Bailey Lipschultz, Bloomberg News senior equities reporter. For more like conversation just like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere that you get your podcasts. The question that I still have, Paul, is what is the off-ramp for tariffs at this point? Is it like a complete rollback of tariffs from other countries? Like, does Vietnam have to take back that 5% tariff that it has on U.S., and does that solve it? Or is it just having the conversation? Is that the off-ramp?
I don't know. We'll see. I mean, we're starting that. Apparently, there are 50 countries lined up to
70 now.
70.
Did not see the headline? We're on to 70
and
now.
I think that's the metric that the administration is using for success is the number of countries lining up to speak and negotiate, presumably with the United States. And that is greeted very well by the marketplace.
The one that is not, though, is China, vowing to fight to the end on tariffs as it props up its own market. The Chinese Ministry of Commerce is saying that the U.S. insists on its own way. The country is going to fight till the end. They've taken measures to reassure investors, like loosening the grip on the yuan to boost exports, also promising some loans to stabilize the market. We're joined now by Sean Donham, Bloomberg News senior economics. I can read. Economics writer. There we go. Joining us on our big take story. It's a deep dive into this issue. Fight to the end. What does that mean?
It means that we're setting up for the world's two largest economies getting into a pretty intense trade war. And that's going to be damaging for the global economy. And that's kind of what we look at in our big take today. I mean, we have seen just it's really hard just to stress how historic what Donald Trump did last week was. He raised tariffs in a way that we haven't seen an American president do in a century. He did it alone without Congress, which is something we haven't seen a president do beforehand. But for the global economy, he's really kind of introduced what we're now calling the Trump shock, right? We had the Nixon shock in the early 1970s. Here's the Trump shock. And that is coming up against something that countries have been dealing with for a few decades now, including the United States, and that's the China shock, which sucked up a lot of manufacturing capacity from the United States and other countries and led to the loss of manufacturing jobs and you can argue the rise of Donald Trump and his political power and his economic agenda. This is momentous for the global economy. This is a kind of complete realignment. And for Donald Trump, that's the point.
So, I think that the Nike story recently was just a great example of how the world's changed. I mean, you take a look at where Nike makes its products. You try to get away from your China reliance, which arguably they did by number one market for them in terms of employees is Vietnam, then Indonesia, and number three is China. Yet Vietnam and Indonesia aren't immune to these tariffs here. So this is a global story, isn't it?
Yeah, absolutely. And you've got to keep in mind also that countries like Vietnam and Indonesia are also getting shocked by China in the form of imports or exports from China of cheap goods that are going into those markets as well and present their own threat there. I mean, we are seeing all of these countries that are kind of stuck in the middle here, and that's going to be one of the big things to watch. I mean, I was just listening to your markets report, and I just keep thinking, we've had these kind of momentous days in the markets in recent days, and that's just the beginning of the story, right? Because really, these tariffs, the reciprocal tariffs, as President Trump calls them, take effect at a minute after midnight tonight, and really the true economic effect of this is only just now going to start rolling through the global economy. And I think that's not going to go away, even if we get talks like the ones that he's talked about. Donald Trump is talking about good deals being possible. What does a good deal mean for him? I suspect it means leaving in a pretty hefty tariff on any imports into the United States.
When it comes to China, but a minute left, what issue with China truly does, though, need to be corrected?
Look, the big issue that economists point to is just simply the imbalance in the global economy. China and its consumers don't buy enough stuff from the rest of the world. The U.S. and its consumers buy too much stuff from the rest of the world. So really what you need to address in China is you need to find a way to get people in China to buy more. And that's kind of what Donald Trump is trying to do here. The question is whether this is the right way to go about it. I mean, if we get a recession here in the United States, then that's going to be historically, recessions have been great ways of kind of closing the trade deficit. Unfortunately, they're incredibly painful. We're going to be buying less stuff here in the United States. If we get a recession, that's going to lead to a kind of closing of these global imbalances potentially. It's not necessarily the way you want to go about it.
Sean, thank you so much. Appreciate it. Sean Donnan, senior economics writer for Bloomberg News, joining us from Washington, D.C. via Zoom. You can read more of this story on the Bloomberg and at Bloomberg.com/big take. Markets higher. S&P up 200 points, 3.9%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash being brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/round the clock. Rally underway. Risk on today. S&P 500 up 4%, 202 points higher, 52.65 at the index. The Dow Jones Industrial Average is up 1,451. The NASDAQ 100 right now up 776 points. That is up 4.5% right now. Investors, among other things, focusing on the possibility of trade negotiations. Health insurance stocks, they're rallying. The Centers for Medicare and Medicaid Services finalizing a 5.06% average increase in payments to Medicare Advantage plans. You have stocks like Humana, that's up just about 13%. Data today, National Federation of Independent Business Optimism Index, this is small businesses, declining 3.3 points to 97.4 in March. 7 of the gauges, 10 components weakened. The optimism declined the most since June 2022 for small businesses. The bond market saw a huge sell-off yesterday. It was, in fact, the biggest daily Treasury sell-off since COVID, maybe raising the specter that somebody had to raise cash quickly. Ira Jersey, we're hoping, can explain that to people like me. 2-year yield up 8 basis points right now, 384. So you see some more selling there. The 10-year yield up 7 basis points right now, 425. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Alex.
Hello. Thank you so much, John Tucker. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies in 130 industries worldwide. They also cover stuff like the bond market. Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist, joins us now. The 2-day move that we've seen in the back end is tremendous. What happened?
Yeah, I think most of this is a liquidity issue. So if you look at dealer balance sheets, they're stuffed with bonds. And, given that the long end has a lot of duration risk and market risk, and you have to hold a lot of capital against those trades, it seemed like there was just, there was some outflows and people trying to sell that long end paper, and the dealer community just couldn't absorb it. We've had this disintermediation where high frequency traders and some non-dealer actors have tried to act more or less like dealers, but they don't step in front of a train like we had yesterday. So I think that's one of the reasons why you had this massive volatility. And look, yes, it was a very big move. In the 30-year, it was the 9th largest daily range, so high to low in terms of the treasuries in the last 25 years. So definitely a big move, but not like unprecedentedly big, right? It wasn't like a thing that we've never seen in our lifetime. But at the same time, like it does bring up the fear and the worry that a lot of the market structure changes that occurred a decade ago with Basel III and with some of the Dodd-Frank regulations, the issue with all of them is that they make the institutions, like the large banks, safe and sound, at the expense at sometimes of balance sheet elasticity and therefore market liquidity. And that's what I think was a big reason why you saw such dramatic moves yesterday and probably a bit of the follow-on today.
So that's kind of where I want to go to, Ira, the liquidity in the marketplace. I mean, I remember my first day at Solomon Brothers. They walked me out onto the massive trading floor, and it was literally row after row after row of government bond traders. That's all they did. And that's liquidity to me. Is that still there at all?
It's not to the same extent that it was, and certainly even when I was on, working for one of the primary dealers, they had shrunk their footprint in terms of what they were trying to do in terms of taking risk, right? So, dealers are trying to match trades, match orders, all of those things, and one of two things has to happen if you're just trying to have the market deal with, client to dealer to client type of trades, and that's that you have to widen bid offer because, and if you can't inventory to sell, which is what a lot of bond dealers have done, particularly in the corporate bond market and some of the structured products markets, but in the treasury market, that's true to some extent as well. you need more balance sheet to be able to do that. So that means you have to hold more equity, and liquidity can be very fickle. So everything looks great until you have just a certain amount of risk that's trying to be laid off at one moment, and that's when you get these massive moves. There's a simple fix, at least temporarily, and that would be to exempt treasuries from the supplementary leverage ratio of the large banks, because most of the large banks have dealer arms, and by exempting the treasuries from the SLR, which is a benefit to the government, right? It would be in the government's interest to do this. You would increase liquidity across most of the fixed income world, but treasuries in particular, obviously, because you can now own more treasuries without having to worry about this extra capital that you have to hold against them.
Such a good point. Here is my insanely smart question.
Oh, boy.
Why were there so many sellers yesterday?
Yeah, I think there were a couple of things going on. I mean, tariffs are a big one, right? There's people who are worried that given that about a third of the treasury market is held by foreigners, that with less dollars leaving the U.S., that there'd be less demand from foreign entities. Now, in aggregate, foreigners haven't been net buyers of treasuries, but private investors have been very large buyers of U.S. treasuries. Central banks have been shedding their treasuries, while private buyers have been purchasing. And why? Well, if you're an insurer who insures oil on a ship, you have to own some treasuries or some other U.S. assets because you have a dollar liability. That's the oil that's on that ship. Now, what happens if that oil winds up being denominated in another currency for that transaction? You'll have to hedge it using that other currency. So I think there is this little bit of a fear that the U.S. dollar, because of everything that's going on, might lose some of its reserve currency status. Now, it's not going to happen overnight. It's not going to be something that's going to happen within the next year even. But over time, there could be alternatives that crop up. The issue with, I think, the dollar story, and look, Audrey Child-Freeman, my colleague and the leader of our FX strategy team here at Bloomberg Intelligence, she's the expert on this by far. But the way that I view it is that the dollar over time, can lose its status against maybe the euro. Maybe there's more renminbi trades. The problem with all of those things is that you have to have very stable currencies, and you have to have enough debt for people to be able to, or assets anyway, for people to be able to purchase them in the open market, or otherwise you can't be a proper reserve currency the way that sterling was for a long time and the dollar has been since World War II.
Ira, great context. Appreciate it. Ira Jersey, Bloomberg Intelligence, Chief U.S. Interest Rate Strategist. Well, joining us in studio, he flew all the way here just to have this conversation, is Chris Watling, CEO and Chief Market Strategist of Longview Economics. Chris, there's lots of questions to get into, but let's just pick up on what Ira's talking about and the worries that the dollar could lose its status as a safe haven currency, as a world reserve currency. How real could that be in your world?
Clearly it's being chipped away at the edges with the latest policy announcement with the tariffs. But I wouldn't want to overpin a one-day move. I mean, it looks to me more like maybe there's some liquidation, forced liquidation for some sort of reason, some sort of funds blown up. There's been a lot of volatility. If you think about S&P moving 8% in one day, there are all sorts of things happening in portfolios yesterday. So, yeah, I think the bigger picture is U.S. exceptionalism was a well-accepted theme at the end of last year, and now it's being chipped away at quite heavily by the sort of policy announcements we see, particularly what we saw last Wednesday.
So what does that mean for maybe your economic growth forecast? I mean, both for the U.S. and globally, there's a lot of folks we're seeing bringing their estimates down for GDP growth and maybe even taking their inflation estimates up. What have you been doing?
Well, I mean, we've been talking about this idea of a mid-cycle slowdown for the last few months because I think Trump's initial policy agenda is negative for growth. But it does get better later on in the year as you get maybe some tax cuts into next year and some deregulation and so on. So I actually think the market's almost, the sort of fear's gone too far. It's as if, the price has driven the fear to beyond where it should be in terms of recession calls and that sort of stuff. There is a lot that's good about the U.S. economy. There's a lot of the private sector that's healthy. But, to answer your question, yeah, I mean, I don't think there's going to be a lot of growth in the sort of middle of this year.
So what do you do on a day like today? Is this a day to sell into the rallies? Do you want to sell the rips here?
No, I think it's a day to buy. So, I mean, it depends on your time frame.
Sure.
But tactically, we started buying this morning. I wish we'd started doing it yesterday, frankly. But I think there's, if you look, when do you want to buy on a tactical basis in the market? You want to buy when everyone's panicky and fearful. And that was yesterday. That was a sense of a liquidation event. The market had been selling off for almost 2 months. It was 20% lower. I mean, that's quite a move. 20% lower prices in a small recession. I don't think it's going to be a recession. And I think we've had the sort of shock of Wednesday, and now we're into the sort of nip and tuck of negotiation and sort of ebb and flow. I mean, some news flow will be better, some will be worse. So I don't think it's the end of the economic world for America. It's not good. I wouldn't think I don't think it's a great policy, but it's not the end of growth. It's not the end of the S&P 500 and so on.
What were you buying, or what are you buying? Is it some of the tech names that have been such the leaders of this marketplace, or is it maybe more value?
I think if you're a trader, you buy the tech names because what went down the hardest bounces the hardest. But I think if you're an investor, you buy the cyclical stuff in the market because the shape of global growth is changing going forwards on a 6 to 18, 24-month view.
Do you need to do it in a nationalistic way in that you want to buy companies that are exposed to the country in which they actually operate? Like, is that going to be the way to think about things going forward?
Maybe there's a bit of that, but I think what the shape of global growth is changing, and that I think we're going to get the Western consumer waking up. We've had a very weird post-pandemic world.
Like, we're waking up? I thought we were going to sleep.
I don't know what you guys are doing, but no. I mean, in terms of so if you look at a lot of the Western economies, including the US, it's really a lot of it's really struggled for 2 or 3 years. Even parts of the US, think of housing activity, it's on the floor. I mean, it's terrible. We need lower interest rates, and that's what we're going to get out of this. And lower interest rates, monetary policy is going to stimulate Western consumers, I think, to really get going. I'll give you one stat. There's $35 trillion of housing equity in US household balance sheets, net of mortgage debt. And that was like 10 trillion 15 years ago. There is a ton of money and wealth waiting to be tapped. You just need the right macro environment. And I think we're moving towards that. It's a similar story in the UK, similar story in Southern Europe, and parts of Europe as well. Northern Europe are doing some good things.
30 seconds left. You mentioned Europe. That had been a very nice place to start the year relative to the US S&P 500. Is that still a play for you?
I think it's still a play for us. As always, at the end of sell-offs, everything gets sold. It's indiscriminate. But yeah, I like Europe. I think there's a lot going for it. Germany's changing. Southern Europe looks terrific. They've been deleveraging for 15 years. We're getting lower interest rates. You're getting a defense fund. It's a long old list of positive factors, cyclical and structural, about Europe. So what Trump's done is he's woken the rest of the world up to get on with growing their own economies.
Yeah, I guess so. I mean, we saw that out of Germany, maybe close to $1 trillion of spending on defense and infrastructure. So we'll see how that plays out across Europe. Chris, thanks so much for joining us. Really appreciate it. Chris Watling, he's the CEO and Chief Market Strategist at Longview Economics, joining us live here in our Bloomberg Interactive Brokers studio. The markets remain significantly higher today. The S&P 500 is up 195 points. That's 3.8%. The Dow, John Farrow, Dow, up 1,400 points, 3.7%. And the NASDAQ's up 670 points. That's 4.3%. We do have a bounce in yields. The 10-year Treasury yields up about 5 basis points, 4.23%. Alex Steele, WTI crude oil up a little bit here, just about $61.40 a barrel. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. That is a risk-on rally. S&P 500 up 3.8%, up 193 points right now, 52.56 on the index. The Dow Jones Industrial Average up 1,414 points. NASDAQ 100 up 740 points. That is a pop right now of 4.25%. With a clock ticking for the so-called reciprocal tariffs, they kick in after midnight tonight, Washington time. The Customs and Border Protection just updated the tariff schedule. By the way, just to remind everybody, tariffs are not paid by the exporter. They're paid by the importer when you pick that stuff up. China, interestingly enough, in the FX market has allowed the yuan to weaken, offshore yuan falling to the weakest on record as the trade war escalates with China. An unmistakable declaration of intent there. And among the most actively traded, well, let's do the leaders in the S&P 500 in terms of index point. Nvidia right now up 7%, Apple up 4.5%, Microsoft 3.8% higher. And the best performing stocks in the S&P 500 on an individual basis, Humana and CVS, they're rallying after the Centers for Medicare and Medicaid Services finalized a 5.06% average increase in payments to Medicare Advantage plans. That's actually more than expected. So I do have an unofficial trade advisor.
Okay.
Really?
The bartender across the street. So Noel, well, he's actually one of the owners of a Bloom's Tavern. Bloom's Tavern, named, of course, after James Joyce. So he wanted a statue of James Joyce made with a bench, and it's sitting out front of the bar. So he went to China. That was the best price he could get, and it looks beautiful. But he was advised, when you pick it up at Port Newark Elizabeth, don't. Just default on it. And then he was told it will go to auction. And you have to find an auction broker that's approved by the Port Authority. And he said, nobody's going to show up to auction on a statue of James Joyce sitting on a bench, and then you'll be able to pick it up without, just for a fraction.
That's a lot of work.
Well, I'm just saying. I mean, he didn't go that
route. To avoid,
route.
how much of tariffs at this point?
But you could have picked up a statue of James Joyce sitting on a bench for a cut rate price had he not paid.
Who doesn't want that?
I mean, yeah, I have so much room in my Brooklyn apartment.
So good in my front yard. Anyway,
that is a great anecdote.
That's the advice from the bartender.
This is Bloom's, like right over the corner, right? Like that Bloom's?
Yes.
Amazing.
Yeah.
Okay.
Around the corner. Yeah.
Excellent.
Not saying I go there a lot.
No. Not enough that they would talk about how to avoid tariffs with you. Yeah. JT, thanks a lot. Appreciate that. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. But the zeitgeist, you get it. Like how to avoid paying more money. That's at the end of the day what we're talking about. Henrietta Treyes is managing partner and director of economic policy at Veda Partners. So it raises actually the question, Henrietta, is what is the off-ramp for tariffs at this point? Is it just being in a discussion? Is it actually rolling back a number? Is it zeroing the trade deficit? What is it?
Well, I'm just watching the Senate Finance Committee hearing with USTR Greer right now, and it's pretty clear that the off-ramp is not coming anytime soon. The president's trade representative is explaining in a lot of detail exactly how serious President Trump is about addressing every single trade deficit with every single nation from Vietnam and Malaysia to China, and it's plainly going to take a while. We had been expecting maybe some small-scale deals on smaller trading nations in the advance of tomorrow's tariffs going into effect. But those talks are going to take a while. They've already taken a while. They're stressing some things that have already happened, like India taking off its 6% digital services tax, which happened a couple weeks ago. So nothing has really precipitated since Liberation Day that should lead anybody to be optimistic that any of this is coming off anytime soon.
Is there any role here, Henrietta, for the, U.S. Congress?
No, not right now. I keep titling my reports, T minus 4 days, T minus 3 days, because I keep getting that question from investors. When are lawmakers going to step in and take back some of their constitutionally mandated authority? What about the Cantwell-Grassley bill? It's got 6 or 7 Republican Senate sponsors right now. It might eventually have a House companion bill. That is nowhere near the sustained pressure campaign that would be required for Congress to be able to get 67 votes to overcome a veto hurdle from the president, which he's already said that he would do. And, they're about to leave town on Thursday or Friday, if not before. Looks like these budget talks aren't going very well. So there's nothing that anybody should expect from Congress for the rest of this month and well into May.
Okay, so based on that, I guess I'm having a hard time understanding the off-ramps to certain countries like a Malaysia or Vietnam that don't necessarily have the money to buy the stuff from us versus, say, a Europe. Is there an understanding, as you're watching the W Trade representative speak, that there are tiers of different off-ramps, or no?
I've always thought that there were tiers. We saw that through the reciprocal tariffs going on at different rates against different countries. At this point, the combined China tariffs are over 100% versus Vietnam's at a lower rate. But the question I think that you point out so well, Alex, is that the tariff we got from Vietnam is what, 1.5%? So what is the goal here? To get it to zero? Great. Well, what did we just achieve? Almost nothing. So the pain that we are seeing, the manufacturing pain, I think is a real story that we're going to be watching for the next couple of months, if not years, as they just get completely frozen. We talked yesterday about Audi just abandoning some of their cars at the ports and not offloading them, not knowing what the tariffs are going to be. So the manufacturing disruptions across steel, inputs, aluminum, copper, there's so much there that is really going to go up the works and create a difficult ramp for any tier to be helpful to domestic manufacturers.
Henrietta, have we seen any recent polling about how people feel about tariffs? I mean, because it's obviously such a central part of President Trump's economic policy. Is there polling that people support this stuff?
President Trump's supporters do. President Trump's supporters view the recent stock market declines as, comeuppance for, I'm sure, probably some residual hangover from the Great Recession, and the bank bailouts. There's definitely that component. There's a difference between union households and non-union households and the way they're viewing the president's actions. But most of his supporters like the tough guy attitude and are not really as concerned about individual tariff rates and what it means. And I think this is something that's missed by Trump's voters right now, is that the market is a leading indicator. The market is pricing in recession now, pricing in 1.5 points away from GDP growth versus expectations, or 0.6% at least at the low end. They're going to see that ultimately play out. And that's what strikes fear in the heart of some of these members who are trying to push back against the president, because they have to run for re-election next year. Trump doesn't, but they do. So that's, I think, the only real leash on this. You're right to point out the approval ratings. It's going to be slower to hit polling data than the market reaction. But I do think that what's been really clear for Americans for many months now is that tariffs are taxes. The president can come out and say these are tax cuts, but we know in our heart of hearts that that is not true. And the American voter and the polling data consistently shows that this is one of the least supported areas of his agenda and that they constitute taxes.
I mean, my question was going to be about the Trump put. Like, we clearly see there is no Trump put in the markets, which means the Trump put has to come in the form of his polls and approval rating. And I understand that on the margin, right, if you poll specifically on tariffs, there's less support in his economic plan. But overall, his support ratings are still off the charts.
Yep. And I get asked now less about a Trump put because I think investors have internalized that he's not going to be swayed here. And now I'm asked often about a congressional put. So if you don't mind me weighing in on that, I think it's interesting to, recall I was there during TARP and the auto bailout, and I saw, as a staffer, how long it takes for these members to move away from their priors to a new position. And it's not stock market declines. It wasn't, the 700+ point decline in the market on the day that we took the TARP vote. It's 3 consecutive weeks of real pain that get them to move away from their priors. And so I would encourage folks to not think about it as, the S&P has to decline, anywhere between 1% and 3% or whatever on a period that we've already had. It's the duration. So today's moves, today's bounce is actually materially harmful for any congressional put being achieved, because they're going to say, oh, look, the market's correcting. Right. They've reached the bottom, they're moving up, and they will dismiss it. And it's really a time horizon as opposed to specific amounts of losses.
Henrietta, thank you once again for joining us. Really appreciate it. Henrietta Trace, Managing Partner and Director of Economic Policy at Veda Partners, really has her finger on the pulse of what is happening in the halls of Congress as it relates to policy there. We're going to have more coming up. Markets are higher here today. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast Live. Let's talk a little healthcare here. One of the biggest trends really over the past couple of years has been these weight loss drugs. And one of the key issues has been kind of who pays for it. Sam Fazeli joins us here, Director of Research for Global Industries and a Senior Pharmaceuticals Analyst for Bloomberg Intelligence. Sam, I believe President Trump and the administration has rejected obesity drug coverage. What's going on there, and how does that impact that market?
Yes. Hi, Paul. Of course, what happened is that this has been something that was put together in the Biden era in terms of trying to get Medicare coverage for these obesity drugs. Remember, Medicare are folks that are over 65 years old and more likely to be overweight, not necessarily, right? But more likely to be overweight and more likely to have issues to do with overweight. So it's a very important group of individuals to have these products available for. But I think there is a general sense, and I think we had expected this, so this is not an unexpected outcome, that the Secretary of the HHS, Human Health Services in the US, is not necessarily a fan of obesity drugs. However, there's a little aspect here that's important. These drugs are also covered by Medicare for those who suffer from sleep apnea and cardiovascular morbidities. Those indications and that usage has not been withdrawn. It's just the use for obesity that's been withdrawn, or at least is not being proposed anymore.
So, can that be? That doesn't make any sense to me. And like the whole point of these drugs is to help obesity. How are they going to keep that distinction?
Yeah, but Alex, not that I'd like to necessarily agree with the kind of decisions that are being made or disagree with them. If you think about it, if everybody who has a comorbidity, for example, cardiovascular disease, kidney disease, sleep apnea, and the only people who are not going to be able to get it are people who are just overweight, nothing else. That's a little bit easier to swallow than if they said, okay, we're just going to ban it, because those elements of protecting patients, that is important for health. Now, if these other obese people ended up, the ones who are now not being included, just obese and no comorbidities, having one of these issues, they would be included. So I think the issue here is some folks believe that all of these things should be solved by eating better. Of course, we all want to do that and not eating too much, et cetera, et cetera. However, society shows us that that's clearly not possible for a lot of people, and they end up in a situation where they gain weight and they put in more energy than they spend. That's where the problems arise. But so I don't think it's really as bad as it sounds when you first look at it.
Novo Nordisk is down 30% year to date. Is that just the obesity play unwinding for this name?
Well, you would think to yourself, well, why would it for this name and not for Eli Lilly?
Right.
We've always believed that Lilly obviously has a lot more going on, but we all know that Lilly is particularly driven with the obesity aspect. We also know that the obesity drug from Lilly, Zepbound, has outperformed Novo Nordisk Wegovy. We also know that Novo Nordisk is based in Denmark, and there's this fight going on between, or at least heated conversations going on between the U.S. administration and the Danish authorities. So I think you can pile all these things up on top of each other and worry about Novo more than you would about Lilly.
All right, fair enough. What about the rest of the sector? What are some themes that are on your mind?
Yeah, so vaccines continue to be a theme on our mind, and the which of course there's always words that are spoken or statements that are written that seem to suggest that vaccines are a good thing. MMR is a good way of stopping measles, but they don't say you got to go out there and get it. That's what's missing. On the other hand, we also have an issue with regards to what I feel like is a I don't want to call it an attack, but an undermining of research in areas which are infectious diseases, which I just do not understand. Why a tuberculosis expert would lose their funding. These are not diseases that no virus has been annihilated, maybe smallpox. But I think if you think about it, measles, we didn't have any deaths, we have them now. As soon as you let your guard down a little bit, it all explodes. So I am worried about that because I love the United States. I love coming there. And that is something that clearly is a worrisome aspect for me.
Is it shared to any extent in Europe, Sam?
Oh, I mean, of course. Vaccine hesitancy isn't a specific US issue. The thing is that what you don't want is that hesitancy to be fed from top healthcare officials. Over here, we have that hesitancy. Don't forget, the person who put together the MMR study for the discredited MMR study and autism link is a UK individual. But that's been discredited. But the UK government and health services have continued to push that this is the best way to get folks protected. So it's not, hesitancy is not just a US issue. It's everywhere. What you need is health officials to be pushing it.
Right. All right, Sam, thank you so much. Appreciate it as always. Sam Fazeli, he's the Director of Research for Global Industries and Senior Pharma Analyst over there in London, Queen Victoria Street for Bloomberg Intelligence. Always appreciate getting a few minutes of his time. Still holding on to some of these gains here. A little bit off the highs of the intraday, but still a strong day in the markets here.
Yep, you know it. All right, for our listeners in the U.S., here's a reminder. You can listen to us via satellite radio on Sirius XM, channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM, channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Tuesday, everybody. We made it to the second day of the week. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We got you covered on all angles right now on the equity rally that we're seeing. Michael McKee, Bloomberg International Economics and Policy Correspondent, coming up in just a moment. On small business optimism, NFIB, not great. We'll discuss. Plus, Nancy Daoud is Private Wealth Advisors at Ameriprise Financial. Get her outlook on the markets. Ana Ragrana, Bloomberg Intelligence Technology Analyst, the latest on Apple and the historic sell-off of that we've seen in that stock. And then Punit Goyal will join us from Bloomberg Intelligence to kind of walk us through the apparel sector. There was a really interesting note out about H&M having raised their prices by a crazy amount.
Really?
In order to sort of survive all of this. So we'll break into that. But let's kick it all off with a Bloomberg Business Flash. And for that, we go to Charlie Pellet.
Hi, thank you very much. And here's what's going on this Tuesday morning right now. We are looking at a 1,000-point gain on the Dow Jones Industrial Average. Can we call it Rebound Tuesday? The S&P, though, well off session highs right now. The S&P is up 143. That is a gain of 2.8%. The Dow, by the way, up 2.7%. The Nasdaq Composite Index right now up 514. That is an advance of 3.3%, while the Russell 2000 Index of small cap shares is gaining now by 1.9%. The 10-year, 4.20%, with the 2-year, 3.80%. Gold up $23 the ounce, back above 3,000 now, up 0.8% to 3,007. West Texas Intermediate crude, 60.97 a barrel, up 0.4%. And Bitcoin lower now by 0.3%, 78,714. Treasury Secretary Scott Bessent says there is potential for advantageous trade deals with major American trading partners as overseas nations appeal to Washington for negotiations in the wake of President Trump's steep reciprocal tariffs. In an interview with CNBC, Bessent also said China made a big mistake retaliating against the U.S.
We are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
Treasury Secretary Scott Bessent interviewed on CNBC. Levi Strauss maintaining a full-year outlook that excludes the impact from sweeping U.S. tariffs that are poised to hike the costs of clothing around the world. Stay with Bloomberg for the latest on tariffs and market reaction. Again, Levi Strauss down 2.1%. We've got the S&P off session highs, holding on to a gain of 2.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Alex Steele, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast Live. As Charlie was just reporting, a very positive day in the marketplace today. Let's look under the hood and see where things are going at the stock level. We do that with Bloomberg's cross-asset reporter, Emily Graffeo. She joins us here in studio. Emily, what are you looking for?
So one of the best performing sectors today in the S&P 500 is the Managed Health Index.
Okay.
And this is all coming after the U.S. government increased 2026 payments for Medicare Advantage plans. So I'm specifically looking at United Health. It had the highest intraday jump since 2020. It was up 11.5%. It's pared back a little bit. And then also Humana hit its highest level since February. The word, at least from Wall Street, is that the new rate on these plans exceeded even the most optimistic expectations. That's what Piper Sandler said. Just to go into a little bit more detail, the Medicare Advantage plans will see payments increase by an average of 5.06%, which is more than double the rate that the government proposed in January. And it also means that the government will now pay private Medicare insurers at least $25 billion more next year than current rates. So any insurers are up, and specifically United Health and Humana, two of the largest, are really rallying today.
And it also shows, like I've been saying, it doesn't take a lot to get a rally, right? When you have such oversold conditions. What else are you looking at?
So CVS Health, another potentially riding on the strength of the optimism in the healthcare space today. Those shares are up as much as 12%. But in addition to the Medicare news, the company said that it expects financial results to meet or exceed previously issued guidance. They also named a new CFO, and sometimes management switch-ups
can be helpful.
Depending. Sometimes they can be not helpful for the stock. But today, it's green on the screen. Evercore ISI said, we see investors unlikely to be overly worried about the additional management changes. Former UPS executive Brian Newman will exceed the current CFO. And that goes effective April 21st. And again, right now, it doesn't take much to see a rally in these shares.
Anything else?
That is all I have.
That is all we've got. Awesome. For more conversations like this, listen to our Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcast. Does this rally surprise you at all, Alex?
No. And I say that because Julian Emmanuel of Evercore ISI was on TV with me and Romain Bostic on Friday.
Yep.
And he said, you're going to have a gap down on Monday, and then by Tuesday, you're going to have a turnaround Tuesday. And he was right. But it doesn't mean that you're out of the woods. The question then becomes, how long does it actually last for?
Gotcha.
How long does the bounce actually last?
That sounds right. We had some economic information data come out today. U.S. small business optimism declines by the most since mid-2022. Michael McKee joins us, international economics and policy correspondent. He's down there in Washington, D.C. Why, I don't know, but he chose to. Michael, what did you make of this, the small business optimism data? Is it one data point? Let's not pin too much on it, or does it have some different meaning?
I'd say it's the former, Paul. The small business people surveyed by the National Federation of Independent Business tend to skew very Republican. And after Donald Trump's election in November, the confidence index went way up. It's been ratcheting down ever since. And this sort of tells you that small business owners are seeing the same headlines that everybody else is. And confidence is falling off given the possibility that we'll all have to pay more money for tariffs. We've seen the same thing in the Michigan and Conference Board and CEO surveys that have been out recently. What's interesting in this is in the sub-indexes, the number of people who are thinking about making capital expenditures and the number of people who are thinking about hiring drop. And the people who think that the economy is going to be better 6 months down the road drop significantly. So they're reflecting the same sort of fears about what might happen because of the trade war that other people are.
So, and also this is so interesting, Mike, because it like sets the base, right, for when you actually do have a tariff impact. Was there any read on like how small businesses can manage that kind of pricing and that inventory?
No, not in this particular survey, but experts say that small businesses are going to have a much bigger problem because obviously they can't carry the kind of inventory. They can't stock up ahead of time in the same way that big corporations can. And it's harder for them to raise prices because they're already, by the nature of their business, charging in general a little more than the major retailers. So it isn't easy for small business to deal with something like this.
What's the Fed's role here? How do you think they're looking at all this data here, Mike, and maybe some of the market gyrations over the last several days?
Well, they're looking at bid-ask spreads when you talk about looking at market monitors, because if the spreads are tight enough, it means that people are buying and selling okay, and there's not a problem. They would only get involved in the markets if there was some sort of systemic disturbance. As far as the drop in markets, they don't really care. It's not their job to worry about whether you make money or lose money in the stock markets. What they will be watching is if you do see big drops in the wealth effect from the stock market, or people cutting back for other reasons because they're paying more for the things at the grocery store, those will rebound into the economy, and that will be something that the Fed has to deal with. But the question at this point, as we've been saying for quite some time now, is it going to be growth, or is it going to be inflation, or is it going to be both that they have to deal with?
I mean, it really feels like from what the Fed officials have been saying that inflation is still their biggest worry. They acknowledge the downside potential for growth, but that the inflationary scenario is really what's stressing them out.
Inflation is always and everywhere the Fed's prime focus, shall we say. And we know that tariffs are going to bring prices up. The question is, does it bring them up more than just one time? Right. Do they keep going up? Whereas with growth, you do have a ratcheting down. It won't fall off a cliff immediately. The pandemic was the one exception to that rule. And so they would have some time, more time to react. And also, they haven't seen the signs yet in growth of a problem. They haven't seen any problem with the labor market. So right now they're keeping an eye on inflation to be the first canary one way or another.
And on that front, Mike, we're going to get some CPI and PPI data later this week. Still too early, presumably, to see any upward pressures?
Pretty much so, Paul. We might in the PPI, because we had a lot of imports of industrial materials for factories and producers in December and January in particular, and it is possible that some of the people overseas took advantage of that and raised prices. But it's too early to really see it in the consumer numbers, because we haven't had the tariffs really imposed on them yet.
Which leads me to, why are you in D.C.? Which leads me to the FOMC minutes tomorrow. I mean, we'll talk to you tomorrow too, but what are people most excited about learning in the minutes?
Oh, people always want to know what the Fed's view on inflation is going to be, and particularly after this meeting, how they put together their views on what we were going to see in terms of the economy going down the road, the summary of economic projections, the dot plot. Most Fed officials that I've spoken to since then say, we didn't put a lot into this because we didn't have any visibility into what the administration was planning. So it may be that this information is pretty stale, particularly since it comes out on the same day that the president is, in theory, imposing all of these tariffs.
And Friday, I don't know, we get the University of Michigan data here. This really got my attention like a month ago, when it really started to show that people maybe were a little bit concerned in terms of their current sentiment, and we saw some, meaningful moves in inflation expectations. How is the UMich data kind of perceived by the marketplace?
Marketplace is taking it on board as an indication of concern among consumers, but they're going to be watching next Wednesday when we get the retail sales report to see if Americans are acting on that kind of information. The Fed looks at it in pretty much the same way, but they will be watching the inflation expectations numbers, because they want to see if there's any chance they start to become unmoored. People start to think inflation will be cyclical rather than a one-time effect.
Really good stuff. Mike, super appreciate it. Michael McKee. Oh, wait, no, what's the chart you're going to send me today?
I think what we have to work on today is imports and exports from China, and what the Chinese, what we actually send them versus what they actually send us. When you look at value added as opposed to just the overall price of a good.
Mike, you're down in D.C., and I'm sure you're hearing the scuttlebutt and chatting with people here. What's the feeling down there about tariffs in general, and perhaps the way President Trump is imposing these tariffs and maybe open the negotiation? How do people down in Washington feel about it these days?
Well, in general, the view is that it's a mistake, that tariffs don't work, that this is going to be a problem for the overall economy. Folks in the administration doing their best to put some lipstick on the pig. But in general, the feeling here is this is going to be an issue and a problem, and they're wondering how Donald Trump gets out of this. What is the actual end game here?
Right. No, that's a great point. Mike, appreciate it. Thank you very much. Michael McKee, Bloomberg International Economics and Policy Correspondent, joining us on all things economics. We're looking at the NFIB, also looking ahead tomorrow to the minutes as well as CPI as well. Okay, now we're going to head to David Weston, a Bloomberg television anchor for Wall Street Week. He's speaking with former U.S. Treasury Secretary Larry Summers. They'll be speaking in-depth interview on the trade policies out of the Trump administration.
For our Bloomberg audiences worldwide, I'm David Weston, and I'm joined now by the former U.S. Treasury Secretary Larry Summers of Harvard. Larry, thank you for being back with us. When we talked just a week ago on Wednesday, the day of the announcement of the tariffs, there was a lot yet to be determined. The markets have been through an amazing amount of volatility since then. 3 down days. They're sharply up today. You've been quite explicitly critical of what President Trump has announced here. Do you feel better today because the markets are coming back?
Sure. I feel better anytime instability seems to be calming, but be not confused. There's only one reason why instability is being reduced, and that is there's a growing hope in markets that a larger part of these policies are going to prove transitory and reversible. This does not reflect any kind of market endorsement of the approach that the president has followed. Rather, it reflects a judgment that the president might recognize the reality that markets are telling him about, that many of his advisors are telling him about, that corporate CEOs across the country are articulating, that this kind of wholesale tariff policy is simply bad for economic performance. We're seeing some signs that the administration may recognize that.
We're seeing signs, but do we have a better sense of the goals and the process today than we got from the Rose Garden last Wednesday?
I don't think so. I think this is fundamentally a improvisational effort. You could tell that when you knew that there was a policy based on tariff reciprocity that didn't use any data on the tariffs of other countries in figuring out how to reciprocate. You could tell that from the blatant contradictions between what Presidential Advisor Navarro was saying and Presidential Advisor Treasury Secretary Scott Bessent was saying. You could tell that from the degree of division between close outside advisor Elon Musk and many members of the president's economic team. This is a policy, it's a hugely consequential policy, but by all appearances, it's being improvised on a daily basis, and that's creating huge uncertainty. But it's only uncertain, there's only uncertainty if things go in both directions. And today happened to be a day when things moved in a positive direction. I hope that the moves to back off these policies can continue, but we'll have to see. I suspect we're going to have volatile markets for some time to come, and no one can know, but my judgment is that I'd be surprised if the bottom is yet in with respect to this phase and markets.
How bad could it get?
Oh, I think the likelihood, I think it's more likely than not that we're going to have a recession. And in the context of a recession, we'll see an extra 2 million people be unemployed. We'll see losses in household income that are $5,000 a family or more. We're very likely, in the context of a recession, to see markets reach levels significantly below their current levels. So I think we could be looking for fairly serious economic problems, and I think it will cast a shadow forward, because if we have a recession, the budget deficit will go up, the accumulated debt that we have to deal with will go up, there'll be financial distress that will affect higher risk companies and also higher risk countries in the global economy. But David, there's a central thing to understand about this moment of economic and financial difficulty. To borrow a word from the doctors, it is our first iatrogenic recession, our first iatrogenic financial crisis. Iatrogenic illness is when you go into the hospital and you catch an infection there. It's when the people whose job it is to make things better are the active agents of making things worse. And iatrogenic illness, staph infections and the like in hospitals is a major preoccupation for doctors. This is an iatrogenic economic challenge. There is nothing in the outside world that is causing this challenge. It is induced by the words and deeds of President Trump and his administration. The good news about that is it could be resolved with words and deeds of President Trump. If they backed off these policy errors, I think there would be a substantial resumption of normality. But as long as a hospital maintains unsanitary conditions, its patients get infections when they enter. And as long as these policies are being pursued, we're going to see substantial volatility in markets, substantial recession risk, substantial damage to middle-class families.
So just to follow up on that, is there any remedy for the patient other than for the chief doctor, that is President Trump, to back off what you just described as policy errors? Is there anybody else who can save us?
Look, depending on what happens with other countries and how they handle their diplomacy, it may be easier or harder for him to back off these policies. Depending upon how the business community responds, there may be more or less ability to create an environment where there's a backing off of these policies. But there's nothing complicated about this. You impose huge tax increases on households in an uncertainty-creating way that's also damaging to established business patterns, and the economy turns downwards. There's nothing subtle or sophisticated about this. This is introductory economics. It's the kind of question that could have been on an introductory economics exam for decades. Suppose the President of the United States decides suddenly to impose a massive tariff tax increase on products from all over the world. What will happen to the economy? And any B student will know that the answer to that is that it's a supply shock that raises prices and raises unemployment as well, and makes the economy less efficient and adds substantially to uncertainty. This isn't some sophisticated, complicated thing to analyze.
Larry, thank you so much for being back with us. Really appreciate it. That is former U.S. Treasury Secretary Larry Summers of Harvard.
All right, that was Bloomberg Television's David Weston speaking with former U.S. Treasury Secretary Larry Summers about the tariff policies coming from this Trump White House. Market's still higher, although off the highs today. Let's get a check-in. Charlie Pella right now with the Bloomberg Business Flash.
I thank you very much, Paul Sweeney. Let me quantify that in terms of percentages. Absolutely right, higher, but we're off session highs. Have been up as much as 4%. Right now, looking at a gain in the S&P, up by 2.1%. So bottom line here, well off session highs. We've got the S&P advancing now by 105.5167. Dow Industrials up 771. That is a gain of 2%. The NASDAQ Composite Index up 386, up 2.5%. Again, keeping the equity markets all in context, the S&P up 2.1%, have been up by 4%. Today's bounce, though, does bring relief to investors rattled by intense swings following a sell-off that chopped trillions of dollars off of global markets last year. S&P higher, the Dow, NASDAQ also advancing, Russell 2000 up 1.2%, 10-year 4.19%, the 2-year 3.78%. Gold up $24 the ounce, 3,007 up 0.8. West Texas Intermediate crude has reversed course. It is now lower by 0.3%, 60.49 a barrel, and Bitcoin now down 0.8%, 78,293 on Bitcoin. So again, recapping, we're well off session highs, but still a gain of 2.1% on the S&P. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. Alex Steele here alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We got you covered on all the bases, internal and external sourcing. All right, we got a pretty fierce rally underway here. My question is, does it actually last? Nancy Daoud is private wealth advisor at Ameriprise Financial, and she joins us now, also CEO of Opus Advice First. Nancy, I appreciate that you're going to be a long-term investor on this, but just with our decades of experience here, when we take a look at a market move like this, after oversold conditions, does this bounce last for a while?
Well, it's hard to predict, obviously, but I do expect a great deal of turbulence. I mean, there's no doubt that this was somewhat expected, maybe not to the degree that it occurred. You know, the first quarter was like feast and famine, you know, and the first half of the first quarter was phenomenal. And then the second half just took it all back. So the Magnificent Seven stocks that had propelled the market prior are the same stocks that dragged it down. However, like you said, longer term, I still feel that we should be bullish. And in these turbulent times, although it was much more severe than expected, we should really look at this as much more of an opportunity, because up times last a lot longer than down times. And we just lose sight of that when things are so scary, like they happened in the last few days.
So how does one reposition, Nancy, if at all? Do you just kind of stay the course with your portfolio allocation? Do you try to maybe buy some things that were now more attractive? How have you kind of altered your view, if at all?
Well, clearly staying the course or time in the market has always been trying to time the market, because we have no idea if we've hit bottom or not. And if so, you know, how do you time that? There's no way to do that. However, if you do have longer term goals and some excess cash that is available that you are willing to invest in the longer term, there's such an opportunity. I mean, the sectors that have taken the biggest beatings are financials and technology. So that's certainly an opportunity. And we know that ultimately those things will come back. Just don't know when. Mm-hmm. But I think the biggest message is that in the near term, there will be significant volatility.
That's to be sure. The idea, though, that we go back to what we knew before, is this time different? I mean, is the U.S. exceptionalism the Russian to U.S. assets we've seen over the last decade, what's your level of conviction that that still holds?
You know, I can't claim to be an expert on politics or economic policy, but I do know, having been around a very long time, is that history keeps repeating itself with the markets. You know, the underlying variables may be very different each time, but ultimately the math rules because that's how markets work. And so we may have a lot of emotion due to more information and a lot of propaganda, both, you know, positive and negative coming at us. But ultimately, things level out and revert to the mean because the math will always rule in the end. And that's what, when you're buying a stock in the market, you're buying the balance sheet of that company. So corporate earnings are important, and corporate profit and economic profit fundamentals are always going to be the determinants in the end. And those right now are actually quite solid. Now, can tariffs have a negative impact? Absolutely.
So, Nancy, how does fixed income work into your outlook these days?
Well, if you've gotten into fixed income in the last few months, you're feeling pretty good because that has been a very big stabilizer in the last few weeks with all the turbulence. And I think fixed income prospects look pretty good. Just watch the duration and go for investment grade. But it's very likely that the Fed will cut rates again. We just don't know when and how much, but probably at least a couple of times this year. And I think it's certainly an opportunity with stabilization and diversification of a portfolio at this time.
Nancy, thank you so much for joining us. Always appreciate getting a few minutes of your time. Nancy Daoud, Private Wealth Advisor, Ameriprise Financial, joining us from Miami, Florida via Zoom here. One of the names that's been really bouncing back a little bit here today is Apple, up 1.5%. We see some stories that people rushing out to get their Apple iPhones literally today before tariffs may take place. And the question that calls into question, kind of just talk about the longer term story there with Apple. Let's do that with Anurag Rana. He's Senior Technology Analyst at Bloomberg Intelligence. Anurag, what's your feeling about tariffs and, you know, a big consumer-facing technology company like Apple?
Yeah, I mean, this is the one company in our space that are in our coverage that is absolutely impacted by all of what's happening. And frankly speaking, this rushing to get the phones right now is not going to save them if these guys don't figure out a way to, you know, either get an exemption from President Trump or the U.S.-China, you know, trade deal, you know, becomes more closer to each other.
I mean, in some ways, Apple and Nike remind me of each other in that they did diversify away from China, and yet those countries they diversified, and maybe Apple didn't do as much as Nike, still wind up getting hit. What would it look like if Apple had to build the stuff in the U.S.?
I think in the absence of robotics, it's very difficult to do that. I mean, you need a massive firepower of, like, you know, human beings and technology to do it. Now, if there's a way to take the human equation out of the that particular process, yeah, it can be done anywhere, but we are not there at this point. But more importantly, you know, frankly, think about it from Apple's point of view as well. They do want to invest more in China. They do want to invest more in India and other local countries because that's their next growth driver. I mean, they don't have that many more phones to sell in the US market or the Western world for that matter. China makes up 20% of their revenue. There is no logical reason they shouldn't be, you know, investing over there because that's where the growth is.
What have we seen estimates, earnings estimates for Apple and maybe even some of the other technology companies come down yet?
They have come down a little bit, Paul, but on an aggregate, I think there is a long way to go before all of this really shapes up. And I think people are waiting for, you know, perhaps a deal right now with all the different local governments or respective countries to adjust those, and we'll find out more on May 1st. But remember one thing: with all of this, Apple still hasn't really, you know, issued a big press release as to what the impact on growth rate could be. They have given some guidance for this quarter, but you know, that seems to be okay. But when they come out and give guidance for next quarter, I really don't know how they're going to do it without understanding, you know, how some of that margins story may play out.
I mean, they have to have like a range of scenarios. There's got to be like a fan chart that these guys are going to have to present for all of these companies. Is the biggest issue that their costs are going to rise because the stuff that's imported from China will cost more, or is it that their sales, say, abroad will be hit?
I think it's a mix of both. For me, the second part is a very big problem because that's, if you look at it, any company, and if you're saying that, okay, the only way you're going to grow now is your old customer base is going to just renew your phone, that's not a very, compelling argument. If you were going to tell me that, okay, you go into a new country, that new country, the middle class rises, it becomes more affluent, then they're going to buy a more luxury product like Apple. That's a story that I like better than that. Now, as far as the products are concerned, I mean, they're already a very expensive phone. It's not these are not cheap phones. And then, to say that the cost could go up by 30, 40, 50%, I mean, that's a very big number, frankly. That reduces people buying those phones in the developed market as well.
So have we seen any history from Apple about their ability, their willingness to raise prices when needed?
Oh, I cannot remember to this extent. I mean, there has been a raising prices. Typically what they do is they give a base model with some memory, and with, they for the higher end model with better camera and other things, it's a more expensive product, but the margins kind of remains the same. But, it'll be very tough for them to take $1,000 phone and say that, okay, now it's going to cost 1,500, 2,000 or even more in the marketplace.
Oh my God. I mean, I remember when the phone was under 1,000 and it was like going to be over, and it was like, no one's going to pay that. And you know what? They paid it. So right. There is that. All right, Anurag, always good to catch up. Anurag Rana, Bloomberg Intelligence, senior technology analyst, joining us on Apple. Okay, coming up, Derek Flakel is Bloomberg NEF lead U.S. policy analyst, and he's going to join us to discuss the impact of tariffs on the green transition.
Yes.
In light of the fact that we're going to get an executive order coming today at 3 p.m., which is going to try and boost coal and coal production in the U.S., green transition feels real off at that point.
Right.
So potentially we could see things like federal land being leased for a new coal plant. You could also wind up seeing coal being labeled a critical mineral, which would unlock money from D.C. to speed up production. And coal as a critical mineral is a definite head scratcher because everyone has a lot of coal, but that's a side note. Anyway, so we'll break down what that green transition winds up looking like, and a stock market that's still off the highs, but up by over 2%. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ all advancing on a rebound Tuesday. And this Bloomberg Business Flash is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. S&P right now up 134 at 51.96. That's a gain of 2.6%. S&P have been up as much as 4%, so we're off session highs, but still advancing. The Dow up 1,009 now, up by 2.7%, and a 3% advance today for NASDAQ, up 468 points. NASDAQ 100 index doing a little bit better, up 3.1%, but the Russell 2000 lagging today, up by 1.8%. 10-year 4.20%, the 2-year 3.79%. Gold up $24 the ounce, now at $3,007. That's a gain of about 0.8%. And West Texas Intermediate crude down 0.1%, 60.61 a barrel. Small business optimism is down across the U.S. And with that story, here's Bloomberg's Vinny Del Giudice.
The Small Business Optimism Index posted the largest drop in almost 3 years in March. U.S. tariffs are clouding the outlook. Inflation and a lack of qualified workers also remain concerns. The share of small business owners anticipating better conditions over the next 6 months posted the sharpest decline since 2020. The data are compiled by the National Federation of Independent Business. Vinny Del Giudice, Bloomberg Radio.
Eli Lilly shares higher after Goldman Sachs upgraded the obesity drug maker to buy from neutral. Lilly up now by 3.5%. HP Enterprise lower after being cut to equal weight from overweight at Morgan Stanley. HPE is trading a little change right now. As a matter of fact, looking at a reversal for Hewlett-Packard Enterprise up now by 0.4%. Stocks higher, rallying the most since 2022 on trade deal hopes. S&P up 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thanks so much, Charlie Pellet. Alex Steele here alongside Paul Sweeney. Here's a headline for you. Hackers apparently have spied on 100 bank regulators' emails for over a year.
Huh.
Okay, so there you go.
We'll have more reporting on that.
Yeah, we'll bring you any more headlines on that as it crosses. All right, let's go now to the effect of President Trump's policy on, say, green energy transition. Today at 3 o'clock, he's supposed to sign some executive orders to push forward coal production here in the U.S. Want to go to David Flackel, Bloomberg NEF lead U.S. policy analyst. NEF is originally known as New Energy Finance, or the team within Bloomberg that tracks and analyzes the energy transition. What do you make of this executive order coming today at 3 o'clock on coal, and what does it mean for the broader transition?
Well, the executive order is interesting because this is sort of a replay of what Trump tried to do in his first term, right? He had previously talked about increasing payments to or using emergency powers for preserving existing coal plants, maybe bringing old ones back online. And as we can see from the power generation data, that didn't really work out. Coal is now 15% of generation in the U.S. Per year, down from considerably higher levels before. So there's a lot of different moving parts to this. You might see more, say, coal exports, more long-term gathering of coal leases, which have been sort of moving back and forth from Obama to Trump 1 to Biden and now to Trump 2. But in general, it's hard to say that this will be a huge boon to coal build-out or restoration, especially when you have tariffs weighing on any kind of big capital project.
All right, so talk about, the energy ecosystem. Where do we get stuff for the energy ecosystem, whether it's fossil fuels, clean energy? Where do we get the equipment, and is that something that's going to be impacted by these tariffs?
Oh, very heavily. Even for fossil fuels, which are often a very domestically extracted resource, there's reliance on steel, aluminum, specialized equipment that's imported, which is why you saw the Dallas Fed register such negative opinions about the tariffs coming in generally. More broadly, in terms of, say, solar equipment, that mostly comes from Southeast Asia because we've had tariffs on China for a long time. Batteries themselves tend to come from China. Electric vehicles are imported from a variety of places, but especially, it's very domestic, but a fair amount of Canada and Mexico in there. And lastly, if you're thinking about say, offshore wind that's pretty dependent on Europe. The only thing that's really effectively onshore and minimally dependent on trade is onshore wind in the U.S.
What is the future of offshore wind in the U.S.? I mean, if we're talking about ramping up coal and sort of there's zero love from the administration on offshore wind, have we seen sort of, I don't know, leases or any contracts be broken, or do you feel like companies that are still committed to the longer term world of offshore wind?
Well, I mean, what the offshore wind companies will tell you is this is a multi-year, long-term process of building that's beyond any one administration. We have seen one lease be canceled by the federal government for an ongoing project, but generally speaking, we haven't seen a lot more movement for things that have already been permitted and leased. Now, that's important because the federal government has a lot of leverage over that process. We're not seeing a lot more being added to the pipeline. But the real issue is going to come in the form of costs, inflation, and also potentially interest rates. We saw a major slowdown in offshore wind under Biden, which is a very supportive administration, simply because the cost of inputs went up, and as inflation went up, the Fed hiked rates. And wind is a very large capital-intensive project category and especially sensitive to those kinds of things. So if the tariffs lead to those broader impacts, we might see some fairly negative results for even the offshore wind projects that are already allowed to go forward.
Derek, I think even folks that are, that question the value of the economic value of tariffs in general, they kind of recognize that some of this strategically important stuff, maybe that we learned was strategically important from the pandemic when the trade, the cycles were all disrupted and the trade routes were disrupted. That makes some sense. Is it clean energy? Did they have a focus on bringing this stuff onshore as much as possible?
There's been a lot of discussion about across multiple administrations. The Biden administration was in favor of that. The Trump administration is in favor of onshoring manufacturing generally and of energy security, independence, even dominance, as they like to say, generally. But that's a hard thing to achieve with tariffs alone. Ultimately, a lot of the solar factories, battery factories, EV factories that are coming up in the U.S. are dependent on imports, whether those are imports of upstream components or of the manufacturing equipment needed to make the final products, solar panels and batteries themselves. And right now, we're seeing costs go up on those across the board. Unless you have more reliable revenue streams, like tax credits, for example, it's kind of hard to imagine new decisions to build that stuff out. Even things that are already being built are facing uncertainty, not only from the Trump tariffs, from other investigations into tariffs being run at the Department of Commerce and U.S. Trade Representative, but also on the fate of those tax credits, which is going to help guarantee their revenues in the long term.
Yeah, it was a great point, which leads us to the IRA, the Inflation Reduction Act, which, I mean, clearly President Trump hates that thing, but there is a lot of value in it through the tax credits and subsidies for companies that supposedly he is a fan of, like the oil industry, for example. When do you think we're going to know the fate of the IRA and those tax credits?
That's a great question, and I've been wondering it myself. Obviously, we're seeing a lot of wrangling between the House and Senate today about the top lines on their big budget bill they're going to try and pass by the end of the year. Obviously, the end of the year is when individual tax rates go up, and so that's one of the big forcing functions. You also are seeing the X date, the debt ceiling, occurring somewhere between July and maybe September, and that's going to be a point where there's going to be a lot of pressure to pass a big budget package, raise the debt ceiling, and probably also get some of this tax material done. But we've seen a lot of deadlines blown already for when we were allegedly going to get top-line packages, which are a precondition to figure out what's going to happen to what tax credit. And we don't even know that yet. At this point, we don't even know if they're going to use this particular budget gimmick called current policy, which would really reduce the pressures to cut more. And as they're trying to use that, we're seeing a lot of blowback from fiscal conservatives in both the Senate, but especially in the House. And so we'll see.
All right, Derek, I think a lot of folks in the marketplace are saying, we'll see. We're not sure what's going to happen here. So
how long can you put off a business decision with we'll see?
Yes, exactly. Derek Flakel, a lead U.S. policy analyst for BNEF, really a smart guy. So I was shocked to find that he went to the University of North Carolina. But every once in a while, somebody will pop out of that system and surprise you to the positive side. So, but I would think that would, these tariffs are going to be. It doesn't feel like any company can really escape the impact.
No.
I mean, because there's so many countries that are so broad-based, at least at this point.
And then it also just makes me wonder how the contracts are already set up with your suppliers, right? And who bears that commodity cost at the end of the day. And if it's going to be a solar company or a wind company, that's really rough. We saw that with offshore wind during COVID and that supply chain crunch. And that's basically what turned the tables against offshore wind economically. All right, coming up, Poonam Goyal, Bloomberg Intelligence on retail and tariffs. This is Bloomberg.
listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Welcome back. We have some breaking news for you. The Supreme Court backs President Trump for now in federal worker firing case. We will, of course, bring you any new updates as that headline crosses, but it looks like the Supreme Court is backing President Trump for now in federal worker firing case. All right, let's go back to tariffs and take a look at the broader market when it comes to retail. As you mentioned earlier, Nike just cannot seem to win on that. They were in China, then they diversified, and now those diversified countries are also getting hit with tariffs. Poonam Goyal, senior U.S. e-commerce and retail analyst at Bloomberg Intelligence, joins us now. Poonam, do we have any idea how some of these retailers, how much these retailers will have to increase their cost to consumers to make up for tariffs? Any modeling done on that yet?
Yeah, we're working on the numbers, and it seems just back of the envelope math that you're looking at about a 10% increase. But that depends, right? Because we think if the tariffs stay as they've been proposed on April 2nd, then it's likely that these brands will go back to the suppliers to have them help them absorb some of these costs. So it really depends on what you're modeling, if you're assuming that half the costs would be shared or not. But I think in general, with the tariffs in place right now, you're looking at least a 10% reduction in prices to really offset this 50% increase roughly in COGS to the U.S.
So they're gonna have to raise their price on the final product by 10%?
Potentially.
They might need to.
Okay,
yeah, it could be as high as 10%.
Okay. Are there is this kind of done at an industry level, Poonam, or is it company by company? Like, does Nike have more leverage over suppliers than, say, another company?
Yeah, I think Nike has the greatest scale of the athleisure company, so they definitely have more leverage than, for example, you would see at an Allbirds or some of the smaller footwear companies. But that said, you're talking about an average, a weighted average, 40% increase in tariffs. So it's a pretty sizable amount. That said, also think about the way Nike operates, right? Nike has a solid international arm. So when you look at their business, it's just the U.S. business that will be impacted. So when we look at the U.S. margins, there's going to be a sizable impact there. But when you put it all together against the total company, the impact does become less and it can be absorbed. That 10% is a global number that I gave you. If you want to just pair the cost exposure to US only, it would be significantly higher to offset those costs.
Wow, that's something. I'm already getting emails in my inbox from when I'm subscribed to some retailers. Already by Saturday morning, they were like, "We're going to increase our prices, etc." How much are we seeing of discounting now to get people still coming and inventory out their door now? Is that happening? Because it's happening in, say, Ford and Stellantis.
Yeah, I'd say, the discounting is happening as it should be happening, the regular cadence. I don't think retailers are adding more aggressive discounts to get the inventory out, to get more expensive inventory in the door. Nike, has a separate problem. They have had an inventory problem for some time now, and they are under the process of liquidating a lot of that unwanted inventory. So there are steep discounts happening at Nike. But for the companies that are bringing in new goods, I wouldn't expect them to discount significantly right now to get in the goods, especially if it's a staple product, right? One that doesn't change with the fashion or the weather cycle.
Right, that's fair.
What are we hearing from Amazon.com? What are they saying about it?
Good one.
So Amazon.com isn't saying anything yet. We'll see on earnings, but what are we saying is the question. Look, it's going to impact Amazon too. And really the impact comes more from the demand side. They are insulated when it comes to the retail site to some degree because they have 60% of their GMV coming from third-party sellers. But when these third-party sellers who likely have much less scale than Amazon, they're going to be passing along those price increases. And that means that demand could fall off and probably will fall off. So Amazon's marketplace could see falling demand as a whole. And not only that, right? When you think about demand falling, the advertising business, which has been growing at a rapid clip, we're going to see brands pull back advertising because 90% of Amazon's advertising business still comes from retail media.
Okay, so given your coverage universe, what company is best positioned to either pass on the cost increases or absorb them?
I think the companies or the sector that's best positioned is the resale sector. So you're talking about companies like...
No, keep going.
The consumer, when they're pressured, they're going to shift to value. And these are the places you find value. So I think these companies are largely more insulated than the rest because they offer value. And the resale companies, especially, if you're reselling something out of your wardrobe, you're not essentially paying the higher cost for it. So it's a great deal.
All right, Poonam, thank you so much for joining us. Poonam Goyal, Senior U.S. E-commerce and Retail Analyst, Bloomberg Intelligence, joining us from Princeton. So are you rushing out to shop?
Well, actually, no, but we're also trying to furnish this extension that we put on our house in Massachusetts. And I'm like, let's get this stuff now because it's going to be really tight. Like, we need a light, we need a couch, like stuff like that, where bigger bulk items that you're not going to replace frequently. I'm like, oh, we got to move fast.
Right. Okay. Well, I think it is. So it is affecting people's behavior at this point.
Yeah, but in terms of like my discretionary spend, because that feels a little less discretionary, I'm definitely not even touching anything at this point.
Right.
Because it's too scary.
Right, and that's what I think. I like to walk by on the walk to Penn Station today. I'll walk by the Apple Store on Fifth Avenue.
Oh, yeah, and?
See what, I'm going to do that on the way home. I'll see what's happening. I'll report back if I see anything of great interest.
There was reporting that there was kind of a rush to get in the store to buy the items now.
Yep.
We'll see how much legs that actually has.
John Tucker saying he's staying with his BlackBerry. He's not going to.
He's a BlackBerry? You're joking.
I don't know. That's what he says.
He's a flip phone. Come on now, people.
Exactly.
All right, that wraps it up for me and Paul on this Tuesday, on this dead cat bounce day. Can I say that, or is that too pessimistic? All right. Well, we are seeing the S&P still up by over 2%. Coming up next, you have Balance of Power with Joe Matthew. The Nasdaq up 2.6%, S&P up 2.4%, Dow Jones Industrial Average up 2.5%. This is Bloomberg.
This is CBS News on the Hour, sponsored by Steel.
I'm Steve Kathan. Congress tackles the Trump tariffs as a war of words with China escalates and stocks rebound.
What is the plan?
Senator Ron Wyden, the top Democrat on the Senate Finance Committee, decrying the economic fallout from President Trump's tariffs.
The U.S. economy has gone from the envy of the world to a laughingstock in less time than it took to finish March Madness.
U.S. Trade Representative Jamison Greer defended the tariff plan.
The president's strategy is already bearing fruit,
saying it's all about leveling the playing field.
Nearly 50 countries have approached me personally to discuss the president's new policy and explore how to achieve reciprocity.
Linda Kenyon, CBS News, the White House.
Well, CBS's Kelly O'Grady on the Wall Street situation.
The S&P 500, a two-day loss of over 10%. It's only happened 4 times in the history of the stock market. And you see over the 5 years after that, 100% return. So some people are looking at this and saying, good buying opportunity.
The Dow is up 927 right now. For the third time recently, the Pentagon has fired a senior female officer. CBS's Charlie D'Agata.
This comes from Chief Pentagon spokesman Sean Parnell. Secretary Hegseth has removed U.S. Navy Vice Admiral Shoshana Chatfield from her position as a U.S. representative to NATO's military committee due to a loss of confidence in her ability to lead. The Defense Department is grateful for her many years of service. That is where the statement ends.
Officials indicate the firing was apparently linked to comments she'd made supporting diversity. Supreme Court wants arguments by day's end in the case of a man who the administration admits was mistakenly deported to El Salvador. Attorney General Pam Bondi.
He is a known gang member. ICE testified he was a gang member, and we believe he should stay where he is.
The man's family insists he's not a gang member, and the Supreme Court has blocked an order requiring the administration to return thousands of federal employees to work. In Kentucky, the governor, Andy Beshear, leading the damage assessments after flooding.
We need people to wait this out. In many places, we've seen the rivers crest, and the flooding will be going down.
Well, CBS's Michael Wallace has the latest look at how we're feeling about EVs.
The Gallup poll shows the number of Americans open to buying an electric vehicle has dropped to 51%, down from 59% 2 years ago. Gallup says interest was already waning last year before Elon Musk's foray into politics sent Tesla sales plunging. Drivers were already concerned about a lack of charging stations and the driving range of EVs.
This is CBS News. Prince Harry in court today for the latest chapter of his legal challenge against a government decision about his personal security.
Morning, Harry! An in-person appearance by the Duke of Sussex in a London courtroom. Harry there to fight an earlier ruling that he and his family are not entitled to special police protection while in the UK. Harry's no longer a serving royal, but he argues he and his family are still under increased threat because of hostility aimed at him and his wife, Meghan. Harry's offer to reimburse the police for his protection has also been refused. Vicky Barker, CBS News, London.
For tonight's Mega Millions drawing, players' odds have slightly improved because of a hike in ticket prices from $2 to $5. It means jackpots should grow larger faster. Hours after Florida won the NCAA men's basketball title last night, odds makers gave final game runner-up Houston the best odds to win the tournament next year. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Tuesday edition as we count down to reciprocal tariffs to take effect at midnight. The markets today are rising on hopes for deals. This is Donald Trump's White House, after all, but maybe not China. Pointing now to a fight to the end. We're going to talk about the escalation with the world's second largest economy with Tom Orlik, chief economist at Bloomberg Economics. The Supreme Court just now backing President Trump on firing thousands of federal workers. The ruling just dropped. We'll have analysis from our political panel, along with Bloomberg Politics contributor Rick Davis, our Republican strategist, and Democratic strategist Kristen Hahn. Let's get to Wall Street. This is a different look with green on the screen for Charlie Pellet in New York. Charlie, what do you have for the markets?
Very different tone from this time yesterday, Joe Matthew. We've got the Dow, the S&P, NASDAQ all advancing right now. Your key takeaway at midday: we are off session highs, but still solid gains across the board. Right to the numbers, with the S&P now higher by 120, up 2.4%. Have been up as much as 4%. Dow Industrials up 968, up by 2.6%. NASDAQ Composite Index right now advancing by 2.5%. The 10-year 4.20%, with the 2-year currently yielding 3.78%. Stocks heading toward the biggest gain since November. We've got the price of gold up 0.4%. Spot gold above was trading above 3,000, just pulling back somewhat now at $29.95, still up $12. And West Texas Intermediate crude up 0.7%, 61.11 for a barrel of WTI. All about tariffs again today. As for market sentiment surrounding those tariffs, John Stoltzfus is chief investment strategist at Oppenheimer, and he was interviewed on Bloomberg Open Interest.
Everybody was in shock by the degree of the tariffs. I think everybody expected tariffs, but it was like a big difference from tariffs 101 at the administration's previous run in the White House, and now essentially tariffs 401, senior year, you know.
John Stoltzfus of Oppenheimer interviewed on Bloomberg Open Interest. Levi Strauss shares are trading lower now. We've got Levi Strauss down 3.2%. It is maintaining a full-year outlook that excludes the impact from sweeping U.S. tariffs. Joe brought us the headline moments ago. Worth repeating: U.S. Supreme Court blocking a judge's order to reinstate 16,000 federal workers in 6 government departments, granting President Trump's request. A topic we'll be exploring a lot more coming up on Balance of Power. And briefly, Fannie Mae firing over 100 employees for unethical conduct. Balance of Power continues right now. Back we go to Washington. Here he is, Joe Matthew.
All right, Charlie Pellet, there he is, live in New York. We'll get back to Charlie in a bit to check on these markets, see if we're holding positive here. As Charlie mentioned, we've seen better numbers today, but at last, some relief in a story that has dragged on days, and it's really just beginning. Let's be honest, not the market reaction, but the tariffs, the reciprocal tariffs go into effect at midnight tonight. And there are questions about, of course, their impact. There are questions about what deals, in fact, could be made as we look squarely at China today. President not making anyone happy in Beijing, now criticizing President Trump's threats to oppose this additional, remember yesterday around this time, 50% tariff, he said, reciprocating the reciprocal or something to that effect. China calls it blackmail. The U.S. threat to escalate tariffs on China, a mistake on top of a mistake. The country's commerce ministry said in a statement, China will never accept it if the U.S. insists on its own way. China, ready? Will fight to the end, unquote. That does not sound like a country that's about to make a deal. Though on Truth Social, President Trump says quite the opposite. China also wants to make a deal badly, he writes, referring to a deal in the works now with South Korea. But they don't know how to get it started, he says. We're waiting for their call. It will happen! Exclamation point. Earlier today, we heard from the chair of the Council of Economic Advisors at the White House, Stephen Myron, on Bloomberg surveillance, had this to say.
I think that depends on the Chinese. And, my advice to them would be that they have a lot more to lose than America does, that America holds the leverage, and everybody knows that, and therefore they should seek a détente, and they should offer concessions which would persuade the president to relent.
Seek a détente, as we do right now with the great Tom Orlik. There was one voice we wanted to get to today, as this really seems to focus around China at the moment, and that is the chief economist at Bloomberg Economics, Tom Orlik, who spent a good chunk of his career reporting in China and has a good sense of the psychology right now in Beijing. It's great to have you back, Tom.
Great to be here.
I have very simple questions for you on this, because we're actually talking about fairly simple ideas here. It's just been a very complicated reaction. What is the psychology when you hear terms like blackmail, fight to the end? How is Beijing interpreting this line from the White House when it comes to tariffs and more layers of tariffs?
So, of course, I don't have a window into China's leadership compound in Beijing, Joe. But I suspect if we could listen in on some of those conversations, China's leaders would probably be thinking, well, first, in Trump's first term, we engaged in an extensive negotiation over tariffs. We struck a deal. Yes, we didn't fully live up to the terms of those deal, but there was a COVID pandemic. Yeah. It's force majeure. Now, Trump's hitting us again, and with much higher tariffs. Is this a reasonable negotiating partner? If we negotiate in good faith once and do a deal, but that deal doesn't seem to have any traction, is there any point in us engaging in another negotiation? So I think that's probably part of the reason why we're seeing China hitting back rather than attempting to negotiate.
Interesting. Fight to the end is pretty stark. That sounds like we're not going to be reaching a deal anytime soon. Washington has a certain angle on China. It's a bipartisan affair, although this White House has a particular obsession with China when it comes to trade. Does it deserve that reputation?
So I think the idea that China has more to lose from this than the United States does is true. China has the trade surplus. The United States has the trade deficit. China is benefiting from catch-up on technology as U.S. firms move their factories and their expertise and their IP into the Chinese market. So China does have more to lose here, but China's not the only country that has something to lose in a trade war.
Sure.
Think about the U.S. firms, which have supply chains across China's east coast. Apple being a prominent example. Think about the U.S. consumers who've grown used to being able to pick up their clothes and their sneakers and their electronics at bargain basement prices. And think of the investors who've been making big bets on this relationship staying in place. There are some pretty important U.S. constituencies who are going to be losing out here.
Well, that's right. I mean, you could argue we wouldn't have Walmart without China, right? We wouldn't have cheap appliances without China. We'd be paying $3,000 for an iPhone without China, or some of the countries that have seen spillovers with Apple and so forth trying to relocate some manufacturing. But this is why people are talking about upending the world economic order. Without China, do we not pay more for everything?
Well, I think the president, if he were here in the studio, Joe, would say we'd also have more of a manufacturing industry if it weren't for China, right? So there's two sides to it for everybody.
But our labor is much more expensive.
The labor's much more expensive, but maybe it's worth paying more for our consumer goods, the White House believes, if that guarantees a future for the US manufacturing industry, a path to a stable middle-class life for US workers, and locks in our national security, right? Part of the argument here is not about economic efficiency and profits and market gains. It's about recognizing that China's a geopolitical rival. And do we want to be so dependent on a geopolitical rival for crucial inputs?
Sure. Well, when you talk about, high-end manufacturing, advanced manufacturing, I understand the drive there. When you're talking about making socks or sneakers, is that really what we want to bring back to this country? What would our economy look like?
I think that's a great question, Joe. So I used to live in China, and I visited some of the manufacturing centers. I've seen what it's like working in a factory that snaps together iPhones or sews up sports gear. Those are great jobs if you were working on a Chinese farm, because by going into the factory, you're doubling, tripling your income.
I see.
Are they a great job if you're a US worker? Do you want to work in those conditions? I think there are some questions there.
Well, I'm sure that's true. As a go forward, you look at this truth post from Donald Trump that I was reading. He seems to think that a deal with South Korea would unlock a deal with China. In fact, says their top team, South Korea, is on a plane heading to the U.S. and things are looking good. We're likewise dealing with many other countries, all of whom want to make a deal with the United States, and he points to China. Could some motion in the region, South Korea, Japan, in fact, unlock a deal with Beijing?
So I think there are some really important differences between South Korea and China when it comes to their relations with the United States. So the first one is South Korea is a U.S. ally, and South Korea relies on U.S. troops as part of the deterrent against North Korea. Exports are also incredibly important as a driver of South Korea's growth. They really can't do without export markets. So for security reasons, for economic reasons, for treaty reasons, you can understand why South Koreans might be wanting to get on a plane to Washington, D.C. None of those things apply to China. China is not a U.S. ally. China is in many respects a U.S. adversary. Exports are important for China's economy, but not nearly as important as domestic demand. So they take a hit here, but it's nothing like the size of the hit which South Korea would take. So it doesn't surprise me that some small, some mid-sized economies like South Korea should be picking up the phone. Does that mean China's going to be picking up the phone? I'm not holding my breath.
Wow. This has been a clinic with Tom Orlik. In our remaining moment here, Vietnam, accused of laundering Chinese goods through its country, and they end up here evading tariffs, essentially. Do tariffs stop that kind of behavior? Is Vietnam caught in the middle?
So think about the difference between Trump 1 and Trump 2. Trump 1, China got hit with tariffs. Vietnam didn't get hit with tariffs. Mexico didn't get hit with tariffs, right? That's a world where if you're a bit crafty, you can game the system,
Does this change that behavior?
Let's send the ship to Vietnam and then on to the US, and then we can dodge the tariffs. If everyone gets hit with tariffs, that game doesn't work anymore.
Boy, fascinating. I hope we can stay close with you on this, because the next couple of days, it sounds like will be critical here in the region. Tom Orlik, he's the chief economist at Bloomberg Economics for a reason. And great to have some time, Tom. Thank you so much. You're on the fastest show in politics. Nathan Dean is on the way in next from Bloomberg Intelligence. We have a lot more to talk about here on the Tuesday edition on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We are well off session highs, but still solid gains for the Dow, the S&P, and NASDAQ. The S&P has paired an advance at a 1 point, reached 4% right now. We're up 1.8% on the S&P. That is a gain of 88 points. Dow Industrials up 753 on the Dow. That is a gain of 2%. While the NASDAQ Composite Index up 273 now, up by about 1.7%. 10-year 4.19%. The 2-year currently yielding 3.76%. Gold up $14 the ounce. Spot gold up 0.5%. And West Texas Intermediate crude up 0.5%. WTI right now at 61 even for a barrel of West Texas Intermediate crude. Barrick Gold has provisionally approved plans to develop a vast copper and gold project in Pakistan and expects to sign a $3 billion funding package for the mine in the third quarter. First production scheduled for 2028. The company, by the way, will be changing its name to Barrick Mining to reflect the evolution of its business. Shares of Barrick up now by about 3%. Again, recapping, stocks higher. Key takeaway at this hour, well off session highs. S&P up 1.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash. Balance of Power continues right now. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Charlie Pellet, every day with us here on the fastest show in politics, Watching Wall Street on Bloomberg Radio, on the satellite radio, channel 121, and here on YouTube, where you can find us always by searching Bloomberg Business News Live. You know, things are weird when Ted Cruz and Elizabeth Warren are agreeing on things, and that's the moment we're at right now. When it comes to tariffs, yeah, strange bedfellows. As Ted Cruz criticizes President Trump's tariffs, talking about angels and demons. I fear we had the wrong characters cast in this little drama that we were creating here, our metaphorical drama at the White House, with the idea of Peter Navarro on one shoulder. And now Ted Cruz says Elon Musk is on the other, talking to Donald Trump about tariffs. It's not Scott Bessent. He's over the Treasury Department trying to get the 10-year yield lower. Elon Musk appealing directly, we now understand, to Donald Trump in advance of these tariffs taking effect tonight. Ted Cruz agreeing with him, praising Elon Musk, who hopes for a free trade zone between the U.S. and Europe, describing him as one of the angels on President Trump's shoulders, focused on jobs. Enter the senator from Massachusetts, Elizabeth Warren. Says all you have to do is exercise your own authority here on Capitol Hill, and we've got the tariffs taken care of. That is the purview of Congress. And she joined us last evening on the late edition of Balance of Power to make the point that simply passing a resolution, making it clear that this emergency that Donald Trump is referring to base the tariffs on is in fact not applicable here, and we'd be done. Is it that simple? Here's what Elizabeth Warren told us.
If Congress says, no, there is no emergency here, then Donald Trump loses his ability to put all of these tariffs in place. So we need to act. We need a Secretary of Treasury to do his job. The Democrats in Congress are ready to act. But if the Secretary of Treasury won't act, then we need the Republicans to step up, join the Democrats, and put a halt to these tariffs that are truly wrecking the worldwide economy.
Well, Senator, the president argues it's going to help the U.S. economy, that this is actually about bringing manufacturing back to the U.S., protecting American workers, and lowering trade deficits with other countries. Is there something fundamentally wrong with that objective, or it's simply the means that you take issue with?
The objective is exactly one that I have advanced for years. Of course, tariffs should be one of our tools in the toolbox of economic policy. And there are times when appropriately executed that we could use a tariff, for example, to onshore a specific supply chain or to help build up manufacturing that we want to have here in the United States. But you do that in a thoughtful, integrated way. Instead of a haphazard number around tariffs applied to everyone with no thought at all about whether or not those tariffs will actually have a negative impact on manufacturing that's currently going on or any manufacturing that anybody might try to get underway. Instead of actually supporting manufacturing and good jobs, the way Donald Trump has done this has been to scare off anybody from investing here in the United States in any kind of facility that takes years to be able to build and expand and get it going. He's forcing people to pull back. That is not good for American workers. It is not good for building jobs here in America. It is not good for onshoring our manufacturing. You need a thoughtful policy, and that is the opposite of what Donald Trump has offered.
The take from Elizabeth Warren, Democrat from Massachusetts, with us on the late edition of Balance of Power yesterday. Nonetheless, you can put the countdown clock up because the reciprocal tariffs, the president says, are taking effect at midnight. It's anyone's guess what happens after that, with now, according to the Treasury Secretary, 70 countries reaching out for negotiations. You know, we live here inside the terminal. If you're with us on YouTube, you see this backdrop. Just imagine us inside the terminal. It's almost like the severed floor. Only subscribers can get in. But Nathan Dean is our window to the world. He actually has the line to the outside. Clients who are calling in with questions, with concerns, with fears. There's only one guy you call here. Bloomberg Intelligence Senior U.S. Policy Analyst, if you want to really know what's happening. His name is Nathan Dean. It's great to see you, sir.
Thanks again for having me.
The phone's not stopped ringing. What is the real concern here? Markets are up today. I know we're feeling pretty good about things, but these tariffs are still kicking in at midnight. Nothing's really changed.
Yeah, and I think that's the biggest question we're getting from clients at the moment is, will President Trump reverse his policy? And I think if anybody's watching the Senate Finance Committee hearing this morning, you know, the answer is most likely not.
Mm-hmm.
You know, the U.S. Trade Representative Jamieson Greer was very adamant that this is a long-term plan. You know, the long-term gain for short-term pain is what he was saying. And so we do think these tariffs are going to go in, but we always put it with the asterisk of President Trump loves to negotiate. And even in that same committee hearing, you know, Ambassador Greer was saying, you know, we're working with 50 countries at the moment, 50 countries that we're working on trade deals. And I think that's what the market is really looking for. And we saw some, you know, lawmakers from the Republican side say that as well is, look, we need some sort of end game here. You need to tell us where this is going. What is the plan?
Mm-hmm.
And I think that plan starts with trade deals. So I wouldn't be surprised if these tariffs go into fruition, but I also wouldn't be surprised if you see a trade deal emerge over the next day or two, if not sooner.
Yeah, Jamieson Greer, USTR, sitting for a hearing, actually 2 days worth of hearings, first day in the Senate today. Let's listen to what he had to say about these countries we're dealing with, because it doesn't sound like we're about to make deals when you listen to Mr. Greer. Here we go.
The president has been clear, again, that he's not doing exemptions or exceptions in the near term. My own sense is, given the tariff differentials between Asia and Western Hemisphere, I think people can start making decisions based on that.
So when you hear no exemptions, why are we talking to 50 countries? Doesn't that sound like 50 exemptions coming?
Well, I mean, and I would also just put his comments in the greater context of, you know, the Trump administration, where, you know, he's not just the only person. And remember, it is President Trump at the end of the day who decides what the policy is, and there could be exemptions. You know, it's very hard for the U.S. Trade Representative to combat Apple and Tim Cook if Apple and Tim Cook were to go into the White House and ask for an exemption. Look, I'm not saying there will be exemptions, but it's just difficult when there's other things here to play.
Sure.
But I would also point out is that, you know, when it comes to these negotiations and so forth, there's going to be ramping up political pressure from the Republican side if we begin to see this impacted at the consumer level. Senator Tom Tillis, up for re-election in 2026, had some fairly strong language for Jamieson Greer in that hearing.
Yes.
And I'm paraphrasing here and said, who am I going to hurt if, you know, if this turns out wrong? You know, obviously, we don't think the Republicans are going to push back on the Trump agenda right now. But if this continues over the next few months, you may see more and more Republicans coming
We wrote that up. It's on the terminal. Tom Tillis. Whose throat do I get to choke if this turns out to be wrong? Republican, North Carolina. Is he just trying to get tape on himself to be caught saying this at the right time if this does, in fact, go south?
Yeah, I think a little bit of this is political. I mean, obviously, we saw bipartisan legislation last week from Senator Grassley. Iowa, farm state, very important for farmers and ranchers, teaming up with Senator Maria Cantwell, that would bring back the authority of a president to impose tariffs and put it back in the congressional side.
Yep.
Now, that's not going to go anywhere. I don't think the Republican leadership has any desire to touch it, and President Trump said that he was going to veto it. But, it did get a couple of bipartisan supporters, and I think if this trade war were to continue over the next few months, you could probably get a little bit more and more, because ultimately, and this is where we feel, is that we don't think President Trump is going to respond to Wall Street. Jameson Greer said the exact same thing today, that Wall Street's not going to dictate this outcome here. But if the consumer confidence levels and things for food and Apple electronics and other things begin to go up dramatically, then you potentially could see much more Republican pushback.
You start wondering if the real trade war is happening inside the White House now. This stuff between Peter Navarro and Elon Musk is wild. I can't even read the tweets on the air. That's how chippy that got this morning. So clearly, not everyone agrees, even inside the White House, inside the administration on this, making you wonder how fluid this whole conversation is and whether it complicates what's happening on Capitol Hill. The Speaker wants to get a vote by tomorrow, I understand, on this framework here, the budget plan that passed the Senate. Donald Trump takes to Truth Social again. The House must pass this budget resolution, and quickly. There are a lot of Republicans in the House who are not prepared to vote yes on this.
Yeah, and I wouldn't be surprised if this takes a little bit more time. I mean, tomorrow is pretty quick.
Ambitious?
Yeah, ambitious. That's the perfect word here. But what I would say is that I do think Speaker Johnson, and we also heard this from Representative Jim Jordan, when they're going around telling their members, look, this is just a blueprint. This is just to keep the process rolling.
Yes, right.
I think that's easy for Republicans to eventually grasp on and say, look, rather than incur President Trump's wrath right now, let's save it for when we actually have specifics. And so when things like SNAP, the Inflation Reduction Act, Medicaid, when those cuts potentially come up, then we'll actually fight. But for us, we think the process will continue. And ultimately, we think the Senate plan is the one that Congress is going to gear towards, because if the current baseline policy, meaning this $4.5 trillion in tax cuts, you effectively are free or the cost of zero, then you don't have to cut SNAP. You don't have to cut the IRA. You don't have to cut Medicaid. You can essentially just have to deal with deficit hawks at that point. And I think it's much easier for President Trump to go down to Capitol Hill and say, look, are you going to derail my plan? Because if so, let's talk about it now, and I'll make sure that Elon Musk and everybody else in the world is aware of it.
That's right, and he'll be tweeting, Elon, that is. They're actually going to be at the White House, a half an hour from now. There's a meeting, Republicans from Capitol Hill talking to Donald Trump about this, so let the public pressure begin. We're out of time. Has Wall Street ever thought worse of Washington than right now at this moment?
I'm not sure Wall Street has many views on, or they have many views on Washington.
Oh, yeah, not very good ones, though. I mean, the calls you're getting, people sound desperate, right? They're angry. They want to know what the problem is in the federal city.
All they want is clarity. That's it.
See if we can ever find it. With the help of Nathan Dean. Great to see you, as always. Bloomberg Intelligence, find him on the terminal and online. Senior U.S. policy analyst. If you're a client, give him a call. In the meantime, we'll assemble our panel. Rick Davis and Kristen Hahn are straight ahead with a Supreme Court ruling today and tariffs about to take effect at midnight. We've got a lot to talk about. The fastest show in politics on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher, but we are well off session highs right now. The stock rally is easing right now, looking at a 1% gain on the S&P 500 index. Have been up as much as 4%, but the S&P now advancing by 49 points to 5112, again up by 1%. The Dow up 524, advancing 1.4%. NASDAQ is up 0.8%, while the NASDAQ 100 index is advancing by 0.9%. The 10-year 4.17%, the 2-year 4.75%. Stocks advancing after Treasury Secretary Scott Bessent fueled hopes of trade deals. Spot gold, little changed, up under 0.2% right now, below 3,000 at 29.88 the ounce. West Texas Intermediate crude 60.56 a barrel, down 0.2%. Investors betting on quick action by the Federal Reserve to support U.S. business conditions may be off the mark. And with that story, here's Bloomberg's Vinny Del Giudice.
Fed watchers interviewed by Bloomberg News say they believe the central bank will wait until the impact of U.S. tariffs show up in official data to act, and that may take months. Fed officials have a track record of acting to stabilize markets and the American economy during times of crisis. At one point Monday, interest rate swaps implied about a 40% chance the Fed would act before its next meeting in May. Swaps traders have since stepped back. Follow the money. Vinny Del Giudice, Bloomberg Radio.
Eli Lilly shares are higher after Goldman Sachs upgraded the obesity drug maker to buy from neutral. Shares of Lilly up now by 1.3%. Hewlett-Packard Enterprise lower after being cut to equal weight from overweight at Morgan Stanley. Right now, HPE, Hewlett-Packard Enterprise down by 2.5%. Recapping, S&P up 0.9% for on-demand news. 24 hours a day. Subscribe to Bloomberg News now, wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you. Charlie, as we keep our eyes on the markets here, not exactly the most impressive run after a 1,000-point-plus rally first thing. The Dow's chopped that number in half. The S&P 500, as Charlie mentioned, certainly well off its highs as well, making a lot of people wonder if this is real, a dead cat bounce, or the biggest short squeeze in recent memory. And the reason why we're asking is because nothing has changed on the tariff front. There is apparently some optimism for deals being made. The White House says that countries are calling, 50 to 70 of them, depending on the cabinet secretary you hear from. But no deals have been made yet. They will take effect at midnight. Reciprocal tariffs, the baseline tariffs already in place. It's an important Supreme Court ruling that does not have to do with tariffs, aimed at the Trump administration today. In fact, this has been an interesting period of time here with another Supreme Court ruling that favors the administration. In fact, there have been a couple here, third time in less than a week. The Supremes have backed Donald Trump's actions. In this case, it has to do with firing federal workers. Doesn't that seem like a story from a long time ago? It's just a couple of weeks, in fact. There were 16,000 federal workers in 6 government departments. Many cases, probationary workers. They were just coming in. They hadn't gotten their tenure yet, if you will, and told to pack up their desks and leave, the door locked behind them. This went through a series of courts until it reached the highest, the Supreme Court now, and this happened just as we were taking air at the top of this hour, backing President Trump's campaign to fire tens of thousands of federal workers and blocking a judge's order here that required the administration to reinstate employees in those 6 agencies that I mentioned. This is where we start our conversation with our political panel today. Republican strategist Rick Davis is here, partner at Stone Court Capital, Bloomberg Politics contributor, alongside Democratic strategist Kristen Hahn, partner at Rock Solutions. It's great to see you both here. Rick, what does this tell you about not only this particular case? A lot of workers are not coming back to the office here in Washington. You might even be able to extrapolate that to suggest a lot more firings are coming. But also the Supreme Court once again aligning with Donald Trump. How do you rationalize all of this today?
Yeah, look, I mean, I think this is all core to the Donald Trump strategy, right? Which is not to go to Congress and ask their permission to do these things, but to do what you want to do as an executive branch of government and let the courts, the third branch of government, decide whether or not what you're doing is appropriate or not. And frankly, I mean, I think the strategy they have, which is, don't meddle in Congress, but keep things out of there and let the legal process determine these things, is kind of a 60-40 deal, right? If he gets 60% of these, judicial rulings in his favor, they're all going to be high-fiving in the Oval Office and thinking this is great stuff. We've just expanded the power of the presidency. So whether it's on this or immigration or tariffs, they're going to challenge the legal system, not the congressional mandate. So I think this is, this is a limited ruling. The judge of Maryland still has a procedure out to determine whether other full-time employees were or being fired inappropriately or illegally. But for the provisional workers, they're gone. I mean, this is a pretty solid ruling for them to be able to take these, 16,000 workers and send them home. So I think it's a big victory for the Trump administration's strategy around reducing the workforce in the federal government, and should open up other venues for them to try and find solutions to this on a legal basis. But look, I mean, they're going to win some, they're going to lose some, and at the end of the day, they are marching toward expanding the power of the executive branch of government.
That's for sure. To Rick's point, workers in 19 states and D.C. still must be kept on paid administrative leave at a larger set of agencies under that judge's order in a similar case in Maryland. Otherwise, everybody's going home here, Kristen, and I wonder your thoughts on this Supreme Court ruling. We'll get to the immigration ruling in a moment here, but in terms of expanding the executive's power, how many more layoffs could this lead to?
I mean, I think it could lead to a significant number of layoffs. I think Rick's exactly right. This administration has made the determination, I'm not saying they're wrong, saying that, we're not going to deal with Congress. We're going to go through the judicial system. So until Congress takes its power back and addresses some of these issues, because the issue is, when you've got a president coming in, issuing executive orders, the only way you really have long-term, stable policies that stand the test of time throughout multiple presidencies and different, Democrats and Republicans, people on both sides of the aisle who sit in that Oval Office, this is going to continue to happen, and we're just going to experience a lot of whiplash when it comes to not just the economy, but the workforce. And you're talking about a lot of these provisional workers too, who, it sounds like it's an easy thing, but you've got a lot of, this young blood, these new workers who are coming into the administration, into the federal government, who are, would seem to be a lot of the people that we want to invite. We want to have new people there. We want to make sure that, we're continuing to have smart, dedicated people who are taking these federal jobs. And so, it's a real detriment to that. But I think people are seeing the effects of this, particularly when you look at some things like the Veterans Affairs, administration. You're looking at things that are really upsetting people, and it manifested itself in a lot of these, these demonstrations that you saw over the weekend.
Well, for those of you who thought the courts would be a check on the president, the Supreme Court, at least, not so much here, in another ruling allowing President Trump to resume the deportations. Deportations under the Alien Enemies Act. Remember, this group of alleged Venezuelan gang members put on a plane to El Salvador brought us to this moment. The court granting an emergency request on a 5-4 vote. The flights will continue. There are some caveats. Here's Press Secretary Caroline Leavitt speaking earlier in the White House driveway.
What the ruling says is, as from yesterday forward, what we can do is we can still deport, but they are entitled to habeas in the court of confinement, which means all of these cases will go through Texas. There will be no more class actions. It will be two questions asked. Do you qualify under alien enemies, and are you a violent gang member? Are you a member of TDA? That's what will be asked.
All right, so there you go. They're going to be in Texas, and the court ruled detainees must have notice and a chance to make their case to a judge before deportation. That's pretty important, Rick. If that's the case, you're not loading a bunch of guys in shackles on airplanes. That's going to slow down this process significantly, won't it?
I don't know how significant it'll slow down. First of all, these investigations that Commissioner Holman has been describing, they build case files on these guys, and some of them as loose as what kind of tattoos they've got, and others have much more extensive jackets. And so the reality is, if it's just the Q&A, they're going to be able to do that pretty quickly. Look, I mean, we deported 25 people the other day. It's handfuls that the U.S. government can get their hands on with these folks. Some of them were pulling right out of prisons, so we know right where they are, and that'll be sort of the easy process going forward. It'll get harder when we have to track down gang members, but it does portend that what happens if they say, no, I'm not a gang member, like Mr. Garcia would have said out of Maryland, who was taken to a Salvadorian prison. He would have then been given, I guess, some more due process, which is what everyone has said he deserves. So I do think the Supreme Court has given Trump what he wants, which is license to deport under the Alien Enemies Act. And of course, that's the special powers that he has. But at the same time, expect some form of due process that, frankly, heretofore probably has not been followed.
Yeah, Rick mentions Abrego Garcia. By the way, that was Attorney General Pam Bondi. I want to be clear, not Press Secretary Caroline Leavitt in the White House driveway talking about this. Kristen, we've talked about Garcia's case. The administration admitted it should not have deported him to El Salvador. They called it an administrative mistake, still in jail, profiled on 60 Minutes last weekend. Chief Justice John Roberts has temporarily stayed a lower court's ruling here that demanded he be brought back by last night. Does he ever come home?
I mean, I would certainly hope so. I mean, you talk about due process and how we just shouldn't be treating American, people living in this country. So, hopefully, I mean, the Supreme Court certainly is giving Donald Trump what he wants, but there is some semblance of due process going forward. Something like this doesn't happen. But when you have somebody like Mr. Garcia who has been put through an ordeal like this, and people take a look at this and they just don't think it's fair, it's egregious. And so, I think we'll continue to see some of these issues, but, for the administration to be so callous as to say, we're just not going to we got it wrong, but we also don't have to bring him back. I think really rubbed people the wrong way. You put names and faces onto these stories, and it really resonates with people. And I keep talking about these demonstrations all over the country, where people have been rising up for any number of different reasons. And as we look towards the midterms next year, I think there are going to be serious repercussions for a lot of these, particularly, MAGA Republicans who are running in some of these more difficult districts. Because you're looking in states like Alabama, all 50 states across the country, and people is just not sitting well.
Rick, if you're President Trump now in a White House that's admitted it should not have deported this man to El Salvador, is there an opportunity to correct this? Welcome him back to the country? A photo opportunity? Or that just doesn't play well politically?
Well, it wouldn't surprise you to learn that there's a lot of different information coming out of the administration. Some officials have also indicated that he's a member of a criminal gang. And so I doubt if they're going to be hugging him anytime soon. It would redefine the hug a thug kind of slogan that we used to apply to New York's judicial system. So the reality is they're going to claim a mistake, but they're not going to try and clean it up. And until the court forces them to do so, I think their view is this is a problem that the Salvadorans have to figure out, not their problem now. And to some degree, since they don't have access to the individual today, they have to make a political decision as to whether they look pretty callous and have disregard for the man's rights if they don't find a way to try and get him back.
Rick Davis and Kristen Hahn will stay with us. Our great panel today has much more coming in the second hour of Balance of Power. Thanks to you both, as we'll also turn our attention to the big story at hand here today, and that's tariffs. We're trying to get to as many storylines as we can in our 2 hours here on the fastest show in politics, but boy, they keep coming. Watching Wall Street as well, and a relief rally. We'll see how long it lasts. We'll also compare notes with Charlie Pellet, his take on the markets, and a conversation next hour with Congressman Pat Fallon, the Republican from Texas, brings his view here on the tariff program that takes effect at midnight. I'm Joe Matthew in Washington. Glad you're along for the ride today. This is Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
It's the Tuesday edition as we count down to reciprocal tariffs taking effect at midnight and China pledging to fight to the end. Wouldn't know by watching Wall Street, though. I'm Joe Matthew alongside Kaylee Lines in Washington with a relief rally underway. Kaylee, hopes for deals to be announced by the White House, but nothing really has changed yet.
Well, no, certainly not. We know conversations are being had. We learned about negotiations with Japan yesterday. President Trump today says he's also talking with South Korea. But for another country in Asia, it seems that we will not be so lucky as to see a deal before midnight tonight, as China is suggesting they will not flinch. And this is a quote, when trouble comes our way. And the U.S. official now telling Bloomberg that the U.S. will be moving forward with what is a cumulative 104% tariff rate on China, effective 11 hours from now.
Yeah, midnight tonight is when all of this happens. You can cue the countdown clocks. Beijing responding, in fact, through China's Commerce Ministry. The U.S. threat to escalate tariffs on China, a mistake on top of a mistake, pledging to fight to the end.
Yeah, and the question is going to be, of course, what is the consequence of that fight, both here at home in China and elsewhere in the global economy? And that is why the U.S. Trade Representative Jamieson Greer has been facing some pretty tough questioning in the Senate Finance Committee today about the ramifications of these policies.
Some of those questions coming from Republicans now, more of them, as even Elon Musk begins to openly question the direction of this tariff program at odds with many others in the administration.
Peter Navarro specifically, they haven't had kind words for each other over the last few days. So we'll get into all of that this hour. Get the take from one Republican, Congressman Pat Fallon of Texas, will be joining us in just a few minutes. But first, let's check in on how the markets are digesting all of this. It is an up day, but not as much as we were, Charlie Pellet.
Indeed, Kaylee Lines, Joe Matthew talking about that midnight countdown clock. I tell you, I'm more concerned about the 4 p.m. close countdown clock as of now, because the gains that we saw earlier on, they are fading fast. Yes, very much in the green right now, looking at an advance of just about 0.4%. But keep in mind, during the early going, we had the S&P 500 index surging by 4%. Right now, we have got the S&P up 19 points, 5,082, where we stand up by 0.4%. Keep it locked into Bloomberg Television and Radio for the latest on these markets. The Dow up 300 points now, up by 0.8%. NASDAQ Composite Index up 20. That is a gain of 0.1%. The 10-year, 4.16%, with the 2-year currently yielding 3.74%. Gold, little changed on the day right now. I'm calling it unchanged at $29.83. We've got West Texas Intermediate crude at 60 even a barrel, down 1.1%. Bitcoin right now down by almost 2%, 77,365 on Bitcoin. Barclays is scrapping its targets for boosting the diversity of its staff across the U.S., becoming the latest Wall Street giant to pull back policies amid pressure from Donald Trump's administration. Shares of Barclays, the ADR, is up today by 1.5%. And for the first time in 15 years, ExxonMobil facing no shareholder proposals this proxy season. Again, recapping, S&P 500 index holding on to an advance of 0.5%, but the key takeaway at this hour, well off session highs. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet keeping us apprised of what was buying the dip action today, maybe less so now as we're right around session lows. Perhaps the optimism that existed this morning around potential trade deals with U.S. trading partners is not necessarily feeling as optimistic anymore, as the U.S. official is reporting once again, or telling Bloomberg, that those 104% tariffs on China will go into effect at midnight, in addition, of course, to the reciprocal tariffs on all of our other countries and partners that we trade with that had already been announced last week. Although this is no surprise, as President Trump did say yesterday from the Oval Office that there was not going to be a pause for breath here.
Would you be open to a pause in tariffs to allow for negotiations?
Well, we're not looking at that. We have many countries that are coming to negotiate deals with us, and they're going to be fair deals. And in certain cases, they're going to be paying substantial tariffs. They don't want to be in the hands of the Chinese. And the Chinese have turned out to be really not very good at that. People that are with us, they're with us. But we cannot be taken advantage of any longer.
Although, as the president wrote on Truth Social, while referring to impending talks and a great call, as he called it, with the acting president of South Korea, he went on to talk about China. Also wants to make a deal badly, he says, but they don't know how to get it started. We are waiting for their call. It will happen. In the meantime, as Kaylee mentioned, 104% combined tariffs set to take effect on China, and that's where we start our report from Bloomberg's Tyler Kendall, who joins us live from the White House. Tyler?
Yeah, hey, Joe. So these tariffs expected to go into effect, those additional tariffs, midnight tonight. We have to keep in mind that President Trump had put forward a deadline of today for China to pull back on its planned retaliation that we are expecting to go into effect on April 10th. 34% levy against U.S. imports. We also have to keep in mind that the planned China retaliation includes some targeted action, including export controls against several critical minerals, as well as targeting some key U.S. agriculture sectors. We have to keep that in mind because that's going to keep coming up in these conversations, since we know that that is a pressure point for this White House. Reports indicating that senior administration officials are already starting to think of ways how they could potentially bail out farmers down the road if there is a significant loss when it comes to the U.S. agricultural sector. Also, as we look forward to what it could potentially take to make a deal, we do know from a statement earlier today, China saying that they would prefer a dialogue to resolve their disputes, but they are vowing to fight this until the end. You mentioned there that President Trump kind of reached out there of saying that he is waiting for the call from China, as we learned that some of these other countries are starting to call in, including South Korea and Japan.
Well, and I'm assuming we'll hear more from the White House just moments from now, Tyler, as the White House Press Secretary Caroline Leavitt is scheduled to hold a briefing this hour. But President Trump also has an EO signing on his agenda later this afternoon. What can we expect to hear from him then?
Yeah, so Kaylee, this executive order that he's expected to sign has to deal with American energy. According to our reporting, he's expected to try to designate coal as a critical mineral. We were just talking about critical minerals there, as well as try to boost mining of coal in the U.S. And Bloomberg News reporting that this is indicative of how this White House is trying to boost energy production when it comes to artificial intelligence, as well as data centers. Yesterday, as you know, President Trump in the Oval Office saying that he thinks the U.S. is leading the AI race with China, but one of the important parts to keeping that edge will be this electricity production.
All right, Bloomberg's Tyler Kendall live at the White House. Thank you so much. Now, as for how all of this is feeding into financial markets, we just got the run through from Charlie. Again, we are well off the highs of the session. What was at one point a 4% gain on the S&P 500 is now a gain of just 0.5%. And we want to get more on that now with Bloomberg cross-asset reporter Emily Grafeo. So, Emily, what was, it seemed, a buy the dip rally is fading pretty fast.
Yeah, we were experiencing our highest intraday jump in the stock market since November 2022, and that's fading. I think, Kaylee, the rally is a little sensitive right now. People kind of came in this morning and were buying. It's faded a bit, but really the word on Wall Street is that we just don't know how this is going to end. We don't know where to go next, but one thing is certain, and that is that volatility is high. When you look at the dip buying impulse, I write about ETFs, so the data comes in like day after day. So we don't know the buying, at least for today, but we did see yesterday that impetus still to buy the dip. You look at the ETF TQQQ. This goes 3 times leverage on the NASDAQ 100. It had its biggest inflow ever yesterday, $1.5 billion into that fund. It could be traders. It could be people trying to actually buy shares to short the fund. So it's hard to really glean a signal out of it, but we do know that that impetus, at least to buy the rally yesterday or the dip yesterday, was still kind of showing up in the ETF flows.
Emily, thank you so much. Emily Grafeo, Bloomberg's cross-asset reporter, with her eyes on the markets. We'll see where we're at by the time we're done here at 2 o'clock. Remembering we had sizable gains when the opening bell rang this morning, as Kaylee mentions, might be petering out a little bit here based on some of the news flow that we've been following. Congressman Pat Fallon, the Republican from Texas's 4th District, is watching all of this happen and joins us now live on Bloomberg TV and radio. Congressman, it's great to have you. We've been hearing a lot of concern from both sides of the aisle, certainly in this hearing this morning with the U.S. Trade Representative, about the impact of these tariffs and exactly what's going to happen after midnight tonight. Are you hearing a coherent message from the White House that you can support? Is the president going to make the country stronger at midnight tonight?
Absolutely, and I am hearing a coherent message, and that is that there are I just was with leadership, and they had just gotten off the phone with President Trump, and he said to them there was about 70 countries that have reached out to the administration and want to negotiate trade deals. So what it looks like it's shaping up, and I'm not going to panic at all, and I don't think anybody should, because things like this, days and weeks, they should be measured in days and weeks. They should be measured in months and years. And I do think that we're going to see trade deals, really a cascade of them, that will strengthen this country, will put us in a better position, and I think the economy will show more strength.
Well, Congressman, as we consider that kind of time horizon, what are you telling your constituents about what they should be bracing for in the days and weeks ahead in the more short term compared to what you just described as the months and years ahead? Because this is consistently how we see it framed by this administration, short-term pain for longer-term gain.
I think really what you're asking, Kaylee, is how short-term is short-term? Is it going to be a few weeks?
Exactly.
Is it going to be a few months, et cetera? Don't have the crystal ball, but what I suspect will happen is that once we see these major countries making deals, like Vietnam, that's a sizable deal. Obviously, the EU would be seismic. And then the markets will see, okay, we're seeing some steady stability, we're seeing some achievement, and you're going to see a slow isolation of China. And then it's up to them to make a deal. I know that they're going to have to save face and whatnot, but this trade war will hurt them way more than it will hurt us. We will experience some pain, no doubt, but they will experience it tenfold. So it behooves them to come to the table as well, and I think you'll see that. You just won't see it immediately for really, I think, egotistical reasons. When you deal with an authoritarian regime, that's juiced into the equation.
Well, they do like to buy some of our stuff as well, but we buy a lot more of theirs, Congressman. The U.S.-China Business Council finds that the 4th Congressional District, your district alone, exported $510 million worth of goods to China in the most recent year we have here, 2022. What could that mean for your local economy if those exports begin to slow?
The 4th Congressional District in Texas as a whole has a very dynamic economy, Joe, and if we were our own country, we'd be the 8th largest economy in the world. So 510 million, while that's a big number, what our constituents are rooting for America and America's success. Unlike some other networks like CNN that was seemingly rooting for China, was an article I read yesterday.
Well, I wonder, sir, if more help will be required for their success if these tariffs indeed go into effect and last for some period of time. We obviously saw in the first Trump administration that farmers were offered subsidies. I wonder if you expect to see that again. Bloomberg has reported that Republican colleagues of yours are considering looking at potentially a tax credit for exporters. Would you be supportive of those kinds of measures? And is it worth it to spend more in order to raise revenue?
Yeah, I think it's too early to talk about that or really seriously consider it, but we need to strategically decouple from China. Obviously, we're going to trade with them even when this is over, but the over-reliance that we've had on our number one geopolitical competitor is alarming, and really COVID should have woken us up to that reality. And we're far too reliant on the Chinese right now, and this, I think, is going to act as a wonderful instrument to start that decoupling, and that's going to make us stronger. And we need to have more diverse trading partners.
We're watching Wall Street turn negative here. We just want to mention, after starting with a powerful rally this morning, a relief rally that seemed to be defying gravity considering the news that hasn't changed too much around tariffs. As the Congressman mentioned, there was some hope for deals to emerge from these reciprocal tariffs, but hope appears to be fading on Wall Street. The S&P 500 turning negative. It's now up actually just by 4 points. The NASDAQ 100 is down by 24 points here as we make our way through the midday in trading. Congressman, are you hearing from constituents? Are they hitting the constituent line to ask about their retirement accounts?
There's a few folks, but it hasn't been really all that sizable yet, because again, if you're an investor in the markets, you know that what happens over days shouldn't really concern you. That's more of a weeks and months. So let's see what happens 2 months from now. Will the markets, I personally think that the markets will be much higher in a few months. And I'm maybe an eternal optimist, but I do think that this isn't going to last. This is just very, very short term.
Well, speaking of short term, as you look ahead 2 months, Congressman, I wonder what's going to happen in your chamber in just the next 2 days, because the Speaker would like to see a vote on the Senate-passed budget blueprint, which I know a number of your colleagues in the House have taken issue with. Is it your expectation that the votes are actually there for that to pass this week and for reconciliation to advance?
Well, that's a great question. We had a conference this morning, and it's going to be a challenge, to be very honest. I don't know if we're going to have the votes. I hope we do, because all this is doing is, this is, like you said, it's a blueprint to move the process forward. There will be then a final product. I personally would not vote for a final product that doesn't have significant cuts in spending, because we need to work toward balancing a budget moving forward, considering we have a $36 trillion debt and climbing. We need to take our fiscal responsibility seriously, not just on the campaign trail, but actually here in Washington, D.C. So I don't know exactly what's going to happen. We'll see. But if we don't, then we're going to have to work together, and we have to extend the Trump tax cuts. We have to have a plan in place to go, and be a bit more disciplined fiscally. And so I hope that we can get there.
The president writing on Truth Social last night, the House must pass this budget resolution, and quickly with the caps lock on. Congressman, will this actually get out of the Rules Committee to get to the floor? That might be the most important hurdle here, considering some of the Republicans who are concerned about the level of cuts in this blueprint.
Well, Joe, what we don't want to do is take it to the floor and fail. So we really have to count the votes. We have to do the whip counts before that happens. And again, I hope that it will. We're going to be having dinner with President Trump tonight, and we'll be talking about that. And if we have it, we'll go forward. But if not, there's always going to be a third way. It's not binary with it's either pass or fail. There are going to be third ways to get to that success, but we have to do it together. We have to have currently 217 votes to move it forward. So again, I'm praying that we can do it.
And finally, Congressman, we just have 2 minutes left here, but given your seats on the Intelligence and Armed Services Committees, I wonder what you make of the other news we got from the president yesterday about direct talks with Iran to take place on Saturday. What is your expectation or your hope that conversations will be able to yield?
I very rarely am going to oppose having a conversation with another nation state, because, President Trump tried that in his first term with North Korea. Really nothing came of it, but I really applauded the effort, because why not talk? And as President Reagan said, trust but verify. So even if you came to some accord, you have to make sure that their actions match their rhetoric and the pages that they signed in any kind of an agreement or treaty. So I do applaud talking, but Iran's on the run. They are not strong right now. Israel has decimated Hezbollah and decimated Hamas, and even President Trump with his latest strike on the Houthis, in Iran losing Syria, they're on their heels. So we'll see. It could just be all rhetoric. It could be for show, but we'll find out.
Indeed, we will. Congressman, thank you so much for your time this afternoon. Congressman Pat Fallon, Republican, representing Texas's 4th District, live from Capitol Hill with us here on Balance of Power on Bloomberg TV and radio, as we track what's happening in politics and how it coincides with what's happening in the markets. A brief dip lower on the S&P 500 after a rally of as much as 4%. Right now we're up just shy, or just around 20 points, up 0.4% on the S&P.
VIX barely budging, and Bitcoin is lower today. It's hard to make sense of all of this, but we'll continue with our political panel coming up next here on Balance of Power. Looks like we're getting another bid under this market, Kaylee.
Yeah, we'll see if it lasts. This is Bloomberg TV and radio.
everyone on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index now little changed on the day. The NASDAQ Composite Index has just turned negative. NASDAQ now down by 6. Little change, down less than 0.1%, but red on the screen for NASDAQ. The NASDAQ 100 index is holding on to an advance of 0.2%. Keeping it all in context, S&P now little changed, up 5, up by 0.1%, but at the best level of the day in the early going, S&P was up by 4%. The Dow up 179, up by 0.5%. The Russell 2000 index is now down 1.6%. The 10-year 4.20% with the 2-year 3.74%. Spot gold is lower by $2, little change now at $29.81 the ounce. And West Texas Intermediate crude below $60 a barrel, $59.73 on WTI, down now by 1.6%. Walgreens Boots Alliance is reporting quarterly profit that exceeded Wall Street expectations, making it a strong performance in what's likely to be one of its last quarters as a public company. Last month, the chain agreed to be bought by Sycamore Partners for $10 billion in a deal that's expected to close by the end of this year. Again, Walgreens Boots Alliance shares are trading lower, down now by 1.1%. Recapping, S&P 500 index just turning negative again, down now by 0.5 point. NASDAQ also lower by 0.2%. Keep it locked into Bloomberg Television and radio for the latest on these markets. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Many thanks to Charlie Pellet, watching Wall Street for us every day here on Balance of Power. Thank you for being with us on the Tuesday edition here on Bloomberg TV and radio. The anxiety that's being felt over tariffs on Wall Street is being felt here in Washington as well. And not only by Democrats, most Republicans on Capitol Hill have been behind the Trump administration on this. Most who you hear join us on Balance of Power speak to the short-term pain, long-term gain aspects of this. But there are some Republicans now who are beginning to vocalize their worries. Senator Ted Cruz is one of them, referring to Elon Musk as the angel on President Trump's shoulder. Tom Tillis, the Republican from North Carolina, made his views clear today, unless he was just, Kaylee, trying to get tape on himself in case the tariffs don't work out.
He is up for re-election next year.
We can play this back during a campaign. This was part of testimony from the U.S. Trade Representative Jameson Greer before the Senate Finance Committee. Listen to Senator Tillis.
In this scenario, the decision maker who decided the a la prima approach, who has obviously had to have spent time anticipating what we saw in the markets and some of the pushback, I'm assuming this all got gamed out because it's a novel approach. It needed to be thought out. Whose throat do I get to choke if this proves to be wrong?
Yes, that was the quote. Whose throat do I
that?
get to choke? Well, Jameson Greer kind of reluctantly said, you can always look at me or talk to me about that, sir, as the USTR. But we want to talk to our political panel about this. Rick Davis is with us, Bloomberg Politics contributor and Republican strategist, partner at Stone Court Capital, alongside Kristen Hahn today, partner at Rock Solutions and Democratic strategist. Rick, are we about to see some serious Republican on Republican violence, either metaphorically or physically speaking, over this tariff issue?
Yeah, I definitely think we're entering the era where there's very little anxiety between Democrats and Republicans, because Republicans basically see this as a win or lose proposition amongst themselves. So now the question is, between Congress and the administration, who's going to pay, right? I mean, Donald Trump's the decision maker. There's no question that there's not a policy-making apparatus that includes the trade rep that's going to decide these tariffs. So he can do all the damage he wants, but that's like, hitting the fodder, not the target. And so the reality is, I think you're already starting to see cracks in the congressional armor around Donald Trump. And there's legislation in the Senate that is bipartisan that would take away some of the leverage that Donald Trump has to do these tariffs. And it'll be interesting to see how far that goes, because that echoes the Senator Tillis's comments, which is, if I trust you and don't vote for that measure and take it back into my own control, who's going to pay the price when I go down in my Senate seat?
Yeah. How does this play out then, Kristen? I'm guessing you're kind of enjoying watching this conversation, Senator Ted Cruz says there are angels and demons vying for influence in the White House. Picture Peter Navarro on one shoulder, Elon Musk on the other. Apparently, Musk did directly appeal to President Trump over the weekend to keep the reciprocal tariffs from taking effect. It will impact his business at Tesla. Peter Navarro says he's not really a car manufacturer. He's an auto assembler. How does all of this end? Where's the rupture in the administration or in the party that you see coming?
I mean, that's a very good question, actually. We're only 4 months into this administration, if that. And you're kind of seeing, I mean, you look at what's happening, the markets are just one of the things that's happening. But, I think that the president has been Teflon for so long, and Republicans in the House and the Senate, for the most part, have stood behind him. And like you mentioned earlier, the talking point that everybody's using right now is that, this is a major disruptive policy. We knew that going in. We knew that there was going to be pain. I think he was saying you've got to operate or give medicine or something. If you break it, you bought it. But you're starting to see these certain cracks. And I think a lot of people are sitting there holding their breath, hoping that the markets rally and that, the tariffs had their Donald Trump's intended effect. But I think that there's going to be a lot of pain. And you're looking at, a country like China. And what is the impact of these tariffs going to be on, people across this country and their buying ability to buy goods and services? When, like it or not, we rely on a lot of cheaper goods that come in from China. So, people hired Donald Trump because they were being squeezed by inflation. They couldn't buy things at the grocery store. The cost of goods was far too high. But if he does stuff to make it worse, I think that you will see repercussions at the ballot box.
I want to go back, Rick, to this idea of the angel of Elon Musk and the demon of Peter Navarro, because they both clearly see each other as villains in this story if you judge their public comments about each other, including Elon Musk overnight saying Navarro is truly a moron. That is a direct quote, also calling him, quote, dumber than a sack of bricks. The White House press secretary, Caroline Leavitt, who is briefing reporters right now, was asked about this, and she says, boys will be boys, and we will let their public sparring continue. Obviously, Rick, these are grown men we are talking about in their 50s and 70s, respectively, but their public sparring, to allow it to continue, does that not undermine the messaging of this administration?
Yeah, for sure. I mean, this is just a cloud that kind of sits over the administration's effort to define what they're trying to accomplish on tariffs. And if it weren't such a dramatic impact, we've seen what's happened to the market since the president has embarked upon his tariff policy. You don't need a lot of noise in the system that's going to rankle those markets. And so the fact that one of the top advisors to the president, Elon Musk, who is also the world's wealthiest man and has 219 million followers on his platform X, is somehow picking a fight with the top trade policy person in the White House is crazy. I mean, no other administration would tolerate that. Either they'd be told to shut up and go to their neutral corners, or somebody would win that fight and the other person would be out of the administration. And so the fact that this is sort of gumming up what is already a challenging message narrative for the administration doesn't help the markets either. And so what we see today, after some optimism that there are going to be deals cut with places like Japan and maybe Israel, the prime minister was in the Oval Office yesterday talking about some of these things, has been overshadowed by the boys will be boys frat party fight. And China basically saying, as our largest trading partner, stick it. So, I mean, I don't know which narrative you like, but neither one of those are going to fit a productive political scenario.
Kristen, Kaylee mentioned some of the nicer things that Elon Musk has said about Peter Navarro on Twitter. A couple of his posts were deleted, in fact, because they were so offensive. There's one that I could not read on the air here if I wanted to keep my job. Is this how it ends with Elon Musk? Peter Navarro went to jail, I think we could say, for Donald Trump. I mean, that's pretty loyal when it comes down to who's going to survive this fight?
Yeah, I mean, I think when you talk about Donald Trump, I mean, we've always talked about how he kind of runs, whether it's his business or the White House, like a mob boss. Dedication and loyalty seem to be the number one thing he cares about. So we'll see who comes out of this fight on top. But I totally agree with Rick Scott. I didn't think there was anything that could surprise me about this administration. But when you see two of the top advisors to the president of the United States publicly fighting, it's not good for anybody, particularly not their messaging going forward. So I guess we'll have to see this. What did they call it? A locker room? Maybe that was a previous thing they called locker room talk, or boys will be boys. That's just not a good answer. And frankly, they should come up with a better solution to this little spat.
Well, Caroline Levitt has had to answer more questions than just about this little spat. She was talking about specifically tariffs and U.S. manufacturing being brought back by them. She suggested that the president thinks the U.S. has the workforce to make iPhones. Rick, this is, of course, as we consider the supply chains of companies like Apple who left China or started to diversify away from China to other countries that are also now facing incredibly high interest rates. Even if we had the labor supply, do we have the desire on the part of the American workforce to work in that kind of manufacturing? Is there not a reason why it was outsourced to other countries aside from just the cheapness of that labor?
Yeah. Look, you're almost at full employment in the United States. So where you're finding thousands of workers who are going to go into a factory and assemble iPhones and things like that, it would be a challenge. And the fact is that none of those things can happen overnight. I think conservatively, they're talking years to be able to recreate the manufacturing and forget about the supply chain, because the supply chain, that all the parts and materials and technology that goes into an iPhone is also built in China. And so where's that supply chain going to come from? Because we're ill-equipped to start manufacturing the kind of components that go into these kinds of units. Why? Because they're done much cheaper in other markets. So I think a lot of this talk about how we're going to bring back manufacturing in the United States needs to be accompanied with what kind of manufacturing. Are we really going to become the low-cost producer in the world? Of course not. We don't want to be, because we aspire to better things for workers in America than, a sweatshop. So, the reality is, when you really open up the Pandora's box on this kind of rhetoric, you really wonder what it is we're trying to accomplish. Good jobs, high-paying jobs, technical jobs that would encourage people to get better educations. Yes, those are the things we're looking for here in the U.S.
Rick Davis, Stone Court Capital, Kristen Hahn, Rock Solutions, our great panel. As Howard Lutnick said on CBS Sunday Morning, the army of millions of human beings screwing in little screws to make iPhones, Kaylee, the kind of thing that's going to come to America. We'll see about that. Much more ahead here on Bloomberg. Stay with us on Balance of Power, live from Washington.
1:40 on Wall Street. We do check markets all day long here at Bloomberg. Sentiment remains fragile with the S&P 500 index back in the green, up by 0.2%. Most of today's gains have evaporated. At one point, we had the S&P up roughly 4%. Right now, looking at an advance of 0.2%. Just moments ago, NASDAQ in the red, swinging between gains and losses. Right now, we've got NASDAQ up 10, up by less than 0.1%. The Dow is holding on to a gain of 230 points now, up by 0.6%. Again, the S&P 500 index, keeping it all in context, up by 0.3%. The 10-year 4.22%, with the 2-year 3.73%. Gold down $4 the ounce, down 0.1%. And West Texas Intermediate crude 60.05 a barrel. Right now, WTI down by 1%. Bitcoin lower by 2.3%. Bitcoin 77,090 on Bitcoin. So again, recapping, traders keeping an eye on the latest tariff developments. S&P 500 index up 17, up by 0.3%. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
Many thanks, Charlie Pellet, live from New York here on Balance of Power. We're live from Washington as we cover politics in advance of reciprocal tariffs taking effect at midnight, with the volatility that we've experienced today and the concern that many have about the global economic impact that these reciprocal tariffs will have on top of the baseline tariffs. Bloomberg's David Weston sat down to discuss it earlier today with the former Treasury Secretary. This was earlier today on Bloomberg, Larry Summers. Let's listen.
I feel better anytime instability seems to be calming, but be not confused. There's only one reason why instability is being reduced, and that is there's a growing hope in markets that a larger part of these policies are going to prove transitory and reversible. This does not reflect any kind of market endorsement of the approach that the president has followed. Rather, it reflects a judgment that the president might recognize the reality that markets are telling him about, that many of his advisors are telling him about, that corporate CEOs across the country are articulating, that this kind of wholesale tariff policy is simply bad for economic performance. We're seeing some signs that the administration may recognize that.
We're seeing signs, but do we have a better sense of the goals and the process today than we got from the Rose Garden last Wednesday?
I don't think so. I think this is fundamentally a improvisational effort. You could tell that when you knew that there was a policy based on tariff reciprocity that didn't use any data on the tariffs of other countries in figuring out how to reciprocate. You could tell that from the blatant contradictions between what Presidential Advisor Navarro was saying and Presidential Advisor Treasury Secretary Scott Bessent was saying. You could tell that from the degree of division between close outside advisor Elon Musk and many members of the president's economic team. This is a policy, it's a hugely consequential policy, but by all appearances, it's being improvised on a daily basis, and that's creating huge uncertainty. But it's only uncertain, there's only uncertainty if things go in both directions. And today happened to be a day when things moved in a positive direction. I hope that the moves to back off these policies can continue, but we'll have to see. I suspect we're going to have volatile markets for some time to come, and no one can know, but my judgment is that I'd be surprised if the bottom is yet in with respect to this phase and markets.
How bad could it get?
Oh, I think the likelihood, I think it's more likely than not that we're going to have a recession. And in the context of a recession, we'll see an extra 2 million people be unemployed. We'll see losses in household income that are $5,000 a family or more. We're very likely in the context of a recession to see markets reach levels significantly below their current levels. So I think we could be looking for fairly serious economic problems.
That was the former U.S. Treasury Secretary Larry Summers in conversation with Bloomberg Wall Street Week host David Weston earlier today. Meantime, the current Treasury Secretary has just hit us with a fresh post on X about these tariffs, Joe. Scott Bessent saying President Trump's end goal is bringing back jobs and manufacturing to the United States, raising wages, increasing revenue, and reviving the American dream. He goes on to say that what they're trying to do is, quote, right the wrongs of long-standing global trade imbalances.
That's right. Different than raising revenue, for instance, to pay for tax cuts, as we seem to get together every day here, Kaylee, to figure out which one it is. What is the drive? And maybe it's a combination they're in. Do baseline tariffs stay in place, generating that 10% to help fill coffers in the U.S., and we use reciprocal for negotiations? All of these questions are unanswered.
Well, and there are questions that we have as well for Greta Peisch, partner at Wiley Ryan, former general counsel at the Office of the U.S. Trade Representative, who is joining us now here on Bloomberg TV and radio. Greta, when we consider the prospects of this being a revenue raiser, if at least in part that is what the objective is here, to what extent will any revenue gains be offset by just lower trade between the U.S. and its trading partners? Because we've heard from many economic minds that it is expected that the actual volume of that trade will go down, and that impacts the overall number you could bring in, right?
Yes, that's exactly right. As you raise the tariff, you would expect demand for imports to go down. And in fact, that's what the administration says, that in part that's what they want to do by creating incentives to move manufacturing here. So if your primary objective is revenue raising, what you may want to do is have a relatively lower tariff on a broader base of imports, which sort of sounds like that 10% base that they've already put in place that came into effect on Saturday. Higher tariffs, of course, are going to drive import volumes down and ultimately lead to less revenue collection.
We heard from the U.S. Trade Representative Jamieson Greer in testimony earlier today. He's got 2 days' worth today in the Senate, where he spoke with Senator Bennett, Michael Bennett of Colorado, about the impact of these tariffs. Let's listen.
What is it the American people should expect to be able to suffer as a result in terms of rising prices?
I think there's not really a one-to-one on tariffs and price effects, and so many things go into price. I know you think I'm probably like dodging and weaving on this, but I'm looking at data.
I know you're smart enough to know that the likelihood is that prices are going to go up for the American people as a result of the tariffs.
Was he dodging and weaving there? I'm trying to understand where the administration is on this, because we hear a lot about a one-time impact. Wall Street's factoring in, it looks like, a lot worse.
Well, you know, it isn't so much a dodge and weave in the fact that, you know, inflation has a lot of components that go into it. It's a macroeconomic indicator that isn't just driven by tariffs. And in fact, often it's something else going on, the labor market, supply, demand. In the past, you know, we haven't seen tariffs drive inflation. Even in the first Trump administration, when tariffs went up quite a bit on China, and that felt like a lot at the time. Of course, now what we're talking about is much bigger. That action did not cause inflation or other tariffs that have been put in place in the Trump administration and other administrations. We just don't usually think of tariffs as being an inflation driver. This is a big experiment of a much larger trade action than we've ever seen. So in part, we'll have to wait and see and how it interacts with other parts of the economy. But I think his comment is valid in the sense of looking back at how we usually think about tariffs and their magnitude and their impact on the economy, it is a bit complicated as to how they get baked into prices and what their effect is.
Well, I'd like to talk about one specific magnitude of tariffs on one of our trading partners, Greta, and that is China, because in addition to the 20% tariffs that have already been put into place to combat what the White House argues is the trade of fentanyl, and 34% in terms of the reciprocal tariff rate it was already intending to impose at midnight tonight. The White House has confirmed today it is going ahead with that additional 50% tariff on Chinese goods, bringing the effective rate to 104%. With a level that high, Greta, what is realistically going to happen with the trade relationship between the U.S. and China and the flow of goods?
Well, like all of these tariffs, I think the big question is, what is the end game? What is the administration attempting to achieve with these tariffs? And it may be different, and likely is a bit different with respect to China than with respect to other trading partners. But I think a question here is this about decoupling from China? Is it to increase leverage to have a negotiation, which it seems like at times the president may have alluded to? Those are very different outcomes. And China is going to have its own, as every trading partner has, its own prerogatives and its own domestic economic and political imperatives that it has to answer to. And so, I think at this point, we don't fully understand what the administration's strategy, what the president is hoping to achieve with this further increase in tariff. But I think it's certainly going to be a consequential action and potential discussions with China going forward.
Does the U.S. Trade Representative's office model this, maybe in conjunction now with the Secretary of Commerce, to kind of play this out, to see what it is we're actually asking for? When you hear Howard Lutnick talk about iPhones being assembled in the U.S. once again, we heard from Dan Ives on that. The analyst said that would mean basically a $3,000 iPhone. Where becomes the line of diminishing returns when decisions like this are being made?
I mean, it's a great question. And again, we don't know what's in the mind of the administration and the president and what they're hoping to achieve with these tariffs and negotiations. Just a few minutes ago, the press secretary, Caroline Leavitt, said that the president was directing members of the trade team to come up with tailor-made deals for trading partners that are unique with respect to the trade relationship, imports, exports, the barriers in each of those markets. So that indicates that it may be a different scenario for each and every one of this over 100 trading partners. But again, we don't have a clear sense of what the ask is and what the end state is. Where do they want to be in 9 months, in 18 months? What do they want the tariffs to look like? And what do they want the results of any negotiations to be?
And finally, Greta, in our final moments with you, given that you were general counsel at the USTR, do you have any hesitations around the actual legal mechanisms with which President Trump is acting to enact these tariffs? Because there are now movements in Congress toward kind of wresting back congressional authority through a resolution to exert that Article I privilege to actually be the ones in charge of tariff policy. But how would all of this stand up in court?
Well, Congress certainly has the ability to take action to counteract or address the trade policies that have been enacted by the president so far. And yes, there are also rumors or in even one case that's been filed to challenge some of the tariffs that have been put in place since President Trump came into office. But I think there's a lot of question marks there. He is stretching these authorities in new ways and using them in a magnitude that hasn't been attempted before. But and so we just don't know what the courts are going to do with that and whether any of these challenges will be successful. But I would just say that even if the courts are successful, or even if litigants are successful in challenging some of the actions that have been taken place so far, the president has other tools and authorities that can be used to put tariffs in place. So, he is committed to this policy, it would seem. He thinks that tariffs are effective in addressing these issues, and he'll find a way to do it.
Greta Peisch, Wiley Ryan, former General Counsel, the Office of the USTR. Greta, many thanks for the conversation. We've got a lot more ahead. Hope you'll join us on the late edition of Balance of Power. That's at 5 p.m. Eastern Time, right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live on TV, radio, YouTube, and Bloomberg Originals. I'm Carol Masser, along with Tim Stenivek. And as you said, man, I don't know, did I bring back kind of this market malaise?
Welcome back. You missed a day yesterday, but yesterday's like, okay, hold my beer. How about today?
Listen, we had a rally at the beginning. Almost every name in the S&P 500 was higher. And now we've got kind of an even split, 242 to the upside, 260 to the downside. So Manic market, anyone? I think we can say yes. And that after stocks did see earlier on their biggest rally since November of 2022. But we're definitely off our best levels.
Yeah, off our best levels. We got 2 hours to go with today's trade. We're going to continue to bring you the latest, keep you locked in here to Bloomberg and Bloomberg Business Week. We're going all in on the markets and the economy this afternoon. Was it a bounce? Was it a bottom? Can you say dead cat bounce? Somebody already texted that to me, Carol.
Did they really?
They did, yeah. What earnings estimates overall reveal?
Yep, that means Gina Martin Adams coming our way in just a moment. Also, the world is finding a plausible alternative to U.S. Treasuries. Yep, you heard it here. It's one of our most read stories on the Bloomberg.
Plus, all of this is emanating from Washington, D.C., specifically the White House. We are going inside the White House to what's being overheard on countries that are looking at a tariff deal.
And on all of that, Elon Musk has a few choice words for the architect of the president's tariff plan. How many times can we hear the word moron?
Is that what it was?
Moron?
I'm pretty sure it was moron, yeah. Also, can the tech giants really bring their supply chains back home? I've just heard no, no, and no over again.
I know. Is that the truth? We're going to try and get a reality check on that. Hey, first up, let's get to the trade. As we said, we're near our worst levels of the session, still in the green. Here's Charlie Pellet.
Hi, thank you very much. Welcome back, Carol Massaro. Let us get right to the numbers here because you got to be keeping track of what's going on today. And of course, right through the close, we got you covered on Bloomberg Television and Radio. S&P right now up 16. That is a gain of 0.3%. Best level of the day, we had the S&P higher by 4%. Dow Industrials up 263, now up by about 0.7%. The NASDAQ Composite Index up by 0.2%. Keep in mind that both the S&P and NASDAQ have been swinging between gains and losses. The 10-year at 4.24% with a 2-year currently yielding 3.76%. Gold flat on the day now, up just $1 the ounce, $29.84. West Texas Intermediate crude holding at $60 even a barrel, lower now by 1.1%. Bitcoin down 2.2%, 77,185 on Bitcoin. Microsoft has dismissed 2 employees who disrupted an event celebrating the company's 50th anniversary. Now, both employees worked as software engineers and are affiliated with No Azure for Apartheid, a group that has protested Microsoft sales to the Israeli military over the country's conduct in its war in Gaza. Microsoft now up 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, so much for an earlier rally as volatility in U.S. stocks once again taking over. We also got a headline which everybody's been kind of doing the math on this one, but we thought we should bring it front and center that the U.S. is moving forward with additional tariffs on China with a rate of levies totaling 104%, this according to a U.S. official.
Well, stocks hovering at near their lows of the session. They did dip into the red a little earlier today, but the S&P 500 gave up quite a gain. Bloomberg's Gina Martin Adams notes in new research that the panic is evident, but it may not mean a bottom in stocks is here. Gina is a Bloomberg Intelligence chief equity strategist. She leads the U.S. equity strategy here at Bloomberg Intelligence. She joins us from New Jersey. Gina, that earlier bounce, the fizzling, why? What happened?
Well, you know, in any given day, we can all speculate as to what happens. But I think broader, sort of bigger picture is we did have some evidence of capitulation emerge on Thursday and Friday. Investors are trying to buy that dip, but whether or not it's the ultimate bottom is still very much in question, particularly considering where valuations are, where implied earnings expectations are, and the fact that we're just getting into first quarter earnings season this week, and we've got a good month of reports to sift through to try to get a sense from companies as to how they're going to handle this tariff environment now.
Well, and I want to talk about earnings in a moment, but I want to ask you about something I heard on Surveillance on Bloomberg Radio this morning with Tom and the gang, and this guest made the point, and I just want to make sure I read it right. Companies that sold off the most were those with strong balance sheets, and that was a great opportunity to buy those names. Do you agree just because a company in this environment has a strong balance sheet going into the tariff news means that that is a buying opportunity?
Well, I wouldn't expect the balance sheet to become a huge issue until we get signs of credit distress. Instead, I think that the bigger issue to trade in the market right now is what's going to happen with earnings. I mean, frankly, we're going from an average tariff rate of under 5% to an average tariff rate of 20% in, the blink of an eye. And that is going to create tremendous disruption to supply chains, pretty significant disruption to margins. The earnings outlook is definitely under fire. We're seeing that with vicious analyst estimate revision lower. I think that while if you may be using the balance sheet as a safety trade for the long term, in the short run, you've still got to price in near-term valuations what's going to happen with earnings and cash flows. And I do think that that's probably going to be an overwhelming driver. I think for a safety trade, beta is actually probably a better measure in the short run, just because the pace of downward estimate revision could get quite vicious. And we certainly have really yet to see the bigger economic impacts of these tariffs emerge. So I think we can, argue all day long on what component maybe offers a little bit of safety, but I'd go for probably beta or, general defensive qualities in the stocks over a balance sheet number, at least for the near term.
Gina, we're going to be talking to Tom Orlick in our next hour about all the uncertainties that are out there. But with regard to what is known right now, and the way that earnings will be affected as a result of these tariffs increasing to such a degree, why don't you think it's totally priced in at this point? Is it because we just don't know where it's going to hit?
Yeah, it's a great question, Tim. I mean, I think that we can argue all day long again about what's priced and what's not priced, but for starters, we're trading at a multiple of 18 times earnings for the S&P 500. We've not experienced a recession in which the price to earnings ratio bottomed anywhere near current levels. As a matter of fact, it usually gets all the way down to 15 or below in any kind of recessionary environment or even earnings weakness climate. Doesn't have to be an economic recession, could just be an earnings recession. And we just haven't seen that. So we're still priced for fairly robust earnings growth to emerge. Our model actually suggests that even with the declines we saw last week, the market is still priced for 15% earnings growth to emerge this year, which is historically anomalous even in a great year, let alone a year that is riddled with economic risk. And even the leading indicators of economic risk of the economy would imply a significant degree of earnings risk has emerged even prior to the tariffs. Something we wrote about last week are things like durable goods orders, as implied by the ISM's new order survey, would suggest that you have an outlook for an earnings contraction emerging, where the consensus implied in the equity market is now for 15% earnings growth. So that's a really big spread between expectations implied by market prices and what is a likely earnings reality. So I would say that valuations are the biggest reason to answer your question in short form.
Hey, listen, Gina, in your research, you say panics in 2001, 2008, 2015 all occurred more than 22 weeks before ultimate market lows, and the average 6-month S&P 500 return afterward was down 9.5%. Can we put what we're seeing in that category?
It seems that way. I think, Carol, we have to be fairly nimble, right? Because these tariffs obviously could be reversed very quickly through words, through tweets, what have you. So we have to be very nimble. But assuming that the tariffs that were announced last week are put in place for next week, we definitely have a significant amount of downside risk, or at least volatility, to expect in the short run. We certainly have downward estimate revisions, and most likely we have some form of an earnings recession that emerges in 2025. Earnings recessions tend to play out very different in price dynamics than short-term corrections in the equity market. And that's what we meant to sort of highlight with that note is, when you have a 10% correction in stocks, capitulation measures can be fantastic measures of what to expect. You can use capitulation, you can use sort of risk-on, risk-off measures as your only guide in a lot of ways to finding those 10%, sell-off lows. But once you get past a 15% correction, you're flirting with recession kind of climate. And we know that the earnings outlook is diminishing materially. If we're headed into an earnings recession, you can expect a period of longer-term volatility. At least that's what the history says for us.
As Gina's been talking, I've been keeping an eye on the S&P 500. We took another leg lower, down about 0.1% on the S&P 500, so back into the red. Hey, Gina, before we let you go, just 30 seconds on what happens if there is a reversal. Is the damage already done for some of these companies?
I think it depends upon the language behind the reversal. If the reversal is perceived to be short-term, then the damage probably persists. The reversal has to be very clearly communicated as a permanent change. I think the biggest problem that the equity market has been facing so far this year and maybe continues to face is this uncertainty and this lack of confidence into where things are headed. And there are a lot of give and take sort of commentaries in the marketplace about where we won't, will they? You know, the question marks are still tremendous.
Right.
And so we need certainty in order to set operations and move forward.
I keep thinking of that interview that Sonali Bossack did with Boaz Weinstein, and he said, we got 4 more years, or roughly, of this administration, and the uncertainty genie is already out of the bottle. And so you got to kind of maybe, at least his perspective, think of things that way, that you can get a change and then you can get a change again. Gina, we know we'll come back to you a lot. Gina
I'm
Martin
told
Adams.
Gina should be celebrating some sort of NCAA win.
Are you happy over
or
that?
something?
I am.
Florida Gators?
I am very much celebrating that
Okay.
win amidst all this turmoil. So thank you, Tim.
Congratulations.
All right. Gina is, of course, Bloomberg Intelligence Chief Equity Strategist. Hey, folks, that's our equity trade. We got to get to the U.S. Treasury trade. That brings us to one of the most read stories on the Bloomberg today, how in the first rush for safe havens in years, global investors, Tim, are finding there are credible alternatives, yes, folks, to U.S. Treasury bonds.
With more, we welcome back Michael McKenzie. He's Bloomberg News rates reporter. He joins us here in the Bloomberg Business Week studio. Is the world really finding a plausible alternative to U.S. Treasuries, Michael?
It's beginning to. I think the decision by Germany to release the fiscal brakes, they're going to be delivering and issuing a lot more bunds, which are top quality European debt. Germany's debt to GDP is much, much lower versus many other G10 countries, particularly the US. And in Japan today, we've got a 30-year JGB yielding 2.5%. So if you're a fund manager, a life insurer, pension plan in Japan, you can probably stay domestic now. You can use a bit of repo, lever that up, but why are you going to come to the US? And if we look at how a lot of investors who buy US Treasuries from both Europe and Japan, they tend to hedge the dollar exposure. Well, once you take that out of the equation, essentially you should stay home. And I think this is going to be, it's a trend that's beginning, but it's going to continue.
So 3.7 on the 2-year, and if you take it further out, 4.2 on the 10-year. That's not enough. You're saying that the risk.
Not if you want to hedge the currency exposure, and there's a lot of question marks around the dollar now. But above all, what Japanese and European investors really don't like to see in the bond market is uncertainty, and we've got a lot of uncertainty and, frankly, policy chaos, contradictions every day regarding tariffs and implementation that's coming from the Trump administration. And they're putting Scott Bessent out there every day now to talk to the media to try and hose it all down.
Right.
But it's not working, because today we had a 3-year auction in Treasuries. There was a big drop in the direct bid, which is normally where you'd see reserve currency managers coming in from overseas and going directly to the Fed. They dropped off today. That bid was really low. So that's a warning sign. And since that auction at 1 o'clock this afternoon, 30-year yields are now up 10 basis points. 10 years are also up about 4 or 5 basis points, because we've got a 10-year auction tomorrow.
Right.
We've got a 30-year auction on Thursday. We've got CPI coming out on Thursday. And that CPI is still going to be above the Fed's target, and that's before tariffs. So there are a lot of jitters here in this bond market.
I think this is so important. This is something we talked about on our call, that, even when we saw, the disconnect between either stocks selling off but yields going up, like trying to understand. And I think there are some people, who might be listening and be like, why do I care? What do I care? Like, or I do want yields to go down because maybe that means I can get a mortgage or something, to break it down. But it's important. It tells you what about global investors and their relationship potentially with U.S. Treasuries?
Well, it tells you that they're beginning to doubt the ability of the Trump administration to get spending down. They're beginning to doubt Scott Bessent's claim that, yes, we're going to get lower 10-year yields, because the math doesn't add up. And I've heard from a couple of investors this week, look at what's happening in Congress. They're moving towards some big, beautiful bill, which is what Donald Trump wants. But the real talk here is that it's going to include more spending. The deficit isn't going to come under control.
Mm-hmm.
And that's why you're beginning to see the 10-year and the 30-year yields rising. They're not participating in the haven trade. So let's think back to last September, when the 10-year yield got down to 360, because the market was worried we're going into recession, and the Fed cut by 50 basis points. This time, even with all the dramatic stuff going on since Liberation Day, the 10-year barely got below 4%. Now it's back to 4.25. Something has broken in the Treasury market. It's not behaving the way it was last September. And the change is really the chaos in the White House. And I think that the market is telling you something very important.
Is the chaos leading to, or is the market telling us that there are starting to be questions about the full faith and credit.
I wouldn't go that far, but I'd say it's more along the lines of what PIMCO said late last year. You've got to be vigilant. It's not about bond vigilantism, it's about vigilance. And this is a bond market that's becoming more and more vigilant. They're not really believing the Trump mood music here. And the chaos around tariffs doesn't help things. And the fact of the matter is, the U.S.
Meaning they
Treasury,
don't buy that this is going to get to a better position for the U.S.
they
economy.
don't see what the end game is here.
Okay.
How does Donald Trump get a win on tariffs? It doesn't add up.
Well, and just real basics. This is the bond market's your baby, but I mean, essentially, then, if international investors aren't so interested, or investors in general aren't interested, you're going to have to pay higher and higher rates, right, to attract.
Yes, but then let's step back, right? So what's happened this week and last week is that I believe there's a lot of damage being inflicted on business confidence and consumer confidence. So the economy is going to slow. It was already coming into a soft landing. That's now in question marks because we could actually see activity really drop. So in that world, taking down 10 years at 4.5, if it gets to that level, even higher, is a good long-term trade. And you've got plenty of people who do that. On the other side, though, you've got now investors saying, well, I have alternatives to treasuries if I'm in Japan and Europe. So that's going to mean that the domestic buyer in the US, who has been the biggest buyer of treasuries in the last 10 years, will have to continue to support. But all things equal, if people begin to see the budget negotiations involve more and more spending, then more supply. And that means you have to have more of a premium in 10-year and 30 years. But the other interesting thing here is what's the Fed going to do? Because the Fed's reaction function is we have a dual mandate.
Right.
If inflation does pick up in the coming months, they're not going to move. But then what happens if payrolls really begin to fall?
Yeah.
Then they're kind of stuck. And again, you'll see the front end do okay, but the back end is where people can go, well, actually, if the Fed's not really going to move that much and can't move that much, then yields are going to be stuck, particularly if there's more supply coming.
Which isn't good for the U.S. economy in the
great
long
for
run.
the U.S. economy.
Yeah, which is why we're talking either stagflation and some other things. I was going to say miserable Monday, but it's actually Tuesday because I was off yesterday, so I'll just call it terrible Tuesday. Michael, thank you so much. Really appreciate you explaining it. As we said, this is one of the most read stories on the Bloomberg News rates reporter Michael McKenzie. All right, folks, you're set for the markets on Tuesday.
Dumber than a sack of bricks.
Me?
No, not you.
Ouch.
That would be a very rude thing for me to say to you.
It would be.
I would never say such a
You
thing.
moron.
Oh,
No,
wait.
just kidding.
Those are two things that Elon Musk has said about President Trump's trade counselor. And even if the administration is right about all this, can we really bring in the highly globalized tech supply chain back home? That's next on Bloomberg Business Week Daily.
We don't feel that way, really, about each other.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. U.S. stocks giving up most of the earlier gains. At one point, we had the S&P 500 index up 4%. Right now, we are looking at a gain of 0.2%. The S&P up 8, now at 5,069. The Dow holding on to a gain of 197 points, up 0.5%. NASDAQ Composite Index back in the red right now, down 5 points. NASDAQ and the S&P have been fluctuating between gains and losses. The 10-year yield at 4.25% with the 2-year currently yielding 3.72%. Gold, little change now at $29.83 the ounce, up just 40 cents. West Texas Intermediate crude below $60 a barrel, $59.67, down now by 1.7%. And Bitcoin is down 1.9%. Bitcoin at 77,419. S&P 500 index erasing what was earlier the largest rally since 2022. So again, recapping here, stocks little change now with the S&P up by 1 point. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So as you know, Charlie's been reporting, U.S. stocks were bouncing back. I mean, right now we're green across the screen, but just barely on the S&P, just up about a point, as you heard from Charlie. NASDAQ 100's up about 20 points. But earlier in the day, we saw the Mag 7 as a whole up more than 5% at their highs today. And
now in the red.
Yeah, exactly. So it's definitely turned around. We did talk about earnings with Gina Martin Adams, and she, in her latest research, she talks about that outside of tech, revenue is rapidly weakening.
Well, we wanted to check in once again on what's going on with the tech group and whether or not we really could bring tech supply chains back home. Back with us is Bloomberg Intelligence senior technology analyst Anurag Rana. He joins us from our Chicago bureau for Bloomberg News. Anurag, has anything changed in your view when it comes to tech names since the sell-off began following the tariff announcements?
No, I mean, I think it's the same news back and forth. You know, there are certain companies like Apple who are directly impacted of the tariffs, but the rest of the space, I mean, entire software space, for example, it's going to get impacted in a very indirect way. We, published a big note on that today because that's going to happen because of the lack of business confidence and CEOs not spending as much as they were before. I think, there is nobody that's going to be left spared because of tariffs.
Yeah, I know it's something we've talked about with you before, Anurag. How is it, and I feel like every conversation we have, it's like, but wait a minute, what if the president reverses everything and does a 180 on tariffs? Does the outlook come back, the better outlook?
See, one of the things is I think we think some of the demand is destructed at this point. The question is how much. And we don't know how that's going to shape up till we get into the earnings season, till we look at guidance coming in for the next several quarters. I mean, I think we commented last time we were talking to you that when you look at a company like Accenture, I mean, they're talking about their end markets or their clients not spending as much as they were before, or they're rethinking about their projects for the next 12 months. So there is going to be some destruction no matter what happens tomorrow.
Why are you saying that there is demand destruction already present, even though we haven't seen these completely enacted? And yes, you brought up Accenture as an example, but in terms of the Mag 7, the big tech companies that you follow each and every day, why are you already concerned about demand destruction?
So one of the first things we see if there's a recession, if there is a drop in business confidence, companies do stop spending on a handful of things, such as consulting projects, such as buying new hardware equipment that is not AI related, buying more seats for the software that they are upgrading, hiring new people. All of these things do come to a stall immediately when they are worried about an economic downturn or a recession.
One of the things I want to just kind of hammer a little bit too is tech supply chains. And this is something too, Anurag, that we've talked about with you. Can they be recreated in the United States? Can they easily be recreated in the United States?
See, the word, if you say it's easily, that's not, I think that's something that can be done easily. Now, can it be done? Yes, if you do a lot of government subsidies, you figure out a way to bring more automation. But again, that's something that's going to take years. You cannot, it's not something you can just pick up and start doing it, something that has been created over a 20, 30-year period.
And what's the benefit of that? Like for someone who might say, well, wait a minute, why don't we bring it back and let's deal with a little bit of pain and we'll get through it and then we'll have more manufacturing in the U.S. what is the benefit of having a global supply chain? And I know there's often people say you get every country doing the best thing that they can do and kind of contributing, but how do you see it? How do you explain it?
Yeah, so you see, for us, the benefit of a supply chain, for example, in the case of Apple in China and other parts of Asia, is they also get to sell their products into their end markets. I mean, China is the growth engine for Apple. At the end of the day, that's one of their biggest markets for either it's the phone or any of their tech products. So it is critical, because otherwise, where is the growth going to come from? In the US, you're coming to a point where smartphone penetration is probably saturated for now. People who have the nice iPhones already have it. Maybe you're going to have somebody upgrade from a lower end phone to a higher end phone, but that's not going to drive 6, 7, 8% product growth rate for any of these companies.
All right, going to leave it on that note. Hey, Anurag, thank you as always. Anurag Rana, Bloomberg Intelligence Senior Technology Analyst. By the way, looking at shares of Apple, Tim, they're down another 3% on this Tuesday.
Meantime, there's a growing chorus of well-known names questioning the tariff strategy, and that includes a billionaire presidential advisor Elon Musk, who attacked the White House trade counselor Peter Navarro as, quote, dumber than a sack of bricks. This is a fight over President Donald Trump's tariff regime spilled onto social media on Tuesday.
But
that's not all he said.
He said, wait, no, this is kind of crazy. In a flurry of posts on his social media platform, Musk calling Navarro truly a moron and mocked the trade advisor for the past, citing the work of Ron Vera, a fictional expert whose name is an anagram of his own. How old are these people?
That guy was quoted, though, in Navarro's book.
Okay.
So,
with all things Elon, we've got Max Shafkin with us. He's Bloomberg Businessweek columnist, co-host of the Elon Inc. podcast, who has to deal with this on a weekly basis. He's also the author of The Contrarian, Peter Thiel, and Silicon Valley's Pursuit of Power. He joins us here in studio. I got to ask you, is this a real battle that's going on? I mean, I'm trying to get... Is the relationship between Trump and Elon really over? Is Trump using Elon to maybe look for an exit ramp because the tariff stuff's going so well? How are you putting this together?
Look, just recently, I think a week and a half or so ago, Elon Musk was in with the cabinet wearing a hat that said Trump was right about everything. So this does feel like a shift. I think it would be wrong to say, oh, Elon is out, he's outside the circle of influence or something like that. Whatever happens, however long Elon Musk runs Doge, he is going to stay close to Donald Trump, I would predict, for a long time, because there are mutual interests here. Trump is going to want that for the midterm, and Republicans are going to need that. That said, there's sort of two forces at play. One is Republicans took a pretty bad loss in Wisconsin last week. Elon Musk played in a big way, donating probably more than $20 million all told, maybe even more than that. We don't know the exact number yet, to promote this conservative judge in a state Supreme Court race. The candidate supported by Musk and Donald Trump lost by a wide margin. So that kind of calls attention to the political risks. And the second thing here is that Musk and Trump do have, differences on trade policy. Elon Musk runs a globally integrated company with a huge presence in China. Donald Trump ran as the tariff guy and has, just for laughs, sometimes insults China. So there is a divergence here, and I think we're seeing that divergence both for political reasons as well as economic ones.
Why isn't he saying President Trump, you're a moron? Or why isn't he saying President Trump, you're dumber than a sack of bricks? Why is he picking Navarro when everyone says, and this is not me speaking, but it's just everyone says that ultimately the tariff policy comes down to what President Trump wants?
Well, if he did that would, that would probably cross the line for Trump, right?
Okay.
It's one thing to criticize an advisor. I think there's been a lot of reporting on this. Trump seems to like having, conflict within his inner circle. There's kind of a reality, you got to remember he ran a reality show for a very long time, or started a reality show for a very long time. He likes that kind of feeling. This is, in a sense, right, great content. I also think, Musk is picking on Navarro because Navarro went on, I believe it was CNBC, and described Tesla as an assembler rather than a manufacturer, which if you know about anything about Elon Musk, that is the worst insult you could deploy against. So genuinely, I think he was hurt or angry, and he is reacting to it. So, and of course, also Tesla has, this is gonna cost Tesla money is the other thing.
Does Elon have enough sway over President Trump to move the needle when it comes to this policy?
We had a long discussion about this for the episode of Elon Inc. that's going to hit in a couple of hours, the podcast that Bloomberg hosts about Elon Musk. And, you know, it's not clear. It seems like Musk's influence within Trump world is pretty bad. He's talking to Trump all the time, so he can obviously walk in or call Trump pretty much whenever he wants. That said, it seems like he's been involved in the Doge part of this, the cost cutting, you know, remaking government, as well as kind of some of the political pageantry around Donald Trump. And that folks like Navarro are really in the inner circle on tariffs. And Nancy Cook, our colleague on the podcast, pointed out, give you a little sneak preview, pointed out that attacking Navarro, I mean, he is one of Trump's, you know, one of the people in the inner circle. This is a real shots fired across the administration. We have two very trusted advisors going at it, as you said, Carol, in public.
I mean, it's like your favorite kids, right? Sorry, Eric and Don Jr., but it's like your favorite kids kind of going at it, right? And so I just trying to understand the optics of it.
Yeah, I mean, I think the other thing that's happening is that when Elon Musk was backing Donald Trump, and especially in that period after the election, Tesla was looking very strong. You know, the stock went up.
A lot.
You know, he was really on top of the world, and maybe he felt like he could afford to take a hit to his margin, to, you know, have to deal with the inevitable price increases that this is going to lead to. But what we've seen in recent months is really serious demand challenges. You know, it seems like demand for Tesla has fallen way down. Like, this company is just not as healthy as it was a few months ago. And I think that may also be pushing Musk to push back more strongly than he otherwise would have if he were feeling, you know, more confident in his position business-wise.
I mean, there's a fundamental disagreement in terms of what Peter Navarro thinks and what Elon Musk thinks. I mean, there was the Milton Friedman video that Elon tweeted in the last couple of days talking about free trade and who works on a pencil. And I guess the question I have is this enough to push Elon away from this universe? Because, you know, he said a lot of positive things about President Trump in the last few months, loves him, supports him, everything Trump has done is right. But this is a really big deal. And this seems like something that the president is digging his heels in on.
Yeah, I don't think he's crossed a line yet in this kind of back and forth with Navarro. And I continue to think, just because Trump has a lot to gain from maintaining this alliance, you know, Elon Musk could donate another $300 million in the midterm.
But he might not be useful to Elon.
Well, I mean, $300 million is going to be useful. But the question is, what does it mean for Elon?
Exactly, that's what I'm saying. This might no longer be useful to Elon if he's not getting what he wants.
That is what's worth paying attention. Like, if you want to see what's going to happen with Elon Musk and Donald Trump, the thing I would be looking at is the Tesla stock price and how well does that hold up. You know, it's been a bad couple of days. I think it was up earlier today. It's down a little bit last I checked.
It's down 43% this year, and it's right now down about 1.5%.
I think that is the thing, you know, if Tesla is really in trouble, that is the thing that could push Elon Musk away.
When does the Elon Inc. next
Somewhere between 5 and 6 o'clock, you know, it's...
Must listen, everybody. Max Chafkin, Bloomberg Businessweek columnist. Still ahead, everybody. The only game in town really is what President Trump says next on tariffs. We've got the latest from the White House when we come back on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. It has been another volatile trading session with the S&P swinging between gains and losses. And right now, just about the lows of the session, down 19 to 5,043. That is a drop now of 0.4%. Dow Industrials up 32, up 0.1%. S&P, by the way, I mentioned down 0.3%. At the best level of the day in the early going, the S&P was up by 4%. We've got NASDAQ now down 92, drop there of 0.6%. The 10-year 4.24%, the 2-year 3.72%. Spot gold up $7 the ounce, up 0.2%. 29.90, still below 3,000. West Texas Intermediate crude trading with a 59 handle now. 59.32, down 2.3%, and Bitcoin down 1.8%, 77,530 on Bitcoin. President Trump going to be signing an executive order to expand coal mining and use in the U.S., aiming to power energy-hungry data centers and revive the fossil fuel industry. The Range Global Coal Index ETF trading higher by 4.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. You're up to date on the markets. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters on Bloomberg Business Week Daily. Well, we mentioned Elon Musk calling President Trump's counselor on tariffs, Peter Navarro, a moron. You have U.S. Treasury Secretary Scott Bessent saying there is potential for advantageous trade deals with major U.S. trading partners as foreign nationals appeal to Washington. You've got China vowing to fight to the end on tariffs as it props up its markets. And then we have, what was that market? What was it, 104% tariff from the U.S. on China? It feels like, if it sounds like a trade war, walks like a trade war.
Does it quack like a trade war?
It sounds like, it does feel like it's quacking like a trade war.
I think we can go ahead and call it a trade war. Let's see what Bloomberg Intelligence Senior Policy Analyst Nathan Dean has to say about it. He joins us from our Washington, D.C. bureau. Before we get into what exactly is happening in the White House, Nathan Dean, I'm sure you are getting a lot of questions from clients about this tit for tat. Can we call it a trade war at this point?
You know, I think so. If these tariffs go into fruition tonight at midnight, I think obviously you can, because we're talking about 104% tariff on China, and you had Gina Martin Adams on earlier, going from our current tariff around 5%. That's pretty substantial and something that we haven't seen in the last 20, 30, 40, 100 years. So I think obviously we can't say it's a trade war, but the big question that we're getting from clients at the moment is, is this going to go forward? We think so. And then are there going to be Republican pushbacks to that? And we saw that in today's Senate Finance Committee hearing with the trade representative, Ambassador Jamieson Greer. You're starting to see little cracks of Republicans pushing back, but not enough to it's actually going to derail President Trump's agenda.
Hey, since you brought up that hearing, what was that all about?
Yeah, so this is the U.S. Trade Representative, Ambassador Jamieson Greer, who's testifying to the Senate Finance Committee today. House Ways and Means tomorrow. House Ways and Means could have a little bit more fireworks, a little bit more partisan. But really what we saw today was the Trade Representative trying to, defend this strategy of long-term gain for short-term pain. And, we began to see the cracks of uneasiness, specifically from Senator Tom Tillis of North Carolina. Now, look, he's running for re-election in 2 years, so I think obviously this is a little bit of trying to get some sound bites in. But, he essentially said, look, and I'm paraphrasing here, whose throat do I have to choke?
I think that's exactly what he said.
Yeah, it's like, whose throat do I have to choke if this doesn't work out? Now, we saw legislation come out last week that tried to claw back some of the president's authority, and this was bipartisan. This was from Senator Grassley of Iowa, a farm state, Senator Maria Cantwell from Washington. But, I don't think that legislation is going to go anywhere, and it certainly wouldn't get anywhere close to overriding a presidential veto. So, for us, when we always get the question of when does President Trump change his mind, it's A, if he can make a deal, and, Ambassador Greer said they were talking to 50 countries, and B, are you going to see consumer confidence really get to the point of MacBooks going up 100%, that type of thing. So, I think we're going to be in this situation for some time.
So if we're thinking about this being potentially some sort of deal as an end point to this, what would that deal look like? Because I think there's a lot of questions about what an off-ramp could be for tariffs such as these.
Yeah, I think from the White House perspective, it's just any deal, just to show the market that, look, we are going to be making deals. You know, there was some anticipation that when Israeli Prime Minister Benjamin Netanyahu was here, they would potentially announce a deal. President Trump was talking with the Prime Minister of Japan, was talking with South Korea today. So the idea of the White House is potentially you would show one deal, and then subsequently you'd be able to see the market reaction saying, hey, not all is going to be bad here. But then as you saw from the China perspective and the China negotiations that are taking place, it looks like there's not really a deal to be had. So, you know, again, we go back to this point where I think you're going to, from the White House strategy, you want to show that deals eventually will come down the line, and AKA there will be exemptions. But until that actually happens, you have to prepare for the worst, and that's what's going to happen.
I mean, Nathan, what's the smart analysis on this? Is this exactly what President Trump wants? He wants people to feel upended and kind of off balance. Or are you hearing, are you guys hearing from your sources in the White House that says, you know what, relax, everybody. Everything's going to work out. There are going to be deals. All these countries really are calling us, and they want to lower tariffs. They want to like figure this out. Like, what's the truth here? What's the reality?
Well, you have two groups in the White House. Obviously, you have like Treasury Secretary Scott Bessent essentially saying, look, we need to have an end game here. We got to give the markets an end game of what this looks like. But then I go back to today's hearing again, where the trade representative, Ambassador Greer, was saying, look, this is all about trade imbalance. And if you're not buying from China, or if you're buying from China right now and you're going to be paying the price for it, don't buy from China. Buy from the United States. Buy somewhere else. And I think that's the thinking that's in the White House at the moment, is this idea of fundamentally changing the supply chain of the world order. And so I think, you know, Peter Navarro said it when he was on TV this morning, essentially saying, look, you know, we're going to be making iPhones in the United States. You know, I think that's the thinking that's driving the White House at the moment.
Yeah, well, I can't afford a $3,000 or $4,000 iPhone. I'm just going to say that. Having said that, who's in charge ultimately, especially when we're getting different things from members of the administration and it feels like different messaging? I mean, ultimately, is this what these folks are being told to do by the president, like kind of throw out some different things? Because ultimately it's going to be up to the president, right, what he wants to do. But I'm just trying to understand how the messaging is managed.
Yeah, so, you know, it is up to the president. You know, he's the one that makes that final decision. But I will say that, you know, President Trump, and we saw this in his first term, and we're starting to see it again in his second term, you know, he's one of those leaders where he doesn't come out and say, look, this is what the strategy is, this is what I want to go with. He lets people essentially go out and create their own strategies, and then they come back and then they fight about it. And then ultimately he'll pick one, he'll reverse it, pick another one, then he'll come back to the original idea, you know, but then he'll make his decision, and then it's always up for negotiation. That's not good for the markets. The markets want clarity. But what we can say is that, you know, President Trump, we do believe, wants these tariffs to go forward. He doesn't feel that he's paying a political price for them at the moment, and he's certainly not getting any political pressure from Republicans that want to over-challenge his authority. And so we do think that these tariffs are going to go in, and they may go in for some time because the Senate's leaving for a 2-week recess, and they're not going to be here until the end of the month.
It does seem like this time is different. And when I talk about time, I mean the president's first term. He had the chance to do tariff policy like this. He had a chance to renegotiate NAFTA, and he did with the USMCA. But even now, he says that wasn't good enough. That was his trade deal. Is this time different because it is his second term and he doesn't care about political consequences?
Well, I think he cares about political consequences, but I also feel that he was sort of held back in his first term and that he wanted to proceed with this. But, you know, moderate voices in the Washington establishment had said, no, Mr. President, let's pull you back and let's do it this way. Now, President Trump obviously won the election. He won it by, you know, 77 million, or he won it with 77 million votes. And he won all 7 swing states, and he consistently comes back to this idea that there's a mandate. Now, most presidents in their second terms feel that they have mandates, but they only have about 18 months to use that political capital before Congress begins to say, no, we have to focus on midterms, and then we have to focus on the next election. Right. So presidents, whether it's President Obama or President Trump, you come out hard, and you say, this is what we're going to do, and you keep going.
Nathan, 30 seconds. It is about tariffs, but it's also about energy deals. It's also about defense positions, right? There's a lot of stuff that goes into these negotiations. It's not just about tariffs. Just quickly.
Absolutely. I mean, you have any sense of geopolitical order. I mean, in terms of trade imbalances, defense, energy, you know, investments in the United States. All of this coalesces at the cabinet level and then eventually goes to the White House or the president's desk.
It's only Tuesday, Lemon. All right, Nathan, thank you so much. So appreciate it. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst out there in D.C.
All right, taking a look at the markets right now, What a volatile day. We're down on the S&P 500 by a little more than 1/10 of 1%. The NASDAQ Composite down 0.4 of 1%. The Dow, though, sticking in the green up 0.2 of 1%.
It's like a ski slope.
Rolling over.
Yeah, absolutely. All right, coming up, an update on today's trade and also some of the stocks that are moving in today's session. This is Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we are about, an hour?
In 7 minutes?
And 7 minutes away from the closing bell on Wall Street. Had to do some quick
You were
math.
doing some click, click, click.
I was just...
I saw the numbers above your head. Like it's like a beautiful mind.
You mean you saw the steam?
Yeah.
Let me help her.
I was told there would be no math.
Exactly.
You brought that upon yourself.
I know. Help me. Let's take a look at some stocks on the move on this Tuesday. With us is Bloomberg News equities reporter Bailey Lipschultz on today's Stock Movers. Got to say, your list looks like kind of my list that I'm going to do at the closing bell.
Except for maybe one of those.
Except for maybe one.
Yeah.
So I'm helping you out with the prep for the risers, I assume.
Next time, bring more decliners.
More decliners, okay. Especially on a day when we're like flat.
Initially, I was putting my list together this morning, and there was so much.
Everything was on the table.
Exactly.
And not so much anymore.
Okay, take it away.
One of the better performers, Broadcom, ticker AVGO, right now still holding on to a 3% gain, was up more than 10% at one point. This coming after the company announced it will authorize up to $10 billion in share repurchases. Analysts saying that sends a positive message. Again, just keeping in mind this is a $746 billion company, so pretty big company, but with a big sizable plan to buy back some stock. And it is also standing out against a semiconductors index that's down 1.2%, one of a few companies still holding on to the green.
Companies do this, right? When their stock gets beaten
You're
up.
supposed to buy low.
Exactly.
It's the downside when you're like, we're actually going to buy $10 billion at an all-time high, and then you top tick your stock, and less exciting news from there.
Get to the healthcare names, because we definitely saw as a group some movement here.
Yeah, calling out Humana up right now more than 10%, ticker HUM. We are seeing strength for United Health, CVS, a number of other companies is coming after some new rates were unveiled for Medicare Advantage and Medicare's ability to really pay and reimburse these managed care names, these insurance companies. So about double what Wall Street was looking for, double what had been penciled in. There's still some uncertainty about the path forward in terms of what the Trump administration could do to pinch some of these so-called managed care middlemen, as some skeptics put it. But still, a double-digit move, biggest rally since right after the election for the company.
I think what's interesting is it's a reminder that even in a day when, we're well off our highs, that fundamental news still moves names and groups. I feel like even when there's, volatility.
Fundamental news from Washington.
Fundamental news from Washington, yeah. But I mean, other than, tariff news.
Yeah.
That's a really good point.
Especially when we're talking about Humana's a big company, but UNH at one point up more than 8%. It's $500 billion. So we're not talking about a mid-cap company by any means.
Exactly.
There's a name on your list that we don't talk about each and every day. RPM International.
Really ever? I don't know how often you guys talk about sealants and chemicals.
I actually had to look this one up. I didn't know what it meant.
It's actually a decent market cap size.
$12.6 billion company. They do various specialty chemical product lines. Why is it on your radar today?
Yeah, they're down right now, 8.3%, the biggest decline since January 2023. So that's some real size and scope. Also trading at the lowest level since November 2023. They had earnings that were worse than expected. They also forecast flat sales for the quarter ahead. The thing that stood out to me, though, looking through some of the analyst notes, KeyBank basically saying that the results, again, backwards looking, left him with the impression that demand growth had softened in recent months. So that's before tariffs could be impacting not only the company's costs, which the CEO talked about how tariff situation could increase their costs from low single digits to mid single digits because of their unknown nature as it relates to raw materials, but also the fact that if people are cutting back spending and cutting back improving their houses, that does impact their end market.
It makes me go to the supply chain function on the Bloomberg and look at what are their biggest customers: Home Depot, Lowe's, Ace Hardware, Walmart, Amazon, True Value. Yeah, right? So or contractors and so on and so forth.
Can we look at it as a test of some sort of canary in a coal mine or bellwether?
Well, maybe they did say that they saw weakness because it was unseasonably cold in the south and also the wildfires out in California. So they called out those kind of exogenous events. But we are seeing Albemarle, which is the worst performer in the S&P 500, appear down 11%. So they're trading at their lowest level since March 2020. So we are seeing broader ramifications for an industry, again, that is heavily skewed towards supply chains that would be impacted by tariffs. And also just the fact that if your base goods cost more, that goes up the supply chain, and that ends up being something that Home Depot and consumers end up facing.
And I think it's interesting that this was happening before the tariff news, right? So that there was some negative sentiment, which we were starting to see in some of the numbers that were out there. Great stuff as always. Bailey, thank you. Bloomberg News equities reporter Bailey Lipschultz on today's Stock Movers. For more conversations like the one we just had with Bailey, be sure to check out our new Stock Movers podcast. You can subscribe for 5-minute episodes on the biggest winners and losers in the stock market. Listen to Stock Movers on Apple, Spotify, or anywhere you get your podcasts. All right, folks, we are getting ready to wrap up here on Bloomberg Business Week Daily, and we're pretty much, Tim, at our lows of the session.
Yeah, we're down on the S&P 500, 0.5 percentage point on the NASDAQ, down 0.9%. The Dow is just flat right now, still in the green. But Carol, this is quite a move in today's equity trade.
Yeah, we'll see what happens in that last hour of trading. For those of you watching on television, the close is coming your way in just a moment. Tim and I continuing on Business Week on Bloomberg Radio, and we're going to get into this 100-year tariff risk and what it means maybe for the possibility of stagflation here in the United States. Everybody, this would affect you.
Also, the CEO of North America's largest auto parts company, Magna, is joining us on tariffs, global supply chains, and more.
All right, that's going to do it for this hour of Business Week. We continue on radio, and the close coming your way right now on Bloomberg Television.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The president's been busy working the phones. The White House says nearly 70 countries have reached out to begin tariff negotiations. Press Secretary Caroline Leavitt today.
Countries are falling over themselves to reform their unfair trade practices and free open their markets to our country. Why? Because these countries greatly respect President Trump and the sheer power of the American market.
China is not one of them, apparently. Correspondent Anna Coren in Beijing.
China's Commerce Ministry today described U.S. actions as bullying and blackmail and said the country will resolutely take countermeasures to safeguard its own rights and interests.
Two close allies of the president are at odds over the tariffs, and it's getting ugly, as Matt Piper reports.
Elon Musk ripped into the president's top trade advisor, calling Peter Navarro a moron and dumber than a sack of bricks. The spat on X came after Navarro said on CNBC that the Tesla boss was not a car manufacturer, but a car assembler who gets cheap parts for Teslas from abroad. White House Press Secretary Caroline Leavitt.
Look, these are obviously two individuals who have very different views on trade and on tariffs. Boys will be boys.
Matt Piper, CBS News.
The Supreme Court today blocked an order requiring the Trump administration to return thousands of fired federal workers to their jobs. The order will keep them on paid leave for now, but legal analyst Laurie Levinson tells us it's not over.
Eventually, the Supreme Court's going to have to sort out whether the administration had the power to come in and do these wholesale firings of federal employees.
The heavy rains have let up in Kentucky, and some rivers have crested, but there's a huge cleanup ahead, and officials are urging people to stay out of the debris-filled water for now. Nicole Valdez is in Frankfurt.
So much of this community literally underwater. Business owners are just now trying to wade through that water to get inside, assess the damage, see if there's anything even salvageable, and figure out their next steps from there.
A parent company of Instagram has some new safety measures. Michael Wallace has that story.
Beginning today, the default Instagram settings for children under 16 block them from live streaming or looking at nudity in direct messages. Only their parents can turn off those restrictions. Meta is also adding its existing Instagram restrictions to teen accounts on Facebook and Messenger.
In the Dominican Republic, the death toll has climbed to 44 after the roof of a nightclub collapsed early this morning. It happened during a concert. Between 500 and 1,000 people were inside the club at the time. On Wall Street at this hour, the Dow Jones Industrials are off 30 points. This is CBS News. If you sometimes find it hard to concentrate, that's not always a bad thing, according to a new study. Here's correspondent Michael George.
Letting your mind wander can actually be a good thing. A study by the Society for Neuroscience found when people performed simple tasks, letting their mind wander didn't hurt their performance. In some cases, they actually performed better. But researchers say more complex tasks require a more focused mind.
The National Park Service has reversed edits and restored content to its webpage about Harriet Tubman and the Underground Railroad. The edits had sparked a public backlash. A National Park Service spokeswoman now says changes were made without approval and that the agency celebrates Tubman. The changes included removing her picture from the top of the page and removing references to slavery. It happened as President Trump pressed his campaign against diversity programs within the federal government. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
Yes, indeed, everybody. We're across multiple platforms here on Bloomberg Business Week Daily, and we are looking at a market that's taking another leg down. We're pretty much at our worst levels of the session, so we're looking, Tim, at stocks down about almost 0.9% now on the S&P 500. They were flat just a moment ago. Dow Jones Industrial Average down about 0.25 percentage point. NASDAQ 100, more than a 1% decline, almost 200 points to the downside.
Yeah, on a points basis, looking at what's dragging the major indices down. Apple, after an earlier in this session, moving as high as close to 5%, Carol, it's down 4.3%. That four-day route continuing. Amazon down 1.9%. Tesla down 3.2%. Meta Platforms down about 0.8%.
Yeah, what looked like an earlier rally has definitely run out of steam.
Your
here.
healthcare groups are still high. The healthcare group is still
Are they?
higher.
I gotta go check my gainers.
United Health, CVS, Humana, higher.
I gotta check them. Hey, coming up though over the next couple of hours, we're gonna get into the 100-year high for tariffs. U.S. tariffs. You know, we've been talking about them for the last half a week or so. Does it risk a U.S. stagflation shock? What it could mean for every one of you out there. So we're going to dig into that in just a moment.
Also, the CEO of North America's largest auto parts company, Magna, is joining us on tariffs, global supply chains, and more.
Plus, sure, bring on protectionism. What could go wrong? You might just actually end up with a much hotter, dirtier, and poorer world. So we'll get into that. A story and column by our Mark Onglo.
I knew it was going to be by Mark.
I know.
When it says hotter, dirtier, and poorer.
It's about climate.
Yeah. Okay. So we got a great program coming up over the next 2 hours. Of course, we are glued to what's happening in the markets with the S&P continuing to move lower. Let's check on the day's trade and top stories. Here he is, Charlie.
Hi, thank you very much, Tim. Indeed, 53 minutes to go until that closing bell clangs on Wall Street. We got you covered on markets. Got to stay with Bloomberg right through the close and beyond. Right now, we are looking at lows of the day with the S&P 500 index at 5,003, a drop right now of 1.2%. The S&P down 59 points. Again, I underscore here, lows of the session. Important because at one point we had the S&P higher by 4% today, but again, the S&P now down 1.1%. Dow Industrials down 193, drop there of 0.5. NASDAQ Composite Index wiping out gains, down 1.6%. 10-year 4.23%, the 2-year 3.69% on the 2-year. Gold just about flat on the day, up $1 the ounce to $29.84. West Texas Intermediate crude now trading with a 58 handle. WTI has dropped 3%. Bitcoin down 2.5%, 76,999 on Bitcoin. Mira Pandit is global market strategist at J.P. Morgan Investment Management, and she says yes, the uncertainty over tariffs will take a toll.
If you're in wait-and-see mode, those are the 3 most dangerous words for the economy. Let's see how this plays out. We're not so sure. And again, that uncertainty and those scars run deep, even if some of these tariffs do come off. And that's the challenge here, because what comes off could easily come back on.
Mira Pandit of J.P. Morgan Investment Management. So again, recapping, U.S. stocks lower across the board here, down 1.2% on the S&P 500 index. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Really do appreciate it. So, Carol, we're beginning this hour with what is one of the most important trade relationships that the U.S. has, and that, of course, is with none other than China. The country pledged to retaliate against Donald Trump's latest tariff threat and mobilize state organs to send a message of resilience, raising the risk of a prolonged trade war between the world's 2 largest economies.
Yeah, absolutely. And we all know about the headline, a White House official saying that the U.S. is moving forward with 104% China tariffs. So there's that going on. Our own Tom Orlick of Bloomberg, writing for Business Week, and he says that this 100-year high for tariffs means Americans should brace for a toxic combination of weak growth and high prices. You know what that means. Sounds like stagflation to me. So let's get into it with Bloomberg Economics Chief Economist Tom Orlick. He's out there in our Washington, D.C. bureau. Tom, it feels like a structural change in global trade and the role of the United States in it. And increasingly, it feels like not a great economic outcome for the United States. How hard might it get for U.S. consumers, all of us?
So I think it's a challenging period ahead, Carol. I think President Trump has identified a serious structural problem for the United States, a huge trade deficit, more than $1 trillion in 2024 if you focus on the goods piece of it, and even worse, a big share of that goods deficit with China, America's biggest geopolitical rival. So Trump has identified this big problem. The question is, does he have the right solution? Jacking average US tariffs up from around 2% when he started his second presidency, all the way up to 22% if he delivers on these reciprocal tariffs today, and China, as you mentioned, potentially going all the way up to 104% tariff. There's going to be some blowback for American consumers, American businesses, and American markets.
Okay, let's maybe start with the American economy and with GDP, because there are a few, you said there's, a few consequences here. Certainly for consumers, this is a big deal. We're going to get to that. But according to Bloomberg Economics, how does this hit growth?
So it's not a straightforward exercise estimating this, Tim. When economists think about how a shock is going to impact, they tend to look at the historical data. What happened the last time we had a shock like this? The problem here is, well, we haven't seen a shock like this for 100 years. So there's just not much help looking at the recent data in estimating the impact. That said, we're making best efforts. Now, our calculations suggest US average tariff rates are going from 2% when Trump took over all the way to 22%. What we think is that that means a pretty significant blow to US GDP. The model estimate, and I underscore there's a wide band of uncertainty around this, but the model estimate is that over the next 2 to 3 years, the cost to GDP could be getting close to 3%.
One of the things I want to ask you, and we try to be fair and balanced here, is that even if the president has the right idea, the idea of reshoring and bringing manufacturing back, it's not easy to do. And even if you have all these companies promising they're going to make these investments, it's not a sure thing. It's not definitive.
Yeah, I agree entirely, Carol. I think President Trump can point to some early wins. We've had some big companies saying they're going to be making big investments in the United States. But when you probe into the details, well, those questions about the US as a manufacturing center, they keep coming back. I'll give you one example. Apple talked about $500 billion invested in the United States, and they talked about creating 20,000 new jobs. Do the math on that, and it's a cool $25 million of investment per new job. Nice work if you can get it.
Yeah, I like that.
But I think it more seriously also underscores the difficulty of bringing manufacturing back when wages are high, when the infrastructure isn't really here, and when these new tariffs are going to be cutting American factories off from global supply chains.
Yeah, and it's interesting that you say that. There was a conversation a bunch of us were having actually in the makeup room with an external guest who's like, are you ready to pay $3,000-$4,000 for an iPhone? Are you ready to pay, $20 for a pair of socks? Well, some socks already cost $20. Are you ready to pay $50 for, just a regular old T-shirt? I mean, it would be a very different way of transacting and cost for consumers. Hey, you mentioned China, and I want to go there because you're right. Amid all the uproar, it's important to acknowledge that President Trump has a point when he says other countries are ripping off the U.S. China, Europe, and others put up barriers to American products that their own goods don't face in the U.S. market. Those barriers are one reason the U.S. has an enormous goods trade deficit, a record $1.2 trillion in 2024. On that, U.S. Treasury Secretary Scott Bessent on CNBC earlier weighing in on that U.S.-China trade relationship.
I think it was a big mistake, this Chinese escalation, because they're playing with a pair of twos. Traditionally, if you look at the history of the trade negotiations, we are the deficit country. So what do we lose by the Chinese raising tariffs on us? We export 1/5 to them of what they export to us. So that is a losing hand for them.
U.S. Treasury Secretary Scott Bessent on CNBC earlier today. I mean, Tom, is there something to that we've got a $1.2 trillion trade deficit with China, that there is something to it being a much more level playing field here between the U.S. and China?
So I think absolutely President Trump has a point when he makes the case that U.S. companies do not face a level playing field when they operate overseas. Let's think about China. Even ignoring the tariffs, there are some very clear barriers to market entry in significant parts of China's economy. Think about the giant US tech companies. Do they have a toehold in China's economy? Can you Google in China? Can you Facebook in China? Can you Uber in China? Can American banks operate on a level playing field with China's giant state-owned banks? Absolutely not. So the underlying idea that there are some issues to be addressed, I think President Trump has a point there. The question is 104% tariffs the right way of addressing it? Would there be really significant blowback for US consumers, paying more for everything they buy at Walmart, everything they buy at Target, a bunch of the stuff they buy on Amazon, and blowback for US corporates? Would the supply chains of companies like Apple, which manufacture the iPhone in China, how would they deal with 104% tariff as they ship those iPhones to consumers in the United States? Well, I'm not an Apple corporate analyst, but I don't think you need to be an Apple corporate analyst to know that 104% tariffs would cause some serious challenges.
We have 30 seconds left, Tom. Is there an alternative to retaliatory tariffs such as these, or tariffs that the U.S. is threatening on China that would alleviate the trade deficit or attack it a little bit?
So I think there's two groups of countries in the world, Tim. You've got your big dogs, China, the European Union. They're going to go toe-to-toe. They're going to retaliate.
Right.
For smaller economies, can they enter a fight with the United States? Would that be productive? Probably not. That's why the phone from South Korea, from other countries, is starting to ring in the White House.
All right, so good. Glad we could check in with you. Tom Orlick, Bloomberg Economics chief economist. When we come back on Bloomberg Business Week Daily, what one auto parts manufacturer has to say about tariffs and his company's outlook. That story when we come back on the other side.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. Equities are just about at the low of the day. 39 minutes to go ahead of the close. The Dow, the S&P, NASDAQ very much in the red. Right now, looking at a 1.6% drop on the S&P, down 80 points, now at 49.81. In the year-to-date column, yes, here we are in early April. We have got the S&P down by 15.36% year-to-date. Today, equities erased what was earlier the largest rally since 2022. The S&P lower after China's premier said his country has ample policy tools to fully offset any negative external shocks. So again, the S&P giving up a 4% gain, now down by 1.6%. The 10-year 4.23% with the 2-year 3.69%. Gold down 0.1%, 29.79 the ounce, and West Texas Intermediate crude down 3.5%, 58.55 for a barrel of WTI. As for tariffs and the market backdrop, as well as the earlier rebound, Karen Pai is head of portfolio manager at Fiduciary Trust International.
This market sell-off and the conditions here are pretty much self-inflicted, right? So we have seen the markets correct and sell off to the point that's very similar to what happened during COVID. But what happened during COVID was clearly an unknown. There was a health crisis. And, whereas today, some of these policies and the tariffs that are imposed can be quickly reversed if someone chooses to do so.
Karen Pai of Fiduciary Trust. Microsoft has dismissed 2 employees who disrupted an event celebrating the company's 50th anniversary. Both employees worked as software engineers and are affiliated with No Azure for Apartheid, a group that has protested Microsoft sales to the Israeli military over the country's conduct in its war in Gaza. Microsoft shares now lower, part of a broader tech sell-off, down by 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
And just to rehash, we do have the S&P 500 below 5,000 right now at 4,986, down about 77 points. So the S&P down about 1.5%. So just bouncing off.
How high was it earlier in the session? More than 4%?
I mean, we've had such a big swing.
Yeah.
We were up 4% at one point, above 5,200. At its lows, down about 2%. But right now, again, down below 5,000.
Yeah, that Russell 2000 down 2.9% too. So the small caps are getting hit hard. Hey, it is time for another edition of Bloomberg Plugged In. It's your weekly look at EVs, and we are watching the auto sector closely. Given that a 25% tariff on U.S. auto imports took effect last Thursday, well, a levy on parts is slated to begin no later than May 3rd. The measures are expected to dramatically increase costs and upend supply chains. So let's talk to one of those suppliers who's smack dab in the middle of all of this. Magna International is a Canadian-based auto parts and auto tech company. They create components. So think car electronics, drivetrains, vision systems, powertrain systems, and more for some of the biggest car companies in the world, GM, Ford, Stellantis, and more. The company has more than 170,000 employees across 28 countries. And by sales, it's the biggest automotive supplier in North America. They've got a market cap of close to $9 billion, though its stock is down about 25% so far this year. Swami Kotagiri is CEO of Magna International. He joins us this afternoon from Troy, Michigan. Swami, thanks for joining us. I know you have been extremely busy, so we certainly appreciate it. How are you and the auto manufacturers that you work with managing these tariff costs?
Hi, Tim. Good afternoon. Thanks for having me. And, we are really focused on control the controllable, and things seem to be changing on an everyday basis. So open the playbooks that we have had during the rotating UAW strikes or COVID or 2008 financial crisis or the chip crisis, and you put them all together. I think that's what we seem to be having right now.
What a way to put that. The financial crisis saw some car companies declare bankruptcy.
Right. Exactly. You're saying it's as bad as that, and then some.
Yeah, I think the important part, Carol, here is part of it is looking at tariffs of importing vehicles cross-border. Okay, the OEMs are the importer of the record. We as suppliers, have to still look at any intercompany parts going across the border, and you have to look at the tier end supply chain. But all in all, even if we look at what we can do internally, all of this is going to lead I believe, to demand destruction, at least in the short term, which is why I compared it, to what happened during the 2008 and 2009, where the volumes went down drastically, right? And that is the reason for my comparison to that.
As Tim mentioned in the introduction, your top customers, GM, Mercedes, Ford, BMW, VW, Stellantis, Nissan. Are you already seeing, tell me like kind of what the environment was going into the tariffs and then how it's changed in terms of demand from your customers now that the tariffs are here?
Cal, one of the important things in the automotive industry is certainty is stability. And what we have today is the complete uncertainty, right? It's difficult to plan in an industry such as ours, on an everyday basis, right? And that's what we are trying to deal with today. You might have seen some of the announcements that have come starting April 14th, some of them starting, last Monday already. BMW from the Spartanburg facility, or General Motors from Fort Wayne, Stellantis in Toluca, Warren Truck, Windsor, halted productions or changing production schedules and so on and so forth. So that's the effect we are starting to see. And obviously, it's an industry that you can't flip the switch to change things overnight. If there is a policy roadmap towards whatever the outcome might be, I think that's addressable. But today the struggle seems to be addressing what's coming at us on a daily or hourly basis.
What do your shareholders need to know about where customers will see price increases, where you will see a hit to margins, where the end user, right? Us, people who go and buy these cars, will see price increases. Where do the chips fall?
Yeah, it's kind of all of the above, Tim, right? Because, from a supply base as well as the automotive OEMs perspective, everybody look at whatever that can be done. I think that is given. But given the industry and the type of margins that are there, that's out there, everybody knows that. Nobody can handle the, magnitude of the impact that we're talking about here. So I believe it has to, some way, shape, or form, pass on to the consumer. And if you look at where the car prices are today in the market, they're already, stretched quite a bit, right? So that's why I talk about demand destruction and the consumers ultimately facing, if not all of it, a significant part of the impact of the tariffs.
You said it's like the playbooks from the financial crisis, COVID, the UAW strikes, all combined. But I'm wondering if, as a result of this, you are making any big changes to how you do business, where these parts are manufactured. Do you plan, as a result of these tariffs, to do more in the United States?
It's too soon to say that, right? Like I said, we are investing, or not we as an industry, if we are doing investments today, it is typically for starting production in 27 or 28. So we're talking at least 2 years out, right? So when we start talking about what needs to be done, should we react to what's happening today? And where the policy ends up is going to be ultimately what everybody's looking at. So from a near-term perspective, cash conservation and hesitancy or tentativeness to say, where will it end up? So if there is a dollar that I can push out from a perspective of investing today versus a month or 2 months from now, I'll pick the later, right? Because I want to have certainty in where we are,
right.
Ultimately going to invest and get the returns.
I'm sorry, please finish.
No problem. I think going back, everybody is now focused on free cash flow conversion, capital efficiency. So there is a little bit of a wait and see approach. And, in the industry that depends on 2 or 3 year cycles, that's, difficult.
Swami, the thing I wanted to ask you, and I keep going back to this interview that Sonali Basak of Bloomberg did with Boaz Weinstein, and he said, even if we get a change and perhaps the White House, the president comes out and says, forget it, delay of 90 days, or you know what, let's call it off. The problem is that the president's going to be in the White House for the next 4 years, and that what he said is the uncertainty genie is out of the bottle. I can't kind of get away from this. That would you feel if the president came out and said, oh, changed my mind, would you feel confident enough to move forward? Or would you feel like you were constantly a little bit off balance, not sure if something might change from the White House?
I think the industry as a whole is going to be a little bit more conservative and think twice. We have always believed, you have to produce locally, whether it's a local for local. And we have always looked at the entire North American market as one market. So that is being questioned right now. So we have to work very closely with the OEMs, not just I think the whole ecosystem has to be pretty much aligned as you think of investments going forward. Which segment is going to be consumed where do you put the footprint? So in short, Carol, I think there is going to be a little bit more thought before new investment goes into address, especially where parts or vehicles are going cross-border.
Right. So then when we think about the U.S. economy or global economy, there are investments that will not happen. And there will be, as we talked, was it a little bit of a demand destruction? Like there'll be some destruction that economic impact we don't get back, right, because of that conservative mode.
I think it's fair to say there is going to be tentativeness in the investment cycle now until people get a little bit more clarity. That's one thing. And the second thing is short term, I think there is going to be, reduction in volumes.
I mentioned you have 170,000 employees in countries throughout the world. Stock down about 25% so far this year. You're going to take a hit ostensibly as a result of these. Are you going to have to start making decisions about who keeps their job and who doesn't keep their job?
And Tim, yes. That's the reason why I compared it to what happened during the COVID or the UAW rotating strikes, right? You have to constantly react to how the OEMs are planning their production schedules, whether it's lines coming down, complete, factories, assemblies that are stopping, which means we have to react accordingly. So obviously there's going to be that impact, but we have to, as one of our guiding principles is a long-term strategy to look at our business as a long-term owner. So whatever decision we make, we have to look in terms of today, but making sure that it doesn't hurt us in the long term. So that's a little bit more challenging today than it was a few months ago.
One of the things I want to ask, are you afraid, and do you feel like the C-suite's afraid to really speak out against the Trump administration? You're actually being pretty frank here. CEOs in some surveys are calling this the Trump recession. CNBC did a CEO survey. Yet it seems like most don't want their names attached to the criticism of the administration. Is the corporate community afraid to speak out?
Carol, from our side, look, I think Tim mentioned in the introduction, we are in 28 different countries over the last year and a half. 19 of the countries that we are present in had elections, right? So policy is something we deal with all the time. This is obviously a little bit more disruptive than what we have seen elsewhere or seen in my career here. But we have to look at the industry long term, right? Our design cycles are 4 to 5 years, and maybe with the changing industry, it's dropped down to 2 or 3 years. But you got to take a long term approach. So yes, it's disruptive today, but we have dealt with this in the past, and we just have to keep our head down and hope we look at a policy roadmap rather than react to something that's happening today.
One of the things I do want to ask then, and kind of on that in terms of long-term strategy, what does the auto supply chain look like if the Trump tariffs are here to stay? How long does it take to realign a point that will mitigate tariff costs?
I don't know its mitigation. That is definitely going to lead to rationalization of the footprint, right? We have to start looking at balancing capacity. Luckily we have footprint in Mexico, US, and Canada. So again, like I said, it's not going to happen over time, depending on complexity of the part in the system. It could be anywhere from months to years. There are some complex systems where, just to give you an idea, some of our plants are 1 million square feet facilities, right? With about 300-400 million in invested capital. So those kind of plants are not easy to transfer overnight. Those will take years, and it's not just a unilateral decision either, right? This has to be done in conjunction with the product cycle planning of the OEM. Where is the assembly plant, and how are we going to work with them? So there's a lot of complexity involved here. Some of the more complex footprint rationalization might take years to crystallize.
You know, as we're talking, we're seeing stocks continue to fall. We're now down more than 2.2% on the S&P 500. The NASDAQ composite down 2.8% as we speak. Your company shares down 3.1% right now. How do you watch not your company's stock specifically, but the broader sell-off in the context of consumer demand, the wealth effect, and just concerns to growth?
Yeah, I think that's, like I said, that's the demand destruction part, right? What happens to the industry, interest rates, what happens to the overall economy, the buying power of the consumer, especially with a lot of fear that might come based on what's happening around you, which all means people's ability to buy cars and at what price point. If that's impacted, the whole industry is impacted. And that is the big concern that we all have, right?
Well, you know, we talked a little bit about whether you'd move facilities. You said it's too early to say. We are already starting to see automakers reshoring assembly plants or make announcements. Hyundai was one of the ones we saw from the White House just in the last month. If we see more automakers reshore assembly in the U.S., will you need to move facilities back to the U.S. as well?
We have a footprint in the U.S., but to your point, Tim, yes, I think look as a supply base, we look at the material availability of the entire supply chain, where it's coming from. We have to look at the logistics. We have to be as close, as possible to the assembly based on the type of the part and the complexity of the part. So considering all of that stuff, if there is a significant reshoring, yeah, we have to look at, rationalizing the footprint differently.
Hey, Swami, just to kind of wrap up here, you kicked off and both Tim and I were like a wait, what moment when you said that you're thinking about this environment akin to, I think you said the GFC, COVID, and union strikes all together. That's today's environment. So is a recession here in the United States given? Is maybe perhaps a global recession given? A given, I should say.
Yeah, I think, again, hopefully, everybody comes to the table and has the discussion to avoid that. But all indications seem to be, heading in that direction, that the economy is taking a hit. But like I said, it is happening so fast and so quick. Part of it is, who comes to the table at what time, and, how much can you recover and how fast can you recover? But that's definitely on the cards based on the facts today.
Well, we really appreciate your honesty and giving us an assessment of your world that really plays into all of the major auto manufacturers. Swami, thank you so much. Swami Kotagiri, he's Chief Executive Officer of Magna International, joining us right here on Bloomberg Business Week Daily.
Charlie Pell is not too far from me in terms of number of feet.
Did you hear a gasp?
I heard a gasp. And I think it was because he saw what the NASDAQ was doing, down more than 3%. Is that right, Charlie?
Absolutely right. I looked at that and thought we might see some signs of stabilization. We got 20 minutes to go, but we are moving lower right now. S&P 500 index is now declining by 2.59%, and that gasp was in the year-to-date column, looking at the S&P down by 16.1%. Bottom line here today, we saw a 6% swing from high to low on the S&P 500 index, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Shaw. That's right. Terrible tape action today amid that reversal in the main U.S. averages. Dow's currently down 623 points, was up 1,500 points. S&Ps are down 2.3%, and NASDAQ is off by 2.9%. The U.S. 10-year yield is at 4.23. Gold and oil are sinking, and Bitcoin, that's lower by 2.7%. Among the main 11 S&P sectors, all were trading in the red, led by losses in materials and energy. And leaders to the upside in the Dow, only UNH, while Apple fell 5% and led to the downside. In the tech space, Democrats are probing Google and Microsoft over their AI partnerships. And Micron said they're imposing a tariff-related charge in the U.S. starting April 9th. Wrapping things up, Intel fell as much as 7.6% to its lowest level since 2010. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill Maloney. Keep it locked into Bloomberg Radio right through the closing bell. And, of course, check in with Bloomberg Radio tonight to find out how Asian markets are reacting. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. We got about 18 minutes to go until we wrap up the trade on this Tuesday. And as you just heard from Charlie and Bill Maloney, we're pretty much hovering near our worst levels of the session. We've seen in the last hour, really, another leg down for U.S. equities, kind of a straight ski slope down today. We got off with a strong rally, and it looked like it was going to be a bit of a different day, but we've seen just destruction. Demand destruction since then, and we've got the S&P down about 2.4%, Dow down about 1.7%, NASDAQ 100 2.7% to the downside. And what I mean is just you're seeing, obviously, a lot more selling coming into the market.
Yeah, I mean, the reversal that we saw from earlier in the session, I thought this was a significant bounce that we saw, Carol.
Yeah.
No, we saw in the middle of the session, kind of stocks search for direction a little bit, but the direction right now is very clear.
What's wild is I remember earlier in the day looking for some stocks, the outperformers, and almost every name in the S&P 500 was higher today.
Yeah.
I'm looking at it now. You've got 474 names to the downside in the S&P 500, 29 gainers. That's it.
Probably those healthcare names that are on your radar.
Yeah, still
later.
holding on to some support there.
Hey, curious what Mark Steffen has to say about this. He's Global Alternative Investment Strategist with the Wells Fargo Investment Institute. He joins us from Minneapolis this afternoon. Look, I know your focus is on alternatives. We're going to get to alternatives in just a minute, but that doesn't live in a vacuum. You got to look at the equity trade on a day like today. After a 4-day period like we've seen, Mark, what does it do for your alternatives?
It just highlights the uncertainty that's out there right now. And obviously, investors were caught off guard by the size of the tariffs, which kind of precipitated the declining market that we're seeing here over the last week or so. And, that uncertainty continues today. We saw a little rebound where we thought things were oversold here midday, and a rebound was in order. But as you can tell, the markets are headed back down. And so uncertainty just continues. But despite just the volatility that we see in markets today, we're telling clients and investors to just remain disciplined, remain patient, try to rebalance to their target allocations during these periods of times. Ensure that, they're adequately diversified across different asset classes and just to kind of remain focused on the long term.
All right. What's diversification? Cash, bonds, or buying a case of wine and just go sitting in a corner? I mean,
hey, wine is an alternative investment, Carol.
I know. So, Mark, seriously, in an environment, and I don't want to be like crazy because we've seen sell-offs, we've seen disorderly sell-offs. But this is a day where we saw a rally and it ran out of steam and it's picked up momentum as we're going into the close. And it does look like everybody's focused on the White House. Having said that, there's a lot of talk about stagflation or recession. We just talked with the CEO of Magna International that plays into the auto sector. All the big automakers buy from them. And it was pretty negative. All of this could change on a dime if we get something different from the White House. Having said that, there's nervousness in the market. So what does diversification mean in this environment? If you haven't already done the diversification moves, what do you do?
Yeah, it's a good question. And our base case is that, although our outlook is definitely tempered by some of the recent tariffs that we saw, we still think that we're going to end the year in positive territory. Economic growth, our forecast is about 1% on the year. So we do think later in the year we'll see some growth there. But yeah, it can be difficult to maintain discipline, avoid some of the behavioral traps during volatile markets like this. But, we are advising clients, on the equity side, focus on quality, strong balance sheets, reliable earnings, and fixed income.
But Mark, what if tariffs stay? If tariffs stay, then what? Is it really, we have to reprice everything?
That's not our base case. Our base case is that we think there will be a lot of countries coming to the negotiating table over time. We've already seen some foreign leaders come to the table to potentially get in line to negotiate. So we think it's going to be a declining impact over time. The largest impact, obviously is going to be up front here over the next several weeks to months. But we do think kind of mid-summer timeframe that the impacts of tariffs will dissipate. There may be some holdouts. There may be some countries that continue to kind of hold steady to the fight and maintain the current situation. We don't think that's the base case. If that does happen, tariffs are around longer than everybody expects at this point. Obviously, several different assumptions need to be revised at that point.
I do want to note I'm watching the S&P 500, and right now we're at a level, Carol, that we haven't seen since February of 2024. So we're at our worst level in more than a year on the S&P 500, and we are inching very, very close to a bear market, the official definition, or official in quotes, but we're down 19.95% on the S&P 500 from those February 19th highs. So really close to that 20% threshold.
Yeah. And it'll be interesting to see if we actually touch it, hit it, and then do we bounce off, right? Investors watch different levels. I am curious, Mark, have you been buying for clients? Like, what have you been doing, since the tariff announcements and the sell-off in equities? We know you like alt investments, but I'm just curious, what have you been doing, or have you just been kind of waiting this out, riding it out?
Sure. Yeah, I mean, like I mentioned before, it's maintaining that discipline, rebalancing to their targets. But, if you do have cash, we are advising clients to opportunistically look at putting some of that to work. And maybe it's dollar cost averaging into the market. We like sectors like information technology, communication services, financials, energy. We do favor large caps over small caps. Actually, commodities is another trade that we do think will be a good hedge against long-term inflation as well. So on the alt side, there it's a different story. We do favor strategies like equity hedge or long-short equity that offer both upside participation as well as some downside hedging or protection in some of these markets or the volatility that we've seen as of late. Same thing on the long-short credit side. Enables you to participate in that improving economic environment or credit environment, as at the same time protect against some of the downdrafts that we've seen here as of late. And then countercyclically, one of the other strategies we like is distressed credit. We think the opportunity set within this space is going to continue to expand. We've seen an increase.
Will it become more distressed? Oh, wait. Did we just hit it?
I think there is.
Yeah, we just hit it.
Hang on. We just hit down 10%, right, on the S&P?
20% on the S&P 500
from
since
the
February
S&P.
19th. Yeah,
So
intraday. So
touching on a bear market there.
We'll see how things close out the day. Mark, I do. Carol, you had a question for Mark.
No, you were talking about distressed credit, and in an environment, if we get into a recession, does that distressed credit become even more distressed? And do private credit investors have to think about going to their companies and renegotiating the terms so that you don't have a wave of bankruptcies and so that those investments don't just go to zero?
Yeah, no, absolutely. I mean, I think we've seen some of that already. To be honest, while the traditional default rates remain in check, we've seen the use of what's called distressed exchanges, where companies are sort of preempting the bankruptcy process and restructuring their debt, whether it be reducing the overall debt load or restructuring the terms of the debt. And that's been ticking up, over the course of the last several months or quarters, actually. So, we've also seen increased use of what's called like PIK loans or payment in kind loans, where companies are saving cash by instead of paying their interest in cash, they're actually adding to the principal value of their loan. So these are signs that stress is increasing in a certain segment, but we do think at this point it's limited. There is a lower quality segment that has been more impacted by just the higher rates that we've seen over the last couple of years. So that segment, unfortunately, will continue to probably see rising stress levels. And like I said, the opportunity set within the distressed credit space, we think is going to continue to grow through the course of this year and likely into the early stages of a recovery period.
Does hitting a bear market, though, on the S&P change things for you?
No, I don't think it does. Like I said, we want to continue to maintain that long-term focus. Like I said, recession, although we may get a technical recession, is still in the cards potentially, but our base case is a recession is still off the table at this point. And so we still think we're going to have growth through the remainder of the back half of this year, and like I said, and have an improving economy into 2026. So,
listen,
it
that's
doesn't
music,
change
I think,
other
to a lot of
things, but-
people's ears. But what changes your view on that?
Say that again.
That would be music to a lot of people's ears if you see an improving economy in the second half of this year. But what would change your view on that?
Yeah, I mean, obviously, like we talked about it, the length of the tariffs and potential impact. A lot of people are sorting out the potential impacts right now. Are these negotiating tools used by the administration to get better terms, reduce trade deficits, et cetera? But how long do they last? How many countries come to the negotiating table? Obviously, that's going to have a huge impact on where we go from here.
I think the big question that a lot of people have is, I don't know,
what?
Asset allocation. You think about alternatives in a portfolio.
Mm-hmm.
Is a bear market, Mark, the time to increase exposure to alternatives? Don't people get very scared during times like this?
Yeah, absolutely. I mean, people do get scared, and I think like I've said, that discipline, avoiding some of the behavioral traps of selling out when fear is high, and you want to be greedy during these times and have the focus to kind of rebalance into some of the areas that have.
So should people be? Look, I know you're focused on alternatives, but should people? You said be greedy at this point. Should people be buying the dip?
Yeah, I mean, like I said, in those select areas, focusing on high quality, strong balance sheets, reliable earnings. We do think if you do have cash to put to work, or just rebalancing your portfolios in order, we do think that's a good practice to be in, to kind of allocate across the cycle into some of these areas that have been depressed here over recent periods. So absolutely, we do think long term we're still going to be okay. It's just obviously difficult to see when you're in the throes of the volatility cycle that we've been in here as of late. But we do think we'll get through it. We think, like I said, long term we're still going to be okay. It's just a matter of kind of weathering the storm, so to speak.
Hey, just a reminder to everybody who's listening, we've got just under 6 minutes to go until we wrap up this trading day on this Tuesday. We've been talking with Mark Steffen, Global Alternative Investment Strategist with the Wells Fargo Investment Institute. Having said that, we're looking at the S&P 500 officially touching upon a bear market, so down 20% from its highs back in mid-February. Right now, it's bounced off of that, but still down about 1.8%, a decline of 89 points, 87 points at 49.76. Dow Jones Industrial Average, 2 bouncing off its lows of the session, but still down 1.1%. The NASDAQ 100 down about 2%, 367 points to the downside, now down 2%. So we're bouncing around a lot. Russell 2000 is down 3.3% in today's session, and we've certainly seen that index. It is down about almost 30% from its high back in late November of 2024. And again, we've got the VIX. It's also moved up. We're looking at a VIX of about 55. We've been as high as 57 today. So again, and you're seeing almost nearly all the names in the S&P 500 trending lower, Tim.
We're also keeping an eye on what's happening at the White House, because the president is expected to participate in an event that they're calling the Unleashing American Energy Executive Order signing event. It was scheduled for 3 o'clock. If the president does start speaking on tariffs on the economy, we'll certainly play those comments for you.
Absolutely. Investors watching very closely. Hey, Mark, just to get final thoughts from you in this environment, what will make you a little bit more worried? Is it, again, just if these tariffs stand put and you don't see some kind of reversal?